Hey, this is David for BigBits, and this stream we are going to look a little bit at TA, talk about a few different things, talk about some updates on the Bollinger Bands indicator I've been working on, hit a few roadblocks on it, and something I was trying to accomplish. Turns out what I'm trying to do is entirely possible. There's just some limitations with TradingView and PineScript that's preventing it from happening. So I'll discuss that just a little bit. Not really a major issue or anything. I'm still going to be able to get everything I wanted into the indicator, into the strategy, but it is kind of annoying because it would mean even more features and it would mean that the strategy is going to be even better. So got a lot going on when it comes to the TradingView stuff. We've had a few videos this week, nothing too major. We are looking at adding that Bollinger Bands indicator soon, but I've also been working on some other items. Mainly been working on the Trade Alert Responder application, and I've added WordPress as a plugin so that it can post automatically to your WordPress blog if you wanted it to. I thought that one was pretty cool. I'll show that one off in just a little bit. I'm trying to think if there's anything else really major going on other than I want to look at a few different coins. There's a lot of different altcoins going on right now that I want to get a look at, particularly Stellar, which I have a decent amount of, and then also Matic, MCO, CRO, some of the DeFi stuff. I want to look at KNC, Kyber Network, because they just were listed on Binance US, and a couple of other DeFi things, because I think they're starting to get a little exhausted. I posted about that last night. Let's go into our settings, WordPress alerts. So the test is working, so that's really good. What's going to happen is it's going to pull an image from the internet, which I believe is, I don't even remember, I think it's my hat, the hat that we have on the website. It's going to pull that image of that and it's going to post onto my WordPress, and in fact I'll pull that up and I'll show you what's going on right now. Give me just a moment. Okay, so this is the blog, and if you haven't noticed yet, I got the ticker added up to the top of the website, which was a little bit of a challenge. There was some HTML stuff I had to change, but it's up and running now. Anyway, let's hit test WordPress. It should take anywhere from 5 to 10 seconds. It's doing quite a bit of stuff in the background, and I do have a bullet point out there on the project to add a notification on the process and the result of the test. So we'll give it just a minute and see how it goes though. Watch it not work. I think sometimes it can take a while to actually show up, but I'm logging into the dashboard to see if it actually posted it. So what happened last time I did this, it posted, but it didn't show up right away. It might be a caching issue as well. And sometimes the WordPress API just doesn't respond, so that's why we need to add the notification in here as well as to what's actually going on. I'll try and do it one more time. There we go. So it posted the blog post this time, so we're going to have it to where you're going to be able to, whenever you receive a trade alert that the application picks up through any of its scanning plugins, you'll be able to enable the WordPress plugin and it'll post to a WordPress blog that you have access to through the API. So this one was actually really easy to set up. What's going to be hard is to try and configure it so that it will know what to post. So right now with the plugin settings, we don't really have a lot going on, but what we're going to have to do is we're going to have to come up with like a text editor for what text you want to see within the post. Obviously it's getting an image from a URL somewhere, but beyond that we're going to have to use like placeholders to grab data from the alert and some other things. So there's a lot that has to be figured out to get this to really work well, but it's a good start and it's proven some functionality here. Alright, let me delete that post. Okay. So I'm not going to do any code on that right now. I'm mainly worried about looking at charts right now. And that was still up as the break point. And that is totally expected when there is a catch. So anyway, looking back at the charts, I have pointed this out earlier in the week with the S&P that I thought we were going to be coming up into this range. A lot of that has to do with the stochastic weights, and I'm pretty sure you can see that. But I'll zoom in here just a little bit. You see the stochastic weights have turned upward again, and the thing is they're nowhere close to being overbought on the daily. And the strange thing is it hasn't even been overbought on the daily ever since the major drop back there, and it formed that big divergence. So it's going to be kind of interesting to see where it's going to actually go up to. I guess this kind of depends more on the coronavirus stuff and what they shut down, but the indicators are looking pretty good. Everything's turning up. I know you can't see the other ones too well because of my head, but I'll show you now. The smooth RSI trending up, and also the MACD pointing up as well. So there's a lot of good things about the stock market right now, although it is entering the third quarter and earnings have been coming out for the second quarter, so there could be a bit of a shake-up. It's hard to imagine that the market's going to fully recover from what happened in March, but it appears to be doing just that. Alright, so as far as Bitcoin is concerned, it's not as impressive looking right now on its chart. The S&P, I mean, it looks really nice. It has all of its moving averages heading up. All but one is in alignment. The 100's below the 200. But Bitcoin is trading below its mid-Bollinger Band and below its 50-day. And the bands continue to get tighter, which is pretty impressive because they were already pretty tight. And of course, this usually comes before a huge volatile move in price. And the way I've been thinking is I kind of expect this to be a fake out to the lower side, and a lot of that has to do with the way the alts are looking, because I think they are kind of reaching the end of their run and they look like Bitcoin is going to reclaim versus them, but it might not be at first. So they can probably lose more than Bitcoin does versus the dollar, while Bitcoin loses versus the dollar. And then money flows from alts to Bitcoin, pushing the price of Bitcoin up. So it's kind of confusing, but I have been thinking for a while now we are going to hit the 100-day. I've left my circle on there. I told you we were going to go sideways throughout this, and we pretty much did. I thought we would have hit the 100 or the 200 by now, but the indicators are still all kind of pointing down. The MACD has even started trending down, so I think it's going to be a fake out because the weekly still looks really good. Zoom in here on the weekly. Yeah, the weekly looks really good, and the Bollinger Band on the weekly is going to cross over the 50-day here in a couple of weeks, or 3 weeks it looks like. So you have some really positive stuff on these moving averages, but yet the daily doesn't look too good. So that's why I think it's going to be a fake out. It's partly due to alts and partly because of the weekly chart. I think we get this move down and then a quick bounce kind of back up, or maybe it's kind of a slow bounce, but I do think it's going to be a move down and then back up. But of course, that's just kind of my gut feeling right now. None of the indicators are really pointing strongly either way. The daily seems to be pointing a bit more so down than anything else, but weekly is pretty much neutral. I mean, everything's going sideways, and just scrolling back through the chart history here, I mean, everything's pretty much neutral. It's kind of hard to read right now. You've got your stochastic weights right at 50, you got your RSI in the 50s, and you got your MACD right around 0. So you're not going to be able to glean a whole lot from the weekly chart, and also the daily chart's pretty similar. Everything's kind of right around the mid-range. The RSI has been hovering around 50 for let's see, a month and a half now. It's a long time to be within that narrow range on the RSI. And then of course the MACD is kind of leveled off around 0 on the daily as well. Let's take a closer look. I want to look at this on the 4-hour chart. And the 4-hour chart is looking pretty interesting. You have, let's see, that did not test that one. So I'm kind of expecting the bounce down from the mid Bollinger Band. Excuse me. The only really thing that looks great here is the MACD. Looks like it's about to flip bullish, but with so many moving averages above it, I don't see the price moving up through that anytime soon. Let's take a look at the 1 hour. And the 1 hour actually looks decent because it broke above its 50, held support, broke back down, and now it's got a huge wick. And if it can hold up here and even paint another green candle, it might kind of flip some of its indicators to go green and push up some. And if you go back out to the 4 hour, there was some room still above it, up to around 91.65. And where would that put us here? The top of the hourly Bollinger Bands. See if there's anything. You can see I have not bothered to even think about trading because everything has been so sideways. You'll see even the big moves aren't that big. This one looks gigantic, but really it's only at most 200, which is a lot, but for what you would expect, it's not. And then the price just kind of came back into kind of the mean price throughout that entire time. Let's take a look at the anchored VWAP and see what that does, because I imagine that'll probably be pretty close. And I can't remember where it is. It's over here somewhere. There. Let's do that from right here. So yeah, really not a whole lot you can get from the anchored VWAP there, but it just kind of shows price kind of came back up towards the mean price. Alright, so now let's go ahead and look at other things, and I'm going to take this to the full chart. Move this over so you all can see it. I don't think my head's going to be in the way there. Let's go ahead and start looking at other things. So I said I wanted to look at, what was it, Stellar. That's it. It's not having the greatest day so far. It's still probably up on the daily, but looks like it's got some moving averages. It's trading now below the 200 on the 5-minute for the first time in a couple days. But I'm not too worried about the 5-minute chart. Let's look at the hourly. This is interesting. So it has wicked below its mid-Bollinger Band. Similarly, down here. If it can hold here, it might continue its run up. Let's take a look at its 4 hours, see how that's looking. This looks like it's probably wanting to actually continue to come back down, but this was the first time it was overbought since there. It could be trying to do a divergence. Excuse me, let me get my head out of the way. So you might see a divergence on the 4-hour chart as it kind of peaked right here, and the RSI also peaked on Stellar as well here. So that's something to keep an eye out for. Stellar might be coming back down just a little bit. Whoops, didn't mean to delete the indicator. Alright, now let's take a look at it on the daily. The daily actually looks really, really good. It went overbought, it crossed over, but it's about to cross back up. If it finishes anywhere green today, it's going to look like it's wanting to continue to run up. So there's no telling how high it can actually go. It's still not really within the range that I would consider to look for divergence on the RSI. These are too close together, and the smooth RSI is just now hitting the overbought area. You'll see it did that back here, and it continued to go sideways for a bit, which means the price probably went up still. Yeah, so it continued to go up there for a little ways even after it hit that. So I can imagine we still get some more room to run on Stellar. And taking a look at the weekly chart, I think I need to look at a different weekly chart for a different exchange. Let's try Binance. So this one's pretty interesting because these stochastic weights have turned upwards. The smooth RSI is trending upwards. The MACD is trending upwards. But it is at this 100-week moving average potential resistance. And I think if it breaks through this, then I'm not really sure how high Stellar's price can go. I don't believe this is the oldest chart. This is Binance, all right? So let's try to find something a little older. I guess Bitstamp's probably got, nope. Oh, this is the weekly chart. No wonder. So maybe KuCoin. And I can't remember when Stellar came out, so that might be right around when it first came out. Yeah, so it looks like that is most of the trading history there on Binance. That one's going to be one to watch if it can close above its 100-week versus the USD, but I feel pretty confident in saying that it will, just because it has so much room to move up to its next resistance versus Bitcoin. I mean, really, there isn't any sort of resistance until you get to 1434, which would be around this level. And then beyond that, you have the 100-week moving average on Stellar. So the indicators look good on the weekly. They all look really good on the weekly. I don't know. There's a reason people say it's starting to look like alt season, and that's probably why. So let's take a look at something else like Link. Let's take a look at it versus the dollar. Not a lot to say here other than it is overbought, and that is just technically what it is. It looks honestly like it continues to do well. It can continue to go up more. Kind of thinking that psychologically $10 is going to be a big barrier. So we'll see how that actually plays out. Considering the RSI is overbought and the stochastics are getting overbought pretty considerably again. Personally, I think $10 is going to be the top on it, but we'll see. Let's take a look at it versus Bitcoin. Very similar here. It has not closed really substantially below its weekly Bollinger Band in a long time. Not since when? September of last year has it closed significantly below the mid-Bollinger Band. That's really impressive. I've already done this, so let's look at this on the daily. Again, it's fairly similar to the other ones, although on the daily chart, Link appears to have been overbought for a little while longer than some of the other ones. So once it starts to move down, I would assume we can see some other ones start to move down as well. And I'm not going to bother zooming in on these charts. Well, actually, I want to zoom into the 4 hour. I won't go any further than that. I just want to see if there is also divergences here, and yeah, there are huge divergences, but I'm not really sure it's going to matter too much. Take a look at it. If it closes below the mid-Bollinger Band on the 4 hour, I'd like to think that it's going to come down because it's printed a lot of divergences and overbought signals on the 4 hour chart, which is kind of hard to do. We would have initially, using the stochastic weights advanced, tried to have sold here, which is not bad. You're pretty close to the top, but when you also would have looked at divergences here and here as well. So there's a pretty good chance, in my opinion, that we're coming back down, at least for a little while. Alright, so let's take a look at Kyber Network. This one's pretty interesting. It's went completely flat after its huge move up. 4 hour, I'm not really getting anything useful. Daily. Looks like it could potentially bounce there. I mean, it is holding against the daily mid-Bollinger Band, so there's a chance. So look at it on the weekly. There's not much information here. Let's see if there's another one. Wow. Alright. So on the weekly, it looks really good. It cleared that weekly resistance, which you can see it tested here, broke through it. It could continue to run, but it is also kind of forming a weekly divergence. And I need to hide the indicators again. So, yeah, a weekly divergence on Kyber Network. I was very tempted to buy Kyber Network. Hey, KR Hedge, I'm sorry, I haven't been paying too much attention to the chat, but I'll take a look at gold in just a minute, in a little bit if you like. The divergence on the weekly is pretty big. Like I said, Binance US, which is the exchange I've been using, has listed Kyber Network as of this morning, and I was very tempted to purchase because today was one of my DCA days where I've been buying various alts, and I ended up, instead of getting into KNC, which I was very excited to do, I actually decided to get more Stellar and also get in some more Matic. And I want to take a look at Kyber Network versus Bitcoin, and then we'll take a look at Matic. So again, Kyber Network showing a divergence on the weekly versus Bitcoin. It's also showing a divergence on the weekly versus the dollar. It's going to be kind of hard to overcome that, but there is a lot of momentum, so I'd be afraid to go short. If anything, I would be very tempted to take some profits if I were in a long position. I wouldn't want to try and short these right now, just the way they've been moving. Alright, let's see what else we got. Matic, that's right. Let's do it versus Bitcoin first. Okay, so on the weekly, this chart, I love it. It's got this steady kind of grind up. All of the indicators are kind of slowly rising up right now. I like the fundamentals on Matic. I like a lot of the stuff about Matic. It's still relatively cheap. In my opinion, I've really started to come around on Matic. I kind of like it a lot now. It looks really good versus Bitcoin. It is supposed to be a layer 2 solution on Ethereum, so I like to compare it to Ethereum as well. There we go. So this is Matic versus Ethereum. And again, it looks very good. To me, it looks poised for a large move. And it's in the past shown that it can make very, very large moves very quickly. So I like that. And that the fact that it's been slowly working up against both Bitcoin and Ethereum as well. So let's just take a look at it versus the dollar. And again, very similar. Price spiked up very quickly in the beginning and has kind of went sideways since then. It's still 2 pennies. For one, there are 3 billion circulating right now. The market cap on it's pretty low. It's I think it was around 90 when I checked earlier today. And its max supply, I think it was 10 billion. I think there's 3 billion something out right now, and there's 10 billion total. So there is a lot of coins not even circulating right now, but gotta think that might be priced in as well. But there's nothing I really don't like about it. Ever since it made the huge jump up there, it's really kind of been going up. I mean, really the only thing you take away here is that the coronavirus crash might have just messed up the chart entirely. Let's see, I'm not really one to use... Okay, yeah, this is exactly why I don't use the pitchforks. Hey, I think I got it figured out this time. So that's what I would have kind of imagined if you were to draw a pitchfork on this one. And it looks really good. It looks like it's going to continue to move up. It's kind of in the middle of its range right now. But with all the other huge moves on alts and the fact that it is not overbought and some of the other coins are, that's one of the reasons why I've gotten into it right now. So I'm still really enjoying averaging in on Matic now. And you can see the daily chart. It looks really good on the daily. It does have some turnover on the indicators, but it is holding support on a moving average, so there's a chance it could turn and flip here. We'll have to watch this one, but it does have all 3 key moving averages above one another, which is important, and it's about to have the Bollinger Bands up above that as well. So it kind of looks like the weekly on the Bitcoin chart. If you zoom in, it looks almost exactly like the weekly on the Bitcoin chart, at least for the moving average forecast, to where it will have all 3 in alignment, or all 4 in alignment, moving upwards. So I really like that about Matic. Let's see. I just want to see, I think I need to take a look at this on the 4 hour as well. I don't think I've done that. And 200 on the 4 hour held support. could move sideways for a while, but I think it is going to move up. And I was just talking about my DCA and averaging in and stuff, so I want to take a look at basic attention token. Alright, so this is the one I've been averaging into for the longest. Yeah, I've been averaging into basic attention token for a while now. I'm very happy with the price right now, but this is the 4-hour chart. It looks like it's going to come back down to at least the mid band here. But for now, on the daily, it's getting kind of harder to read because it's acting like Bitcoin was recently, where it's just riding on the Bollinger Band, but the Bollinger Band is kind of moving sideways. The other good thing I like about basic attention token is it has not had the gigantic move up like some of the other altcoins, which is one of the reasons why I'm still averaging into it, as opposed to kind of trying to gamble on those DeFi plays that are moving really hard. I've just kind of been averaging into, I think, solid projects that I feel are somewhat undervalued. So with basic attention token, it's just continuing to kind of rise up, and you'll notice that it has the alignment on the moving averages that I'm looking for a sustained run, and that is the mid band over the 50, over the 100, over the 200, and all of them moving up as well. So excited about that one, to say the least. All right, basic attention token versus Bitcoin. The chart looks very similar to it versus the dollar. It's at kind of a peak here over the last year or so. So if it can break out above, let's see, what is that, 3,200, 3,300 Satoshis, it could really blow. It's been down here for a while. People have been accumulating for a long time. It has not had a gigantic move or a sustained gigantic move in a very, very long time. And it's a solid project. I have a hard time not thinking this is going to be a good one. Alright, and let's take a look at it on the weekly versus Bitcoin. Very similar. It does look like it's going to slow down a bit. At the very least, it has tested resistance on the 100-week moving average. It does have the cross under on the stochastic weights, but the RSI and the MACD are pointing up, so I feel like it's probably going to continue and press up against the 100-week and eventually break it. If not, let's see, when is this? If not in August, but come back down and retest, and maybe sometime by October or November, I really do feel like it's going to break. Hi Vineet, I assume that's how I'm supposed to pronounce your name. If you got any questions, just let me know. I'm just kind of looking over some altcoins right now. We've went over several already. And that is versus that. Alright, so we've went over basic attention token, we've went over Matic, we've went over Link, we've went over Kyber Network, we've went over Bitcoin, we've went over the S&P. Let's see, I want to see what the other symbol is. I'll just type in gold. Somebody wanted to see gold earlier. So this is a weekly chart for gold. That looks really good. I mean, it's about to set all-time highs. That would mean price discovery, right? Let's see what happened in March. Yeah, it crashed with the market, but then it quickly recovered and took off. Since then, yeah, it's very close to setting all-time highs on this chart. I don't really trade gold, so I don't know what to really look for here. This one has a lot more history. It's missing some information. So the stochastic weights isn't working down there. Alright, Yeah, I don't really see anything that I don't like about the chart, honestly. It just kind of got that nice grind upwards. I imagine once it hits the peak here, it'll check up, come back down some, and then eventually break, because I can't imagine gold not going on a run, which is interesting. You would think that when gold goes on a run, Bitcoin would too, because it's supposed to be, digital gold. It'll be interesting to see what happens to Bitcoin when gold makes its all-time high. Can you backtest Renko charts at a traditional setting? I'm not sure what you mean by traditional setting. I don't really use Renko charts, but we can throw a strategy on a Renko chart and see how it does. Take a look at gold on the daily, though. I mean, daily looks amazing as well. All right, so let's switch over to Renko. So yeah, the indicators work on the Renko. That's kind of cool. You gotta, when the price crosses over on the 200, it looks pretty important. All right, so let's throw a strategy on here. I'm working on one right now. That is not the strategy. Just a moment. This is it. See how this works, if it works at all. Okay, yeah, my strategy code might not be working. This is the one I'm working on, so there's a good chance it's not working. Let me set the look back period back. Actually, let's just zoom in. That's the easier solution. Yeah, I don't think my strategy's working here. I've got some code I still need to figure out. That's why it's not published yet. Let's just find a strategy out here. Let's just use RSI. So it's looking like it's performing the way you would expect, the strategy on the Renko chart. So you're saying they're based on ATR, so they change. So I wonder how big the blocks are back here. 1470 to 1474. That's 4. So they're about the same, so maybe they don't change. So I don't know. Like I said, I don't use Renko. I don't really look at them that often. They do look pretty nice though for trading. That's the hourly chart. Let's take a look at this on the daily. Oh my goodness. Yeah, so that's the entire history on the daily. I guess that's just because the movements weren't large enough. Hey, Greek Boy Dinos. If you have any questions, just let me know. We're kind of looking at Renko charts right now for Vinny. And I'm trying to figure out how to use them because I've never really bothered with Renko. But, I mean, if you're going to look at technical analysis on the Renko charts, yeah, I think it looks good. Like I said, I think you're about ready for it to check up here in a little bit. And once it does, that might be the last chance really to get in before it sets all-time highs again. Yeah, what's your question, man? Alright. Let's look at point and figure. Wow. Alright. So you said change the setting to traditional instead of ATR and set a brick size. Where are Renko settings at? If you can tell me where the Renko settings are, I'll change them, but I have no idea. Alright, so Greek Boy, Dinos. So I've been working on a TradingView strategy to pyramid entries and exits based on certain criteria. The problem I've been running into is that I can't spread it out. Oh, I see. So by spread it out, do you mean like laddering? Like laddering your orders? Traditional box size, set it to 20. Oh my goodness, it's ugly. That's definitely interesting. Like all the buy signals are clumped together within 5 to 6 candles back to back instead of making entries. So what I'd like to be able to do is something like spread them out so that if it makes an entry here, it won't make another for like X bars. I hope that makes sense. It won't let me paste. Okay, yeah, I know exactly what you're talking about. I do this with some clients that I work with, and we kind of call them signal gaps, to where you save when you have a signal, and then you check to make sure your last signal was at least X many bars back, and you continue from there. I think I just did a video about how to kind of do this. Give me just a moment. I'm trying to pull up that video. So this isn't exactly what you're talking about, but it is very similar. Let me mute that. And let me pull the chat back up. Okay, so let me get a little bit further here into the code, and I'll just pause it and I'll tell you. So here, what I was doing is I was requiring that we had 3 of the last 4 candles be green. And then once 3 of the last 4 were green, then it would throw the real signal. you could do something like that. You can also require a streak to where, you know, you have to have 5 signals in a row and then it'll fire, and if you don't have exactly 5 in a row, it'll fire. But signal gaps are a little bit different than this. These are more like frequency based. The signal gaps, what I like to do is similar to how we're recording how a bar is green or a bar is red. What I like to do is I would like to record whether or not this bar had our signal that we were going to use. And if it had the signal that we were going to use, we will save it like we did here. Like the bar was green, we saved it as 1, or you can save it as true, I believe. I don't know. I typically work with floats because I like to troubleshoot by plotting the values of 1 or 0. But if you do it like this and you save your signal as like a 1 or a 0, you can use, I think, bars since, and you can actually check bars since is signal. And if it hasn't been at least 3 bars or whatever you set it to, then you just don't fire the signal again. You just overwrite it with a 0 or something. I hope that makes sense. Does it make sense? But it's a very similar kind of deal. Yeah, just about anything you want is possible here. I have ran into some issues lately, and that's one of the things I wanted to talk about here on the stream, is that the strategy that I was writing that I was going to sell, I was finally going to sell a strategy, and I don't know, I used too many variables, and there's a limitation apparently to how much you can do within the PineScript code, so I ended up not being able to do one of the features that I wanted, and that was a signal count. That's fine. You'll get it. Just go to the PineScript reference manual and you check out bars since, and check for when your last signal was, and if it hasn't been long enough since the last bar, you just change your signal back to false or 0 or whatever, and then the next time you check it, it'll have been 1 more candle, and that should help. But anyway, I am going to change this back, and we are actually going to go to a different chart. So let me change this back to Bitcoin and take it off of that. Okay. Save it. And then let's pull up this chart. Okay, I have it on a 1-minute chart because it puts more in my backtesting frame. But let's see, where is that? This is it. What I have attempted to do is I had attempted to define certain settings for the strategy that you could turn as being on or off for entering with a long or closing a long. So for example, a crossover on the upper band, you could use this to open a long, close a long, or both if you so choose. And you could do this for all of these different conditions, and you can set it to whether it's going to require all of the ones that you've selected to use or any of the ones you've selected to use. But the feature that I was working on that I can't get to work is the minimum count, and this would be if you selected like 4 or 5 different settings or 4 or 5 different conditions. You could set your minimum count to 4, and you could require that at least 4 out of the 5, 6, or 7 had a signal, as opposed to it just being any or all. and I can't get that to work just because of the limitations with Pine script. So I'm going to be taking this part out, and that's going to be a lot of code actually that you're not seeing. But then we can get it to work, and I'll be able to share this strategy. I'll probably be including this strategy in with some giveaways, and then I'm going to be creating a strategy for the fancy triple moving averages as well. So let's find that one. So the one that we're showing you right now, the strategy is for the fancy Bollinger Bands. I'm going to take the fancy moving averages and I'm going to make one out of it, and then I'm going to see if I can't combine the two or combine some other ones and start selling some of those strategies as well. But there's a lot going on in those particular strategies, so hopefully they'll be useful for some people. Could I do it with a box? Maybe. What I don't like is that there are already a ton of inputs. Like, this strategy is crazy. Could you imagine getting this strategy from somebody and seeing all of these inputs, and then to have even more beyond that? I'm gonna have to make a video just to explain how to use the strategy on top of whatever I post on TradingView, and then once people kind of figure it out, and then go from there. I figured if I mark with a checkbox or something that it's required, it's going to get even trickier, because then the way I have it set up, you have long open and long close, and both of them together. If you mark it as required, how does it know if it's required for one and not the other? And if so, do I have to have 6 different options? And then if I want to make the script, you know, be a short script, to short instead of go long, I might have to add that logic in there, or if I have it to where you can flip. So there are some limitations here that I'm running into, and I'm probably going to have to publish this as different scripts depending on how you want to trade. And it's kind of unfortunate because I had some really cool stuff planned, and I don't think I'm going to be able to do it because of that. And I think it's just kind of the way that people think with TradingView and strategies in general, is that they think that when you code these, that they have to be like a fixed strategy. Like, it always has to be, the RSI always has to be below this value, and it has to be below this moving average. But really, why wouldn't you want a strategy that you can configure and you can test all kinds of conditions, instead of just telling someone you wanted 1 or 2 specific conditions? You could play around and try and figure out what works best for you, or what works best for whatever security you're working with. So that was the whole idea behind this one. There's a lot of stuff going on with it, and it just sucks that we're kind of limited on what we can actually do. Yeah, so I'm going to pull this up on the other screen, and I'll tell you how many lines of code are in here. So as of right now, that particular strategy, the script is 750 lines of code. So it's quite a bit. And the issue that I'm running into is that it is running out of local scope variables. So do I have any idea how to have self-adjusting parameters in the code? Like, settings will change based on market conditions. There are some locked strategies in Pine, but no open source. So I can tell you how to do it. It's not that complicated to think about. If you want your parameters, like the oversold value for RSI, for example, to change its oversold value, if I don't know, whatever condition, if you want the oversold value to change based on a different market condition, then what you'll have to do is you'll have to create a function that will return what the market condition is. So in your code, you're going to have to check whatever conditions that you have on the market to determine what the condition is. You're referring to it as the market conditions. So you'll have to have a function that checks the market conditions. Then it will have to spit out the parameters that you want to use. And if you want to spit out more than one parameter, the function can actually return tuples, which is kind of like an array. But that I have a video specifically for working with tuples and functions. So you could actually take like 4 or 5 different settings, let's just say 4 or 5 different RSI values, and you can return all of those from one function based on the market conditions. And instead of using your inputs, you can override those based on the market condition using the function. So it might be a little bit confusing, but it's entirely possible. The hard part is defining mathematically what is a market condition. So you can look at a chart and you can say it's bullish or bearish, but it's another thing to code whether or not it looks bullish or bearish. What would I use to determine what the market conditions are? If I wanted to compare them to say they are bullish or bearish, I'd probably just look at a moving average. Like, I like to use whole moving averages because they're really smooth and they turn around pretty quickly. So I would use like a medium length whole moving average to tell me which direction the market's probably heading in. But I don't know. I've not tried it. It's one of those things you'll probably have to test a lot. The MMAR. I'm very familiar with MMAR. I've actually built some scripts off of it for clients before. I like to use the whole moving average, so let me take that strategy off. I'm kind of done talking about it. Let's see. We'll just do the single fancy moving average. So let's set this to be a whole moving average, the HMA. It'll probably take a second to update. You can see how nice and smooth the lines are that it produces. And when it was moving up here, it was pretty clear that the trend was up, and when it starts moving down, trend is moving down. That's kind of how you use that indicator. This is a 1 minute chart, so it's kind of funky. Let's zoom out. And let me get rid of the inclusion trail. Hold on. Okay. So this is an example of the whole moving average. And I might even want to go beyond 50. Let's just say 100. Yeah, so I might want to try something like that to determine what it is. Or actually, what I would do is I would actually keep it at something smaller, like the 50. And I would use a higher resolution. So we're on an hourly chart. So let's take a look at the daily 50 hole. So you can see the trend on the daily was down, and you could have traded the 1 hour based on the daily trend. So that's probably what I would do. And it's kind of interesting. It's completely flat the last few days. The 200 hole on the Ethereum 4 hour. Let's take a look at it. Too many candles. What? Oh, no wonder. I tried to reference 50,000 candles. So yeah, that's really good. And the way people trade HMA is they often trade based on the trend change. So once the direction of the slope turns down, then they would short, or once it turns up, then they would long. And on a 4 hour or a daily, it works pretty well, especially considering how bullish they've been historically. So yeah. So the Alma moving average, I've looked into it. I don't think I know the calculation for it. It's one I probably need to learn because I want to add it into these fancy moving average scripts. We can always use more moving averages in here, and I think I did try to add it at one point. I'll look that one up. I think there was a reason I decided not to do it. I bet they've got it open source here on TradingView. Just search for Alma. Here we go. Oh, there's a built-in for Alma? Why aren't we using this? Let's go back up here. Oops. Huh, how about that? What? Is that new? Series length offset and sigma. So I just need to get some default values for this and we can toss it in there and look at it. Yeah, the triple exponential is really fast. I don't really like using the double or triple. I just like using whole. And somebody showed me recently the exponential whole moving average, which is an EMA of the whole moving average, which apparently is really quick. I forget exactly how it's done. It's the whole moving average within an exponential moving average. It's really kind of interesting, but it keeps the smoothness of the whole moving average, but it goes a little bit quicker. It doesn't overshoot as much. It's pretty interesting. I'll take a look at that one. Let's get their settings and use this. So their length is an input. Wait, no, yes. 10, 6.85. So let's do this. I forget which order it's in. Close. 10, 6.85. So let's actually add this option in there. See how that works. I have worked with Supertrend. I wasn't a huge fan of it. I couldn't find any good settings for myself, so I just didn't use it. I got a phone call. I'm going to be right back, and then we'll look at this Alma and look at the exponential whole moving average too. Apologies about the wait. Hopefully, yeah, everything's still running right, I think. So let's take a look at the ALMA. Did I even save the changes? Yes, I did. Or did I? Yep, okay. Oh my goodness, that's fast. Yeah, that's crazy fast. How in the world do you even use a moving average this fast? I'll have to look that up. My goodness. Oh yeah. Period shouldn't do anything. I have it hard coded. Duh. So we use the 10 hard coded. No wonder it's so fast. Let's change this. That's my fault. So that's what I get for taking a phone call and having to go. Let's switch back over to the ALMA, and now it should show a 50 ALMA. Okay, that's a lot better. So what I'm going to do now is I'm actually going to add an indicator on it. So this second one here is a moving average of our first moving average. And we can tell because I'm going to make it a different color. Just make it yellow. So that is a 50 SMA. Let's just do like a 5 SMA. Do an EMA. That's not too bad. I think the ALMA is really quick. I don't know what to do with that. But adding it into the indicator is a really good idea, and I'm going to do that right now. So that's a nice little win here. If we don't have any other ones, let me know, because I'm more than willing to put in more moving averages in these indicators. So let's see, let's go out to, I like to do all of these on Bitcoin. And we gotta get rid of that one. Let's publish an update. So now that's what we can do. We can add ALMA to the triple moving averages as well now. It's coming along nicely. So I think I might actually have to update everything with that. And I remember you were talking about MMAR before. I'll take a look at that again in just a moment. I've done quite a bit with that one. So, source. Oh no, it's up to date. I just copy this stuff then. I mean, I could make a MMAR that's kind of like this. I mean, you could do any moving average. Like with this indicator, I have it to where you can change between the moving averages. It probably wouldn't be that hard to do that to MMAR to have any moving average you want. Alright, I need to publish this. Oh, first I need to make sure it's actually working. Yep. Let's reset it. It's not an idea. So I found it kind of interesting. While I was on a break, the viewers went up to 11, and that's actually quite a bit for my streams because I don't really try and draw a lot of people in, honestly, because I don't care too much. But I just found it odd that they went up while I was away. Says a lot about me. All right, fancy triple moving averages added. Alma. Go. So we've got that one, and then one more. We need to update the fancy Bollinger Bands as well. And this will give me the opportunity to change this to true, because I don't like using the other one. That's good. I can actually copy all of this over. Let's test out the Alma on the Bollinger Bands. Oh, actually, I need to update it down here too. I didn't have the option in there, but let's just check it out and look what it looks like in the middle of a Bollinger Band. Let's give it a 20's fine. Yeah, that's fine. There you go. There's the Alma Bollinger Bands. It's actually pretty good. Like, it's pretty impressive. Went right along with it. I think I'd seen somebody with a strategy doing this before. This might be why. I think I need to have the bands be Alma as well. It was the only strategy I've ever really seen use Alma. That's why I wasn't too familiar with it. Alright, so let's go to Alma, and oh, the bands aren't any different. So yeah, I just needed to add that in there as an option. We can change our deviation though if we wanted. That's pretty cool. Takes a lot to get underneath those bands though, or above them. Hardly anything closes above these bands. Could probably lead to some good intraday trades if you're looking at the daily bands and you're like well above or below. But yeah, that doesn't happen very often. Alright, so let's look at the MMAR. Wait, no, I need to publish that. Sorry. Alright, now we can look at MMAR. What? Oh yeah, it's the whatever Madrid moving average. There we go. Yeah, they actually give you access to the source code, so you can make a copy of it. We can change it to use something different if we want. Why not? Watch, this is super easy too. You can hold down Alt and Control. You just slide the cursor down and you can change them all as long as they're in a line. So let's change it to use a whole moving average. And it's needing to be versioned. Oh no. This is why I don't like updating some scripts, is because they are older versions. I think I had to do this on the other one that I worked with before as well. And we can use that awesome keyboard shortcut, Alt Control, slide our cursor down, and you can actually paste on all of the lines. That's another cool trick. Alright, what else is wrong? Alright, this is other namespace issues. We need to add colored dot in front of them. Alright, it'll tell us where some more are now. Unless I got them all. I got them all. Cool. Alright. Alright, so it is now a version 4 script, which is pretty cool. And we can convert this to use the whole moving average when we uncheck that. So there you go, you get a whole moving average MMAR. Yeah, that's it is a bit more predictive, I think, just because the whole moving average is quicker. We can actually make this a little bit more impressive. So let's copy some of this other code that we have. Type source period. No, we don't need period. Type source. We'll copy those three. I don't want to fool with the candle type. Get rid of that. Let's copy these functions. Don't need candle type. Excellent. We don't need to worry about that. This is an 05. Did I copy period? No, okay, good. So now I need to copy the security call, and then we'll be good. I don't want to copy that one. There we go. So I want to get this right on the first one, and then we can just kind of copy and paste the rest of them, and then just update the period. Resolution should be current one. And the period is 5 for the first one. So cool, now we can copy this, replace all this other junk. No, I messed that one up. Keyboard shortcut. Nope. Alright. Keyboard shortcut. There we go. Now, we just go through here and we update these. 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 60, 65, 70, 75, 80, 85, 90, 100. And that should do it. Hey, doesn't usually work like that the first time. Alright, so now we can use any moving average we want. I just need to change the input types. You can change the source and you can change the resolution. No, I didn't do that part. So let's just update the code because that's too confusing. All I added was... Well, yeah, well, there's no reason we can't do resolution. I just forgot to do it down here. Okay, try this again. Alright, so that's not wanting to play nice. We'll just do one at a time for now. Right. There we go. So just get rid of this verbiage. Give it a new title. Save it. What did it mess up? Really? So we're gonna copy this. What did I mess up? Save operation failed. So we're just gonna save as. And that's just not cool. Okay, there we go. See if it'll let me do this now. Yes, replace it. Now, add it to the chart. Alright, let's test the resolution first. Weekly MMAR on a daily chart. There you go. Weekly MMAR on a daily chart with a simple moving average. So let's change it back to the current resolution. Let's use an ALMA. There you go. You got your ALMA MMAR. Let's use a triple exponential. That might take a while to calculate. But yeah. I gotta check and make sure that this dude, whoever wrote this, is cool with me publishing this like this, but it's pretty cool. Let's go back to whole moving average. It looks really nice too with the hole. But yeah, I'll make sure I can actually publish that one without anyone getting in trouble. Well, without me getting in trouble, and then I'll actually publish this one. If you haven't already, follow me on TradingView, because when I do publish it, you should get a little notification like down here. It should tell you when I've published a new one, and that way you'll be able to find it if you haven't followed me there already. Otherwise, I'll probably tweet about it and mention it on Discord as well, because I've worked with MMAR with other people as well, so they might be interested in this as well. Now I gotta figure out what else to do. That was easy. Yeah, I might not need to hear back from them. I just got to make sure that I can, well, make sure that it's open source and that I credit them appropriately. Usually just take whatever they had. It's not a big deal. If this is a common indicator, it's not a big deal. Can I help you with your thing? Yeah, I can show you something real quick. After I do this, I think I'm going to take another break, though. So let me just see, pull up Pine Editor. Let's do something new. Blank. Let's get rid of the fancy Madrid. So I'm going to do the same thing that I did before. And I'll zoom in too. So what I'm doing right now is I'm checking to see whether or not the candle is green. And if it's green, it's going to return 1. If it's not, it's going to return 0. I'm just going to give you an example. I'm not actually going to do the RSI stuff, but this one will tell you if the candle's green. And if you want to see when you had a signal, you'll have to create one for your signal. So what you're looking at, whatever logic you're using, this is how you're going to check to see when you have your logic. So what I want to do is I want to trade if the current candle is green and the last 3 are red. So is green equal to 1, and is green 1 equal to 0, and we'll do that 2 more times for the last 3 candles. Okay, so, and then we also have to make sure we save that as a float. So this is going to check to see if the current candle is green and the last 3 are red, and that's the signal that we're looking for in this particular example. Now, in order to check to see that it's been enough bars since the last one, you'll do if the bars since, need to do that, and then I always have to check the reference manual just to make sure I'm doing this right. If the bars since the condition. Okay, so this is going to tell us how many bars it's been since is signal is equal to 1. And if those bars, if it's been at least, let's say, 5 bars, and you can replace this with a variable if you want. If it's been at least 5 bars, then you don't do anything. So what we're actually going to check for is we're going to check to see if it's less than 5 bars. And if it is, we're just going to override the signal. Actually, a better way to do this to reduce things is to only do this when your signal is equal to 1, because you don't need to bother running that code if you don't even have a signal now. So you're checking to see if you have a signal. If you do have a signal, has it been enough bars since the last one? If it hasn't been enough bars since the last one, you're going to reset your signal, and then you can enter trade if signal. So like if is signal is still 1 after all of that, you could do like strategy.entry or do your alert condition, whatever you want to do. So hopefully that makes sense on how to do that. Alright, I want to add that fancy MMAR back up on the screen, and then I'm going to take another quick break. Let's see, scripts. Okay, yeah, so I'll be right back. I got to figure out what we're going to do after this, because really I've went through just about everything I wanted to talk about. Might just kind of wrap things up and then play some of the old tutorials, but I'll be back in just a moment. Alright, I'm back. And yeah, these streams are recorded. They go into actually a playlist that I have. Let me pull that up. So all of the live streams I've ever done that I have kept are in here. I've done a lot of live streams that I haven't kept just because either showed something I shouldn't have, confidential, or, you know, they were just bad. But all of the new ones get added in here. This one probably won't show up until later. Oh man, there's deleted videos still in there. Okay. Remove. Move. I'm actually going to rename it right now. I can actually hit some keywords and actually get this to show up on some search results. All right. You're welcome, man. I'm trying to think if there's anything else I really need to cover. I've pretty much went over everything I wanted to. And we went over some of the stuff you all suggested. I didn't really have a list of stuff to go over. Let's just take a look at some of their ideas. This is something I've been toying with here lately, is looking at TradingView ideas and seeing what I think about them. And also looking at some of the scripts as well. This is my profile. I don't know. Why do I want to be there? All right, so scripts. I just had some chips. Had some food stuck in my teeth. Sorry about that. Alright. A brand new indicator from the developer of Most. Moving stop loss. Indicator. Okay. Like a moving stop loss? Isn't this like a trailing stop loss? Damn, he's got a lot going on. I don't know what that is. OTT. Optimized Trend Tracker is an indicator that provides traders to find an existing trend, or in other words, to which side of the current trend we are on. I guess it's pretty good if you're looking for crossovers. At first I was looking for price compared to it, but crossovers are pretty good there. Yeah, the price crossovers don't look that good there. Let's see, can we add this to a chart? Let's add it to our favorites and we can take a look at it. Refresh. Alright, thanks Greek Boy Dinos. I'll see you next time, whenever that is. Alright, so let's take this off of our chart and let's look at that one. What's the name of that one? Optimized Trend Tracker. He had his settings at 5 and 5. I wonder why. That isn't the default. Close in 5 and 5? Yeah. Okay. That must be the one that he was using. Yep. So it did crossover. Back here twice. I don't know. It seems pretty good. Particularly for this sideways stuff. Like, look at that. That's good. But, like, recently it hasn't been good. But I don't know of many indicators that have done really well recently. And then also through a bunch of the chop back here, like the China news and subsequent drop. I don't know, that one's kind of interesting, but let's see what it looks like on an hourly chart or something. Oh my goodness. This looks like a daily support line. I don't know. It doesn't look amazing, I should say that. But it is interesting. I don't see how these people get so many likes on their indicators. They must be much more popular on YouTube or something else. Alright, let's see what else there is up here. Support and resistance multi-time frame. Super trend. What? 12,900 something likes. Okay, he must be big in India or something. Is there really any difference between this and something else? Okay, he's got a YouTube channel. Check him out in a minute. It's odd. I hate when I do that. Search for super trend. It was March 13th. The super trend's been around a lot longer than that. Wish I could sort this by oldest. This will work. Those are newest. Let's go to the last page. So yeah, he's added some stuff onto it. Man, that's impressive. I want to check out this dude's YouTube channel. All right, thanks, Prinjal. See you next time. Thanks for stopping by, man. That's what kind of stuff he does. I wish I could say I understand some of the stuff going on here, but I do not know anything from that language. I can see some English stuff in there, and he's talking about a lot of different indicators. There's auto Fibonacci. Wow. Interesting. Alright, let's go back to popular scripts here. That guy's apparently pumping out a lot. Support and resistance multi-time frame. Support and resistance, super trend, intraday. Ooh, this guy. Alistair, he does a lot of really good ones. I'm gonna add this to my favorites and check it out. Hey, it's actually already on there. I like it, it's pretty good. A lot of chop though. That's hourly. Let's check out 4 hour. Somehow even worse. Daily. I have a feeling some of these indicators are meant to work more on smaller time frames, because this one looks pretty good after a particular trend, after a longer trend. But I definitely recommend checking out his profile on TradingView. Alanster, he has a lot of really good ones. Yeah, he's pretty popular in the community as well. No ideas posted, but tons of scripts. Let's check out his volume adjusted moving average bands. This one's fairly new. Oh, I've looked at this one before. I didn't care for it, mainly because the bands are just so out of place. It's really odd. Growing or waning pattern alerts. Let's see. So the delta is the body range, and large is the sum of that over a recent period times percent B. So it's the sum of that over the last 20 candles times percent B divided by 20. So 125. Let's say each candle's 1, so 20. Let's just say each candle's half. So that would make that 1,250 divided by 20. Okay. Okay, yeah, it's measuring the length and basically making sure that the candles are growing and waning. Makes sense, pretty cool logic. Checking the trend too to make sure that it's moving up or down. Alright, well I think that's going to do it for the live stream today. I need to take another break. I'm going to turn on the tutorial videos again. So those are going to be playing on the stream for the rest of the stream. What's going to happen is I'm going to remove myself, removing my camera, and then we're going to switch over to another screen. And at that point I'll start playing the tutorials. So thank you all for stopping by. If you want to listen to tutorials, you can hang around, but this is kind of like self-promotion so that anyone checking out the live stream can see, you know, they missed the stream, they can see what the channel's all about, and they can check in later. So thanks for stopping by. I'm going to get that up and running now. Hey, this is David for BigBits, and in this video we're going to take a look at comparing the time of particular bars on charts so that we can compare different securities. Now in this particular example I created a specific indicator just for this. You might have already seen me publish this if you follow me on TradingView. Otherwise I'll give you kind of a quick breakdown on how this actually works. We're going to be looking at one security and comparing it to another, as just the title sounds, and then we are going to get the percentage change within that candle, so from open to close on both of the securities, and then we're going to compare the change in percentage points. And so for example, if Bitcoin gained 10% on the day, and we're using Bitcoin as our base market and Ethereum as our other market to compare to, if Bitcoin gained 10% and Ethereum gained 5%, we would have a green bar of 5% for Bitcoin because it outperformed Ethereum by 5%. Now, the exact opposite is true. If Ethereum had gained 10% and Bitcoin had only gained 5%, the difference would be a -5 or a red bar of 5, -5. So in order to do this and compare any security, we had to look at the time of the bars that we're working with, because of course many markets close and cryptocurrency markets don't really close. So compare needed a way to be able to compare them and make sure it was fair. There were some discrepancies I had noticed to where the bar times weren't really starting the same. So I required that the bars start at the same time when you're using a particular time frame. That way you're always comparing the correct time frame, and you might miss out on some data when the markets don't quite align perfectly. But for the most part, as long as there is a match on the bar time when they start, it should work pretty well. So let's go ahead and dive into this. I'm going to show you the settings. We have a base market. You can choose from some built-in options, and the other market is exactly the same way. You can check this to use a custom base market, but you're going to have to type in the TradingView symbol that you see up here in order to do that. And that is so that the security function that we're using in PineScript knows which symbol to actually call. Otherwise, if you don't check that and write one in, it's just going to use one of these built-in strings. Now, other than that, I think that pretty much covers what you're seeing here. I've already talked about how it works, and we need to focus on time, so let's do that. I've got the chart pulled up here. I believe my head isn't in the way. So let's go ahead and take a look at what's going on. If you haven't seen the video that I've done where I talk about functions and strings, it's a good idea to go back through the series and look at that, because otherwise this code might not make sense. Essentially, we had to create a function for our base and our other to return a string, because we have the option to use a custom one and to type in that value. So if this is checked, it's going to return the custom string that they use for their input, and if they don't use the custom string, it'll just use the default first option from that drop-down list. So the reason we do that there instead of actually within the single line of code here is because you can't do the evaluation within the security function. So we call that first. We use our function within getSecurity. It's going to return that string here. Plus, it's also best practice, I should say, to create a function, because we're going to be using that in other places. So it's a good idea to use that as a function so that you can reuse that code later instead of having to type all the evaluation out over and over. Okay, back to the point. We are going to be calling security. We need to get its close. We need to get its open for the current time frame, the current resolution. So you can do this also with intraday time frames such as 5 minutes, 15 minutes, 1 minute, whatever you have the option for on TradingView. Now, once we have that data, we can calculate the percentage change, and that's a pretty easy calculation, and I'm not going to go over how to actually do that. You can see that in the code for the indicator if you need to. Now, what we are also going to do, you'll notice, is we are also going to capture the bar closing time. Or, well, I use this as the reference for creating the variable name. It's not actually the closing time of the bar. If you do a control click on that time built-in variable there, it's the current bar time in Unix format. Now, I've also covered Unix time in great detail in another video. So if you want to go back and learn about what Unix time is and how to use that, then go back and check that video. For now, we're just going to be talking about how we're using that to compare. So essentially, it's looking at the bars and it's getting their time for the bar, That way, when we compare it to another one, we make sure they actually compare in the same time, and there's not some sort of mismatch and the comparisons don't actually work. Okay, so we've got all of our data, we've gotten our percentage changes, we've gotten our absolute values if we needed those, and we've made them negative if it was necessary. So if our base change was less than the other, since it returns an absolute value based on the way that this needs to work to get the correct value, we then had to multiply it by -1. So just ignore that math. Just know that it works. If you're curious about it, you can always dig into it for yourself. But now when it comes time to actually plot the percentage difference down here, we did have to do something. And I'm actually going to show you the result of this. Let's go ahead and look at SPX. Okay, there you can see there are now some gaps in the data. And that's because it's not plotting that data. And this is what I've been talking about. This is the reason why we've gotten the time variable, is so that when we compare one to the other, we will know the percentage difference based on the actual time frame that we're looking at, and not something that it doesn't have data for or it doesn't align perfectly with. So this makes sure that we're working with the correct data when we compare it. So because those markets do close, there are gaps, and you will have those issues when you're working with those. But for the most part, if you want to see the data, it's going to be there. Now, what we do to compare these is we make sure that we actually have a base change and another change. This is those percentage changes. Then we also make sure that we do have a closing time for those candles, or those bars, should I say. If there isn't one, then we obviously don't have anything to compare it to, so we're not going to plot anything. But we also need to check that the closing, or that the time for those bars from the base and the other also match. So if they don't match, and that's what this means, if the base time does not equal to the other time, we are going to set our percentage difference to an NA value, which basically means null, and it's not going to plot anything on the chart. Once we do that, all we had to do was plot this on the chart, and if it's above 0, it's nice and green, and if it's below 0, it's red. It's a pretty simple plot. It's very easy. Other than that, that's about all there is to doing this and working with time. Now I wanted to show you actually how the time works. So we're going to be plotting the time of the candles here. Let's go ahead and save this. It'll reset to our default values. And you'll notice these numbers are very high. That's because it's Unix time. It's one integer for every second since like 1970. So these values are very high at this time. We're looking at daily charts, and you can see how these kind of compare here from one to the other. The blue, let's see, where is the data window? I always forget to pull this up. There we go. I always forget about this, but this is actually pretty handy. The data window, you can see the values of all the plots you have. So when we're comparing these, and you can't really see anything on the chart, let me do this. All you can really see are these blue lines, because our percentage changes are scaled down so small that you really can't even see them. So you can see when we hover over the different bars here, the plot values for the different times match. And that's because we required them to. So let's go ahead and change this to where we're comparing it to the SPX again. And it's kind of hard to tell. Oh, so for example, and I can't really move the cursor right here, but in the data window on the right, where we were just looking before, you can see the plot value from the first blue plot to the second blue plot don't match. So in this particular candle, there's not going to be a bar. So let's actually take a look. It's this green candle here on the daily chart. Let's go ahead, go back in the code. Let's close those plots off, comment them out, save our data, switch back to the SPX, and make sure that there's actually no data showing on that green candle and that the time comparison works. There you go. Their times for the bars didn't match, so it didn't print anything because it wasn't really fair to compare at that point. Okay, so that pretty much does it for this video. There's a pretty long video. wasn't really a whole lot to cover, but if you're interested in actually using this indicator, it's publicly available on TradingView. All you have to do is search for it. I went to the wrong thing there, my bad. So all you have to do is search for it. It's the any security versus any security change comparison, and like I said, it compares their change percentages within whatever time frame you're looking at. So it's actually pretty cool. It kind of gives you an idea of how things do versus one another, and you might be able to spot trends here over longer periods of time perhaps, but it's really just kind of cool to see that on particular days, like the stock market crash the last few days. If you wanted to, you could compare how Bitcoin compared to that if they have the data available. So even though the price dropped on Bitcoin this day, it didn't drop nearly as much as the stock market, so it actually outperformed by 2.8%. That's pretty cool. So like I said, you can always look at that in the public library, or you can check out my TradingView profile. You can always follow me on there. I don't have a follow button because I'm looking at my own profile, but you can always do that. You can go to the script section. You can see all the scripts that I've created. You can check out all of those, and also, if you are considering a paid plan, please check out the referral link in the description for the video. I'm really not one to shill these sort of things, but if you're going to consider a paid plan, please consider using the referral link because it does help me, and it'll also give you a $30 credit too. So I would really appreciate that. The plans are pretty expensive. But other than that, I think that covers it for the video. We've talked about everything. Yeah. So also, if you like the video, please like, and also you might as well subscribe because I do these videos and videos like this pretty often. You're gonna get a lot of great information, and if you want to, always go back and check the previous videos for something you might have missed. But other than that, thank you and have a nice day. Hey, this is David for BigBits, and in the last video we talked about our RSI strategy that I'm showing you here, and in this video we are going to discuss using the lowest and the lowest bars function. There's also the opposite version, which is the highest and the highest bars function, which basically what these do allow you to just with one line of code tell PineScript to look back a certain amount of candles for the lowest value within that period. So this doesn't have to do with just price, and in our example we're actually going to use the RSI. We're going to look back at the RSI. We want to find the lowest RSI, and we're going to want to require our lowest RSI to be below a certain value. We're going to attempt to find a bullish divergence by making sure that our price is currently lower in some aspect than the price of the lowest RSI, and our price is still on a downtrend. So essentially something similar to what you see here. You see the RSI has kind of bottomed here, and we want to buy below at a certain point, because usually that's how you would find a bullish divergence against the RSI. So we're actually going to go ahead and do this. We're going to have a few new parameters, or inputs I should say, as they're called on PineScript here. Let me copy these over. I did a lot of live coding in the last video and it went pretty long, so we're actually going to just copy some stuff over from a more completed script this time. We're just going to call this our buy below target, and paste this in here. It's two parameters. We're going to be looking to buy below the lowest low in the RSI divergent look back target percentage. And it sounds really kind of silly, but it'll make more sense in just a little bit. And then there's also the source. We're going to be looking back, and we're going to want to copy this value from the lowest RSI in our look back. So if we looked back, what, 30 candles here, the lowest RSI is here. We'll want to grab the closing price or the low, something like that, that from there, and that's what the source is here. Now going on, we are also going to have to specify what that buy below target is with a formula, and we're going to do that down here next to our profit and loss. And the reason we're doing it down here is because this is going to be pretty much the exact same calculation as what we're doing here. And let me go ahead and paste this in here. It's going to look pretty overwhelming, because there's a lot of variables going on here and we're doing a lot of different things. So our buy below target, what we're going to set it to be is we are going to use our buy below target source, which is the close, and we're going to look back using the lowest bars. So I told you the lowest function looked back to give you the lowest value. When you do a look back, say we're going to look back 50 or 100 candles, whatever it is, we are going to return the value that is the number of bars offset from the current candle. So if we look back, say this is 25 candles back, the value it returns is going to be negative 25. So when we look at the close and we're going to be looking back at the RSI through this period, it's going to return a negative number. So this is essentially the same thing as saying, let's look at the close at 25, but both of these are now variable and can change based on our inputs. So for example, if we change our source to a low, it would be equivalent of doing something like this. And if we were looking back 100 periods, maybe we had a lower RSI even back here, so the value it returns would be like 88. But it actually returns a negative number, so we multiply it by -1 to fix that. So that's what you're seeing here. We're getting the closing price of whatever the lowest RSI is in that look back period. So it's a little bit confusing if you haven't been able to follow the code, but hopefully where I've done this, it makes a little bit more sense. Then what we're doing is we're going to subtract a percentage difference from that to create our buy below target. Now let's see what I had that set at by default here. Buy below target %0. Now this is something that can kind of give you a little bit of buffer. So if the value it plots is here and you wanted to buy when the price dropped below that, when the RSI was going down a certain amount in the trend, you might want to give it a buffer. So if you had it set to where it would plot here initially, maybe you want to give it a little bit more room to drop and you would want to buy further down. So this is just an example of how we do that, and I'm actually going to plot that buy below target, and we're actually going to keep that on there going forward so that you can kind of see how that is, and we can actually change how it's going to look on the chart. And let's see, what have I done? The RSI divergent looks back. Okay, so I forgot to add a couple more variables. So we need the divergence look back and also the buy below target. I need to initialize that variable as well, it looks like. Let's see, this would be with the RSI. So this is the amount of candles we're going to look back for the lowest RSI. And let's see, the buy below target, and I do apologize, I'm copying this code from the other screen here. The reason that's not working is because it's in that same line, so there isn't actually anything wrong with the buy below target. Okay, there we go. So now you can see this line that it's requiring the price to be below before it will buy, but we haven't actually done that as part of our conditions here in our is a buy. Now, if you were following the last video, you would know how we've set this up so we can track what conditions have to be met. So we're just going to add a new one in here, and it's going to be really simple. We just have to have our buy below target source of the current candle, which by default is going to be the current price through the close. You can see that's set by default to close. And we're going to require our current price be below this blue line, which is our current buy below target. So let's see if that makes any difference on this particular strategy here. Yeah, so it took away a lot of, well, all of the trades from here. So we're going to be working on changing this to where hopefully we can find those things a little bit more going forward. So I've shown you how the lowest bars work going backwards, and there's also one where we did the lowest. So We also want to require that the RSI be below a certain number. So we're going to look at a requirement for the RSI, and we need the RSI within our look back. Its lowest value has to be below a certain number. So, I mean, this is probably a little bit confusing again, but say we're looking back on our candles, and let me apologize. I've probably had my head covering up a little bit of things. Let me hide that now. We're going to be looking back in the candles for the lowest RSI value. And what we're going to do is say the lowest RSI value is this one. We actually want to require it to be below a certain number. So if we're looking back and our lowest RSI is, still way up here, like at 50, that might not be optimal, especially when you're looking for a bullish divergence. So we want to require that it's below 25 or 30, something like that, the lowest value in our look back period. And then we can add that in there. And once it meets that and the price is still below, and all of these other things, then everything will come to work. So let's go and take a look here at how we're doing this. And this is actually quite simple. Let me copy this condition over. This is another condition on our is it buy statement. We're just copying some more stuff over. We are going to use the lowest function. I've already told you how this works. And this is comparing the smooth SRI for some reason. That's like I need to change that in my more completed script here. But we are requiring that the RSI be below, using its lowest value in that look back period, below what we have set with our input. So if we set this to 30, it's got to be below that in its lowest value going back. So that's pretty straightforward as well. Let me see if there were any else that I also needed to do. We also needed to set another one. This is for the smooth SRI. It's pretty much the same thing. But once we have this one, I think this is pretty much the same script that I have. There might be a few things different. But this is the same thing. We basically just want to ensure that with our bullish divergence that our current smooth RSI, the orange line here is above a certain value, or below a certain value, So we're requiring that it has a downtrend of 3 in the default. But if that downtrend is coming up around 50, then that might not be a good time to buy. So we want to require that its downtrend of 3 occurs below a certain value. So we're going to by default require that to be 35. Let's go down here and let me copy this. I'm on the other screen right now looking for this. Here we go. And there was also a RSI currently below as well, so we'll do that. It's the same concept as a smooth RSI, and you can tell we're getting a lot of conditions now. You can see I've added in the smooth RSI and the RSI below a certain value, and we have to add in that other RSI currently below parameter, or input I should say, and then I think we're going to be done. Oh no, it's already on there, currently below. Did I already have that on there? Yes. My apologies. I had just not added the one with the smooth RSI, excuse me. I'm a little off today. So let's save this. And let's see, we had one issue. Where is this? Oh, I had already added that in there. We just didn't have the... Oh, well, we already did have the condition. So, yeah, I'm way off right now. I thought that we hadn't done that, but we had. I think the thing that really threw me off was on the lowest here. It used the SRSI when it wasn't supposed to. So that completely threw me off on everything we've been doing since then. Okay, you can see we still don't have any trades. So let's try to change these numbers around to where we can get something. We're on a 5-minute chart here. Let's see. I'm trying to copy some of these from the other one here. Well, let me just copy some of these over from my default script. I'll actually just type them in here. It'll be a little bit easier, I believe. All right, our RSI curve is 14. Currently below was 30. All right, our divergence look back period was 25. Our RSI lowest divergent look back period. Let's see, which one is this one? Oh yeah, that's that one. It was set to 25 as well in the completed script. The SRSI curve is, let's see, where is this one? 10. The SRSI currently below I have is also 30. And then the minimum SRSI downtrend is 3 as well. Let's see, there's another setting here. The SRSI currently below 35. So what did I say 30 for here? My apologies here. That was the RSI currently below. So I was looking at the wrong one. Let's save this one and see if that makes any difference to the strategy tester here. Okay, so you can see it's actually making some trades again. So let's take a look. They were all profitable except for one. We had 13 trades now. I think before we had 11 or 12. So we're actually doing pretty good. Let's see. Let's see if we can go back and find one of these trades so we can get an idea of how they're occurring. I think these two are really good examples of what we're actually trying to accomplish. And let me pull this up to where it's much larger here for you. So you can see within our look back period, we were looking for the lowest RSI value, and we were setting our minimum buy target to a certain value here, and we wanted the price to close below this line with a minimum SRSI downtrend of 3 below a certain value with the current RSI below a certain value. And it kind of caught a bull divergence here. You can see it bounced pretty well from there. And the same thing here. I'm actually pretty impressed that it actually caught this one, because that's an extended period of dips one after the other, and it caught it pretty much right at the bottom. So I'm really happy with how this is turning out right now. This one I think caught it a little too soon, obviously, and it hit its stop loss. We have one here, and you can kind of play around with the stop loss and the take profit to maximize. I think the settings I had, I forgot to update these. I used 3 and 1.75. Let me see if that was actually any better or not. Go back to the performance summary. No, it wasn't any better. So yeah, you can play around with these. The settings that I have on this video, it might have been slightly better. Let me change it back again. Yeah, so it was better. So you can play around, adjust these numbers up and down with the toggles here to try and find something that'll result in more returns on the performance summary. But that pretty much does it for this video. I hope you've appreciated. We've went over the lowest function and the lowest bars. So just keep in mind that the same thing is true for the highest and the highest bars function. And if you're ever confused, you can always just kind of hover over it in your Pine script editor and hold down the control key and click that. It'll take you to the updated Pine script language reference manual within a modal pop-up on the screen, so you don't have to actually go to another page, and it'll kind of tell you what it's actually doing. But yeah, I hope you appreciate this. I'm going to work on getting this and publishing it so everyone will have access to the code, and you don't have to try and copy and follow along with the video itself, and you can actually play around with all the values yourself. So keep an eye on my Twitter, also my Discord. I'll probably try and update on both of those places when these things are completed and published for everyone to see. I really hope you all appreciate me doing that. If you do, please like the video, please comment, subscribe, give me comments please on what else you would like to see. I've had a few people make some suggestions. There's some really good stuff coming in. I've got a lot of content planned. The hard part is getting time to do it. I've been working on a utility for myself that's going to automate a lot of things, and I can't wait to share this with you. If you've been following my Twitter, you've probably got a really good idea of what it is, because I've been making some test posts with the utility I'm working on, and it's going to be sharing a lot of information automatically, and it's going to be pretty cool. So definitely stay around on the channel to check out that video coming up soon, because we're going to be sharing a lot of great stuff when that comes out. But other than that, I've already asked you to like and comment. You can always also check out my TradingView profile if you like what we've been doing here. You can always check out the TradingView profile, see some of the ideas I've posted. I haven't really posted a lot of ideas lately, mostly because I've been so busy working on this utility and also the content for these videos. So hopefully once we get that utility completed, the ideas will be much easier to create and come by. You can also check out the scripts that we've already made and published here, and I'm going to try and get through this quickly. There's also the referral, so if you've been following along and you wanted a paid subscription, please use the referral link. It's in the description of the video. That helps me a lot. It also helps you as well. You get $30 towards an upgraded plan once you pay for your first one, and once you do that, that really helps me because the premium subscription is pretty expensive. So I appreciate you all watching. Definitely stay tuned. There's a lot of great stuff coming. Hey, this is David for BigBits, and in this video we're going to go over the fill function again for TradingView with its Pine script. And what we are actually going to be doing this time is a conditional fill, which isn't a actual option that's built in to the fill function itself, but what we're actually going to be doing is making this happen using the code and a couple of tricks to use conditional filling to only show it when we want it to be shown. Now, one of the things you'll notice from the last video is we compared plots to plots and horizontal lines to horizontal lines, but in the last video we were using a plot for the RSI value, and we were using a horizontal line to show the overbought and the oversold lines on the RSI indicator here. Now, what we're going to be doing in this video is we're actually going to have to use a plot so that we can compare the RSI to the oversought or oversold or overbought lines. And what we're going to be doing is we're going to do a conditional fill where if the RSI is above the overbought line, it'll fill that in between the overbought line and the RSI only when it's overbought green, or red, excuse me. And then when it's below the oversold value, it'll fill between the oversold line and the RSI value as green. Now, you'll notice I took away a lot of the code if you watched the last video. So really all we have now is our plot, the RSI value for that plot, and then of course the values we have set for the overbought and the oversold levels. Now, we're going to have to plot our overbought value, and we're going to have to set that equal to a plot. And what you'll probably be tempted to do is to do exactly this. Let me go through here and show you this. Okay, you can see this essentially gives us what we had in the last video, although it doesn't have the little gaps between the lines. What is actually happening here is you're plotting a single value consistently over and over, and you'll actually see it here, whereas with the horizontal line you didn't see that value here. And we don't really need to see this line. What we really want is we only want to see the fill between the two. So we're going to have to do a little bit of work here to get this to actually work. Now, the first thing we're going to do is we're actually going to set our display for the value equal to display.none. So now it should no longer show that particular value. So now we can't really see what's going on. You can see it still actually prints the value up here, but if you want to get this effect, you're probably going to have to do it this way. So what we're going to actually have to do is we're going to use a conditional plot. Now, we've seen this before in the past, and it's very simple. So we're just going to compare our RSI to our overbought, and if our RSI is greater than the overbought, then we're going to plot that horizontal line at the overbought value. Otherwise, we're not going to plot anything. So I'm going to save this. You still won't be able to see anything, but we should be able to compare it. So you'll see the blue value here where it says NA. that's where the RSI is not above the overbought value. And I'll actually go ahead and cut the display none out so you can kind of see what's actually going on. So it kind of shows you there what's going on, but it doesn't really give you the best picture there for what we're actually looking for. Now, what we're going to be doing next, once we set that display to none, we're going to be filling between the two, and we're going to start with our overbought, and only when that exists can it show up on the screen. So then we're going to fill between it and the RSI plot, and we're going to set that color equal to color dot red. So this should only show us a fill between 70 and RSI when the RSI is above 70. And I'm going to set the transparency equal to 0. That way it's standing out very well and you can actually see what's going on. There you go. So you can see it did it a couple of times here where it went above the overbought value, and it stands out a little bit better in areas where it goes very far overbought instead. So really, just to do the same thing, we can just copy and paste what we have here and replace our values in regards to oversold. So we'll replace our OBs with OSs, and we're going to be looking for an RSI under the oversold value, and if it is, we'll return the oversold value, and we'll change this to say oversold, and then we will fill between our oversold and our RSI, and this one will actually be lime to match our other nice green colors. And our transparency is already set. So there you can see now we have a conditional fill to where when our RSI is above the overbought value, it'll fill between the RSI and the overbought value, and then also on the RSI and the oversold value. And like I mentioned in the last video, if you set the RSI overbought and oversold values to an input to where people can go to the settings and change those here, then those values can change, and you can actually change where the fill actually occurs without editing the code. And if you want to know how to do that, you can go back in some of my other videos where we talk about inputs, and you can get that figured out. Now, if you want to check the reference for PineScript, you can always go to the PineScript language reference manual. I highly suggest you check this out so you can get an idea of what's actually going on. But other than that, I think this was a pretty quick video overall. I haven't really checked the time on it, but I think everything went really well. There may be another video related to fill. I will have to check out a couple of things and see if I actually want to go that direction in the next video. But we've had 2 now, and that's pretty advanced for the filling if you're not familiar with coding. This might be a little harder for you to understand or grasp, but I think if you've been following along with the series, you should have gotten what we've done today pretty well. But other than that, that's it for this video. Please, as always, like this video if you did like the content, and subscribe if you want to see more videos like this. You'll get a notification when other videos come out. Always check out the TradingView profile. You can follow me there where you can get updates on my ideas and scripts. And of course, if you are considering a paid plan on TradingView, please consider the referral link in the description of the video where you can get $30, and I will also get $30 towards another renewal of the paid plan. So that is it for this video. I thank you very much. I'll see you in the next one, and have a nice day. Hey, this is David for BigBits, and in this video we are going to talk about recency bias and using that idea to check for streaks and the frequency of certain occurrences in our indicators. And most people probably think about recency bias and they think of that skewing your perception of what's actually going on, but what we are going to refer to as recency bias is placing a bias within our series of data on the most recent candles by looking for a frequent occurrence of some sort of event, or require that there is at least a streak. So there has to be so many events in a row. And to do this, I'm creating two inputs here for an indicator where you're going to require that there are X red candles, 3 out of Y red candles. This means we're going to look for 3 of 4 red candles in the past, in the most recent candle. So we're going to start here and we're going to look back 4 candles and see if 3 of the 4 were red. And then we're going to do some other things as well. I'm going to show you how we check for whether or not 3 of the last 4 candles were red. And you could actually change this to work with other indicators. So if you want to see how many of the last 4 candles were overbought on the RSI, you could use the same approach, and instead of looking at whether the candle is red or green, you can look at whether or not the RSI was overbought. So that is kind of the concept of what we're working with here. Now I need to kind of go over the concept of how this is actually going to work within the code itself. Now, a lot of people are going to be tempted to use Boolean values when they create their indicators to save whether or not these conditions are true or false. And that makes complete sense because when you're talking about conditions, you are talking about a true or false statement. So is the candle red? That's a true or false statement. And also with is the candle green? That is also a true or false statement. But I like to use float values because I can set those to either 1 or 0. And 1 would be true in this case. And you'll see why that is in just a moment. So the first thing we're going to do is create those variables and set them appropriately. If the close was greater than the open, the is green is equal to 1. And we're going to do that because we are going to look back on our Y candles, our 4 candles, and we're going to get the sum of how many red candles there were that were green and their value sum by adding up the value 1 for every candle. So if there were 3 candles that were green, the sum of this value is, the sum of is green will be 3 as well because each one had a value of 1. And we sum those all together, you get 3. It's a pretty simple concept. And if you wanted to do a streak and you wanted to require that the last 4 had to be red, then you would just set the X equal to the Y, and that's how you would do a streak. But like I said, in order to get the value of red candles over the last 4 candles, now instead of having to go back and check whether the last 4 candles were true or false, all we have to do is actually use the sum function and check for the value on is red. So it's going to go back Y candles. So it's going to go back 4 candles, and it's going to get the total value of all of the is red. So since all of the is red are going to equal 1, this is just going to essentially check for how many occurrences there are and give you the total. So if there are 3 candles and all of those candles have the value of is red equal to 1, your sum of all those is going to be 3. So you're going to have 3 candles. It's a little trick as opposed to having to type in to check specifically the previous candle and the one before that and the one before that. This is a very easy way to just get the number of candles within the last so many number of candles. Then we are going to do something that we call a conditional check. We are going to check whether our recency bias is met that we came up with our occurrence frequency, the 3 of 4. And we're going to check that our sum, the number of red candles, is greater than or equal than the number of red required, and that is the X value, not the Y. And that's what allows you to check for only 3 out of 4. And if you had this set to Y, it would require the streak. So just keep that in mind. You're requiring this number. So you're requiring that this number is greater than or equal to this one. So if you set it to 2, you would only have to have 2 red candles here, or it could have been 3 or 4, and that would have made the statement true. Now, I'm going to zoom out just a little bit. I'm going to change our code just a little bit. I'm going to show you how many red candles we actually have using this code. Once this saves, you can see it's now plotting the number of red candles out of the last 4. Let's actually zoom in and give you an example here. And let's kind of come over here so it's easier to see. So let's start right here. Out of the last 4 candles, 1, 2, 3, 4, 2 were red. And that's actually the value that it shows us there. And you can see that right here. Okay. when I hover over the correct bar, it's showing 2. Then we move over to the next one. It's still 2 out of 4, but it's actually 2 different candles. Well, 1 different candle. You have the current candle, the previous, but the 2 before that were green. And you can see as long as those 2 remain in the sequence of 4 candles, it'll remain 2. The last one got dropped out there. A new one was added in, so it stayed at 2 there. And let's go all the way over here. You can see this one actually had 3 of the last 4 candles as well as the next one. So this works the way we expect it to. So let's actually now show you how many of those candles actually had their conditions met. So we're now plotting a yellow line, which when it is at the value of 1 means that our condition is true. So that means we do have 3 red candles. And you can see, zoom in here, the red line here was 3. So every time we had 3 out of 4 candles red, it actually did say that our condition was true and that our recency bias was actually met. So that takes care of checking to see if our streak was actually met. We don't need to see how many numbers of candles were actually red or not. So we're going to take that out and we're going to go in and we are going to check to see if the current candle, let me zoom in. We're going to check to see if the current candle is green and our recency bias is met. So not only are we going to require that 3 of the last 4 candles are green, but the most recent one is, 3 of the last 4 candles are red, but we're going to require that the most recent one is green. And actually what we need to do is we need to require that it's actually 3 out of the last 5, because if it was 3 out of the last 4, the most recent candle would always have to be green to be true. So let's change it to the last 3 out of the 5, and we are going to be checking. The current candle is green and 3 out of the last 5 were red, and that's going to be a nice green color on our chart. So let's save this. There you go. So on these 2, the candles are green, and that's exactly what we want. We want the most recent candle to be green, and we want 3 out of the last 5 candles to be red, and that's actually the case on both of these candles. From here back, you have these 3 candles, and it's also the same on the next one. And they both happen to be green, so the green line, that condition is true on both of those. So this is how we can require that the current candle is doing something and that we have an occurrence frequency met to a certain amount on the candles before that as well. And you can actually go back and look at this over time and see how many times this actually happened. And you can use this as part of your methods in your own indicators to find different frequencies. Like I mentioned earlier on in the video, you can look to see how many times the RSI was overbought out of the last 5, 10, 20, 50 candles, whatever you want. You can go back and check using the same exact logic to see how these things actually work. And I'm actually going to remove that. So now all we're going to see is it's going to show us 1 on here when that condition is met. And of course, there's all kinds of other logic you can do on top of this, but this whole video was just about showing you how to put a recency bias on the current candles by checking for certain conditions on the newest part of the time series. So all of our data here that's just occurring, we want to see and put a bias on it based on what's happened recently. So that's what I mean by recency bias within the indicator here, and our occurrence frequency check and our streak checks as well. So that's going to do it for this video. If you like the video, please like and follow on TradingView. Like the video if you're also watching this on YouTube. This video will get placed on YouTube after it is placed on TradingView. And if you like the video while you're on YouTube, please go ahead and subscribe. That helps a whole lot. And I'd like to think if you watched the video this far, you would like to see other videos like this, because I make a lot of videos like this, including Pine Script tutorials. So subscribe and you'll get updates when I make new videos like that as well. But that's going to be it for this video. I'd like to thank all of you all for watching, and have a great day. Hey Hey, this is David for BigBits, and in this video we're going to take a look at coding with Unix timestamps in our Python script indicators. And the big indicator that I've created with this is the Bitcoin circulating supply overlay. You can see that here. I believe it's the only circulating supply indicator on TradingView. At least when I search it, that's what it appears to be. So take another look here. Yeah, so it looks like it's the only one that's out there. I think if you search for Bitcoin, there's some similar thing, number of coins. It's not open source though. And really, I think this is going to be good going forward because it's calculated on the estimated block rewards per day with the estimated upcoming halving date. So it's really cool. I'm going to show you how to do this, but first I want to show you a few different things. This, of course, is the supply over time. This was during the halving period of 50, the initial halving period. The second period was 25 Bitcoin block rewards, and the third was 12 and a half. And I've got this chart pulled up. Where is it? Right here. And it tells you how many Bitcoin were created per block and how many were created during that halving period. This is a really good chart. This is a URL. I definitely recommend you check it out if you're interested in the halving schedule and the effect of the block reward history. But anyway, back to the chart. This, of course, is a circulating supply. I added a few options. I'll go over those really quick. We also have a log reduced supply. You can see that really reduced those numbers and actually put it on a scale similar to the price, and I'll show you how I did that in a little bit as well. And then there's also the market cap, and these actually look a little bit better on log scale because the market cap's in the billions. Yeah, you can see it follows along pretty nicely with the price, but it's also adjusted based on how many coins are actually out on the network being used. And while I've got it on log scale, before I get into the code, I want to show you the log reduced supply. And this actually appears to have done a pretty good job of calling the market top during the last couple of cycles. Now, I will let you know, I don't think this is going to work for a long time because the next log reduced supply after the next halving is 182,000. So, somewhere up here. But if we continue to reduce with this log scale as I have for the past two halvings, then eventually we won't be able to reduce it anymore, and we'll just be multiplying that supply by 1. And since there's a maximum of 21 million coins, that means eventually the price of Bitcoin could get up to 21 million. And that's just absurd to think about, and likely, very, very likely, is not going to happen. So it seems more likely we might have to change the log reduction schedule just a bit off of this tenfold amount in the future. That's something to keep in mind. But let's look at the actual code. That's probably what you came here for. This is a development series. Let me take myself out of the video now so you can see the code. And we are going to be working with timestamps, functions, and of course our string options in our input here. Now, as always, you can find this on my TradingView profile, or as I showed you before, you can just search for it. But let's go ahead and take a look. We've created a few functions. The first is circulating supply, log reduction, and a multiplier. And then we only have one simple line for plot. I left it as a blue line. People can change it however they want to. There's nothing else going on here, so it didn't need to have a special style to it, in my opinion. So for the circulating supply, and this is where a lot of the hard work came into, we had to first determine where we are, like what halving period are we in. So if we are before the Genesis date, which it happens to be today, 11 years ago, that would mean there were no coins circulating. So we would have to return 0. Now, if that is not the current schedule, we are in the first halving period, which is a time greater than January 3rd of 2009 when it started, or greater than or equal to, excuse me, but also less than the very first halving date of November 28, 2012. And I got those dates from this particular picture here. And let's look at the reference here, the timestamps. return a Unix time of the specified date and time. So what we're doing is we're passing into this this function, this timestamp function, a particular date with also, I believe those are hours and minutes, and it converts those into a Unix time. And if you're not familiar, Unix time, if I recall correctly, is I think it's like the number of seconds since a certain date in like 1971. It's a really large integer number right now, so it only gets larger and larger, and it doesn't return a typical like data type that you would work with in other languages like C#. So that's something to keep in mind. We're actually working with a very large integer here. So when we call this function and we get our date back, it's actually giving us just one really long number. So we have to account for that. So if we are in this first halving period, which is these numbers back here, and the history for BLX doesn't go back that far, so we don't see it start at 0. We only see it as of the day that their history starts, and the supply was like, let's see, 40. Oh, that's the log reduced supply, excuse me. The supply itself, let's go back here. Something like 4 million had already been generated at that time. So we reduced it by quite a bit to get on the same schedule as we were down here. But the thing we do to get this number of 4 million, first we start off with the end amount from this halving. So we know at the end of the first halving, let me go back to the log reduced supply because it's a lot easier to see when the halvings occur on that chart. The first halving occurs here, and we know at the end of the first halving there should be 10.5 million coins, and that's based on the Bitcoin algorithm for the block rewards, and you can see that's on the chart here. This is how many Bitcoins are rewarded during this particular schedule. And then, of course, there were 5.2 in the next one, 2.6 in the next one, and 1.3 going forward, and it keeps reducing as the rewards reduce as well. So we start off with the number that we know that we need. Then we get the date of the next halving, and we put it into this timestamp function, which is going to give us a really huge number back, and we divide that by 86,400,000. That's because that's how many units, not Unix, but how many units make up a single day in a Unix time. Like I said, it's a really long integer, so every day worth of time in a Unix timestamp is 86.4 million. So when we divide the timestamp by that amount, we get the number of days in Unix. Then we can subtract the current date using that same timestamp function divided by 86.4 million to get the Unix days, and we can see how far back from the upcoming halving, which we passed in here, we currently are. So if we're only 1 day back, we're just right here, or if we're a couple hundred days back, we're back here. So then, not only do we have to take that into concern, we have to look and we have to add in the rewards over time. So to do that, we multiply that difference that we've gotten. And we've already gotten our difference here. And we know the block rewards that we're getting for this entire first block halving. Then we divide that as it loads. We divide that by the total number of days in the halving period. So we get how many days back we are. All right, so if we're 100 days back, this number would be 100. And then we multiply the entire batch of block rewards during this halving period by the number of days in the halving period. Okay, that gives us the amount of Bitcoin rewarded per day during this particular period. Now we have that number. We have 10.5 million times the daily reward, or well, let's say this. We have the daily reward times the number of days before the next halving. Okay, So we get all the rewards until the next halving, and then we take the amount of coins on the next halving and we subtract the amount of coins that we have left until the next halving, and that's how we get this increasing amount over time. It sounds like a lot, and there's a lot going on this particular line of code, so it can be a bit intimidating if you aren't a very experienced programmer. So not much I can do about that, but if you follow along, you'll see how these things work. And I do want to point this out. Some of you might just skip to this video. This first part here is a condition, and then it checks if it's true, and if it is, it returns this value. Otherwise, it'll return the next value in the line. And we just kind of cascade those down at the end of each line. You can see, well, if that wasn't it, then check this. If that's not it, check this. And then, of course, it'll default to nothing, of course, if we are after the next halving date, and that's when I'll have to hard code in a bit more information. Particularly, it's going to be the expected total block rewards and the block rewards per this halving. And once we get that information, we can toss this into this particular indicator and then find the next estimated halving date, and we'll be done. And that's all we really have to do to update the circulating supply over time. Now, I did mention earlier on this could be used. I'm going to bring myself back into the video now. I did mention earlier on this could be used for other cryptocurrencies that we know the halving periods and the reward schedules very clearly. This most likely would be best for, I think Litecoin or other Bitcoin forks like Bitcoin Cash, something like that, where we know the reward schedule ahead of time. We can actually do this, and it doesn't have to be based on the same schedule as Bitcoin. It doesn't have to be a hard fork of Bitcoin. It can be any schedule, as long as we know what it is and how many rewards come per block and how many blocks are or how many rewards are happening per day. So we can really mold this to any if we wanted to. Now, the log reduction is the other function that we came up with, that I came up with, that I used to fit this to a curve. And during the first halving period, this uses the same timestamp kind of functions that it did up here, but the value we're returning is just the multiplier that we're going to apply to the supply. So during the first halving, we wanted to reduce it quite a bit. I mean, the price was really low back then, so it had to be reduced substantially to make it kind of in line with the prices at that time. So on the log scale, it was 5 decimal places. 0.0001 is what we multiplied the supply by, and then during the next halving period, I just multiplied that by 0.001, 0.0001, and then the current halving period 0.001. And I already mentioned during the next one, if I were to apply 0.01, then it would be a line that starts off with 182,000. Which, if it happened to align with the prices peaking during the last market phases, that might be the top. But like I mentioned, it probably won't work, just because eventually that would mean the price would equal the supply, and that's just kind of silly to think about. Now, the other function we have is just for the multiplier. So we've returned our circulating supply when we're going to do our plot down here. And we have different modes, so I did an if-else nested branch here. And if the supply is the mode that we're on, we just multiply the circulating supply by itself, or not by itself, but by 1, so it equals itself. And if that's not the case, then if the mode is the log reduced supply, then for the multiplier, we return back the log reduction, which is this function that would return back the multiplier that we're talking about. And clearly, I need to update this. We don't want to multiply it by that much in the future. But when that time comes, I'll get around to doing it. If I don't, please remind me. If you're watching this video in the future and you notice the indicator's broken, please just let me know. But the other one, of course, the last mode is the market cap. And to calculate the market cap at the moment, all you have to do is multiply the current close price on the candle times the estimated supply, and that's the current market cap of Bitcoin. So we took this one indicator and we really turned it into 3 with the different modes, but really a lot of unique things to look at here. The key takeaway, if you're following the series, is how to work with Unix timestamps and how to compare those. And you'll particularly probably want to pay attention to how I divided it by 86.4 million for a day. Now, if you want to work with smaller amounts, you could probably do that. Like if you wanted to work with 1 minute charts, that might be 60 or 6,000 on this scale. I can't remember exactly, but if you take all the seconds in a day, divide this number by all the seconds in a day, and then you'll get what you should divide it for to see it on a single second scale. So just something to keep in mind, that you can do that. And if you have any questions about this one, because I know it's really confusing and it's really hard to look at with all of these functions within this one line, please leave a comment and let me know that you need something here, or you can reach out to me on Twitter or the Discord or any of that stuff. You can find all the links to that in the description for the video. Now, if you like the video or you like the indicator, please like this video, subscribe, that helps a lot. But you can also check out my TradingView profile. You can see it there. You can like the other scripts that I've got, the other ideas that I've had, and that stuff helps as well. But like I said, if you like this video, please leave it a like. And if you like these types of videos, please like or subscribe to the channel, and you'll get to see more like it. We have a lot of great stuff coming out here. I've got several videos planned and some that are already recorded. So that's all for today. Thank you and have a great day. Hey, this is David for BigBits, and in this video we're going to take a look at accounting for the commission or the fees in our strategy. Now, in the past we have just went along with our strategy without trying to account for any fees on trading, and that's just usually not the case. Now, there are some exceptions. With different exchanges, there's different fee models, but I usually tend to focus on Coinbase on the channel. So we're going to take a look at using the Coinbase fees on our trading strategy. Now, the first thing I'm going to do here is I'm actually going to clean this indicator up a little bit. We have a lot of extra features on here that we're not really looking at, so I'm going to go into the settings and turn some of these off. We don't really care about the second MA. We are not going to care really about the ribbons right now, and we are not going to worry about the MA1, 1-2, and the 2-3 crosses. We can leave our take profit and stop loss the same. That doesn't really impact things too much. Now, for those of you who haven't seen the videos yet, the green line is the 50-period daily moving average. The red line is the 200 daily moving average. And of course, if we change our resolution, it'll change to that particular resolution. So if we change the 1 minute chart, it'll be the 50-minute moving average. Now, let's zoom out, take a look at the chart a little bit better. You can see we have one trade here. If you look at the strategy tester, you can see in total on the Coinbase chart, there's only been 2 trades that have qualified, and they both wound up in profit. But as you can tell with our settings, let me bring those back up. We have a take profit percentage set at 30, but we're only seeing 28.85% profit. That is because we have accounted for the commission in the strategy now. Before, if you had watched the videos, if there was a take profit, it would have been strictly at 30%. Now, that's pretty good. So let's see how this actually works. Now, all of this video is mostly, well, is entirely around this particular line of code. We've continued on our strategy, and we are adding more parameters on it to increase the usefulness of our strategy. Now, the unfortunate thing about this is that these are all kind of set at once, so we can't really use inputs on our strategy and change these values on the fly like we could before. As far as I know, you're going to have to go in here and you're going to have to change these values. Maybe we can try that another time to see if the inputs work. Maybe it's a different version of Pine in the future that can do that. But for now, you're just going to have to type these in and have to go with it as part of your strategy. These are all the defaults that are going to be a part of this tutorial. This is going to be the commission tutorial, scripted tutorial B, so that everything shows up in order on TradingView. Now the first item we're looking at is calc on every tick. Now what this means, and let's look at our reference manual here. Calc on every tick, which is right here, this basically allows you to trade within the daily candle or whatever candle that is currently being used or being drawn on the chart. Now, this can allow you to essentially trade in the areas up here in wicks where otherwise you wouldn't have. Say you wanted to trade on an RSI value. Let's bring up the RSI indicator. And you can see the RSI got very high here and here, but the RSI would have been much higher if you were able to trade it during the middle of the day up here. So if you wanted to catch that RSI at even higher numbers in this wick, that would be how you would do it, to have every tick, every new set of data that comes in for this chart to process the strategy and potentially put in a position or not. Now, there are some important things to know when you're talking about using the intra-candle calc on every tick option, and that the data in the history of the chart, and I can close the RSI now, the data in the history of the chart, there's no way to run the back testing through the middle of all of these candles. So you see these wicks that I was talking about, there's no way to simulate what the strategy was in there because the chart that we're looking at only knows the data that it's showing, not all of the prices and the changes that happened within that candle. To be able to do that is a bit beyond what we're looking at now. You would have to create the indicator to look at smaller time frames but trade the larger time frame moves, and it's entirely possible. But we're going on to talk about commission. So one of the key things to note about the calc on every tick feature is that now our strategy is showing the moving average completed all the way out to the current candle. Now before, and I'll show you this kind of live here. Let's save that change. It'll take just a moment. Now if we weren't calculating on every tick, it's now going to move the MAs back to here because it hasn't processed this candle yet. This takes just a moment to save. There is quite a bit of code in the strategy. Give it just a moment, and there you go. And of course I'm going to have to change back all the settings that we changed earlier, but you get the picture. It moved all the MAs back because it hasn't processed this candle yet because we didn't have calculate on every tick set to true. Now I'm going to change that back. I'm going to leave the ribbons on here just because we're going to be changing a couple of other values here as well later on, so they'll just come back anyway. So let's wait for this to save, and I'll move our MA back onto the current candle. Now, let's actually talk about commission. And if you don't know, that is the fee that the exchange takes on every order that you make. Now, whether you're placing a limit order, which basically means you want to buy at a specific price or sell at a specific price, they could have a different fee than if you told it to buy right now, which would be the closest price in the order book. Say somebody wanted to sell at whatever the current price is, you could do that immediately right now. A lot of times that has a higher fee than if you place an order down here and we're willing to wait, or an order up here and we're willing to wait. Just keep in mind whatever exchange you're using, because you will need to know the fee model for that exchange. Now Coinbase, which is what I'm going to use for the example, uses a 0.5 percentage point to calculate the fees for each trade. And now for your basic account that doesn't have a lot of volume, that applies to both the market orders and the limit orders that we were just talking about. So the first thing you're going to have to do is we got two new parameters. A commission type, we want to use a percentage because Coinbase uses a percentage-based fee. And then we also need to set the commission value to 0.5. Now, if you're thinking about 0.5%, you might be tempted to put 0.005, and I completely understand why you would do that, because when you're talking about based on a 100 value, that would be the case. But 0.5 this is measured based on percentages, not whole numbers. So it's 0.5 for half a percentage. If you wanted it to be 1.5%, that's all you would have to do. Just put the integer before the decimal there. Now, this is how we take care of a permission or a percent-based commission. Excuse me. If you wanted to do a fixed fee, like say you're trading stocks or futures on, E-Trade or something, and there's a flat fee of like $2 per contract or something, then you could put in a flat fee here as well by changing the commission type. Let's go here. Let's take a look at our commission types. Here we go. They have a percentage, which is what we're using, a cash per contract. So that's the example that I gave you. So $2 per contract, that would be this example. And then cash per order. So if it only costs $5 to execute your order on the exchange, no matter how big or small it is, you would use this one. And then you would just set your commission value to whatever that value is. So if you were doing the cash per order and you were trading 5 contracts, you wouldn't need to worry about there being 5 contracts. Your commission value would just be whatever the price is per contract. So if it was 50 cents per contract, this would be what you would have in there, exactly what we have now. If your per order commission type was being used, your commission value would be, for example, $5 per order, and that would take care of the entire order as opposed to worrying about how many contracts you're actually using in the order. Now, that being said, let's take a look at the strategy tester, and this is on the daily chart. Yes, I didn't think there was this many on here, but there is. Okay. That's because I need to change my settings. We'll leave it like this. We're trading all kinds of different crossovers now, so you can kind of get an idea. Like I mentioned earlier in the video, I apologize. I was completely in the way. Let me scroll this up here. I was in the way earlier in the video. I apologize about that. But there is a take profit on the strategy of 30%, but we're only trading 28.85% when we take our profit. That's because we're using a market order, which has 0.5% fees. Now, if you're a more experienced trader, you know that there is more involved with trying to get an accurate back test and simulate a strategy than just the commissions and the fees. And you know that there is such a thing as slippage, and that is when you don't get the price that you want. Now, this is sometimes, in my opinion, a bit more severe when you're using limit orders, when the market tends to move away from wherever you're trying to enter, and you want to enter it again, and you keep placing the orders in. But there's also slippage when you make market orders, when you move the price and your average price is either above or below where you got in, or where it was signaled to go in at, I should say. So there is a bit more to it. Your average price of all your contracts may not be the price where it triggered at. Now, for example, here, I don't have any slippage on here. So the contracts execute at this particular price, where in the real world, if you were to trade 389 Bitcoin on a single trade, you would likely move the price up or down in whatever direction you trade. That's just a fact on most exchanges, unless there's a much larger order out there. This is a fairly large order for Bitcoin at this time. So it would move the market significantly if you were moving 389 contracts, and significantly is relative. It might just be a few tenths of a percent, maybe not even that much, but it does impact your profit. So it is something to keep in mind. Now, when it comes to accounting for the slippage in the strategy itself, you can see I have it set to 0. That's because I don't really care for how it's being taken care of. I would love to be able to set the slippage to a percentage amount, but the slippage is actually a number of ticks, which is the size increment on your y-axis on your chart for the price. So here it's 1 penny. So the slippage, if I set it to 1, would adjust the price up or down depending on the direction of the trade by 1 penny, so that it could account for those price changes due to the slippage of us moving the prices when we order. Now, that's why I've included it in here. I've added several notes so that you know exactly why I did things the way they are in the strategy. And so far, I mean, it's pretty good. Like I said, you can change all the settings around to however you like. When we started the video, we only were working with the MA1 and 3. We didn't even worry about the ribbons, and we left our take profit and stop loss the same. And you can see that impacted the strategy tester with the list of trades, the performance review, where in fact you can actually see the amount of commission you've paid. So I do want to dive in just a little bit more and talk about commission when you're looking at strategies, because and this, you might think this is financial advice, but it's just kind of a fact of the way things work. The more often you trade, the more fees there are. So you need to take that into account when you're trading. If you're trading these longer time frames, such as daily charts, the fees are not going to accrue as fast because you're not trading as quickly. Whereas if you're trading, let's move this down to 5-minute candles. Say you're trying to trade 5-minute candles, they are going to accrue much quicker. You can see $35,000 now, 36 almost, instead of 2,000. That's because we got in and out of a lot more trades. But when you're working with these smaller candles, a lot of times the percentage movements when you enter and exit are also a lot smaller. So that's why it's very important to keep in mind your and let me make sure that actually showed up for you here. Make sure my head wasn't in the way. Yeah, I think you can see the commissions. Where are they? Right here. Yeah, you could see that. And let's go back to the list of trades, and I'll bring that back up here. So you can see we had our take profit and our stop loss at 30 and 15% respectively. But when you're working with these smaller time frames like this, you're getting in and out of trades quicker. So if the market doesn't move enough to account for the fees that you're having to pay, then you'll see a lot of this, a lot of red. You might have closed when the price was above your entry, but due to your fees, you ended up losing significantly. And it might not be super significant. Like I believe this one is a good example, 0.66%. You're paying 0.5% fees on the buy and the sell. So you would have been in profit if there were no fees. That's another reason why, this is a very good example, I should say, of why it's important to consider commission in your back testing, especially when you're trying to come up with a back test for quicker time frames or resolutions such as the 5 minutes like what we're looking at now. Now, I'm going to call that pretty much for the video. We've covered just about everything I've went over. I'm going to be publishing this script in just a moment. It's going to be available on my TradingView profile, and you can actually see that here. It's BigBits.io. We've got over 50 followers now. It's kind of early in the channel still since the reboot, and we've got plenty of scripts posted. I've posted several ideas. We've got a lot of likes going on, so check out the profile. And if you like the video, please like here on YouTube. And check out the other videos in the series before this one, because there's a lot of the tutorials out here and you can get a good idea on how to create these indicators and strategies on your own. There's a lot of good examples on things that you can do and some notes and comments, and make sure you use the reference manual as well. But check out the profile, like the video, and if you like these videos, not only check out the scripts here, but also check out the series on YouTube and subscribe, because I'm going to be coming out with more videos later on these development tutorials, and also some other things related to trading development. So make sure and subscribe, and just, have a great day. Hey, this is David for BigBits, and in this video we're going to take a look at gradients one more time with our fill function in Pine on TradingView. And this time, instead of just creating a nice pattern, we're actually going to be giving them meaning or some importance to the gradients, so that you can actually look at the chart and tell that the gradients actually are showing you detail or information about the indicator you're working with, instead of just looking nice like the repeating gradient pattern in the last video, which if you haven't seen, we'll do a very good job of explaining how we get the gradients on the fills, whereas this video we're going to focus on the importance of the transparency and the colors that you're actually seeing on the chart itself. So I have pulled up right now the color gradient framework, and I referenced this in the last video as well. This is the Pine Coders account, their mod on TradingView. They have several scripts that are very good to reference when you're looking for these sorts of things. The color gradient is really nice. The framework that they did has two different modes, and I'm going to be showing you a different mode for the actual gradients. Now, the first one they use is an advance and decline. Now, that would be this particular fill method, and you can see here that when the difference between the two moving averages is increasing, the gradient gets more opaque and less transparent. And you can see when that difference between the two moving averages decreases, it continues to become more transparent. And similarly, we have these gradients on the RSI, I believe that is down here. I forget what they said it was with. It might be just the histogram on the MACD though. But anyway, the relative mode for the gradients takes into account the strength of the values around it before. And so what you're going to see here is that they don't always continue going down in a very much predictable way as you would if you just looked at the chart here and you knew that the moving average was getting closer. You could know exactly how much the gradient is, whereas here it's a little bit more relative, so it's a little bit more flexible, I should say, as opposed to the advance and decline. Now, I should say you can take a look at their code. If you are new or an intermediate programmer, it's probably going to be challenging for the new programmers, but if you're intermediate, you'll probably be able to figure it out once you look at it for a little while. But for those of you who are more advanced programmers, it's going to make complete sense if you go through the entire script and you get down to where they're actually plotting things. Now, what I wanted to show you was the gradient pattern that I came up with, which is based on the strength of the difference in the fill. So what I mean by that is, so for example, let me move this over here where we've got a better example. So for example here, similar to the advance and decline method that the Pine Coders account used, what I'm looking at here is the strength of the difference. So whenever we have a crossover, the moving average, the difference, whatever that is, it's always the same as the maximum difference between the two. So as the number continues to climb at the beginning, the difference between the two is always at its maximum value until finally the difference between the two moving averages becomes less than the maximum difference, like it was right here, I would say that was the maximum difference at this point in the green cycle. And you can see the difference continue to go down, and we are tracking the difference where this is, the difference is in reference to the maximum difference on the moving averages. Now you can see here it continues to widen and it approaches the maximum difference, which was back here, and you can see it starts to get less transparent and continues to become more transparent here as it narrows. And you can see here it sets new maximum differences as it gets very wide on the fill here, and it quickly approaches the transparency, full transparency, as it gets ready to cross over. You can see it starts getting brighter and brighter on the red and back to transparent. So it's always going to approach transparency before the crossover, and it's going to be, depending on how you have them set up, it could be very quickly. Now let's actually take a look at the code, and I've actually kind of set up our code here to where we're using a bit more of the coding styling guide that they have on the Pine Coders website, and we're going to try and stick to that going forward, just to make sure that we're following their standards, so that if somebody in the community is also following their standards, we're also going along with it, so when people look at our code they can also read it as well. So it's going to take a little bit to get used to, and I'm going to have a video coming out soon about that, so just look out for that. But for the most part, if you followed along through the whole tutorial series at this point, you should know what we're doing. It's just basically changing where we are doing certain things in the script and how they are being named, essentially how we're declaring the variables. That's about it. Okay, so we've added a couple of inputs since the last video. These are just for our moving average length, and I haven't bothered to give them a title or anything. We've also added our citation in here, which is where we have copied the code over from the gradient framework from Pine Coders, and we made a small change. Since we are working with percentages, instead of just using numbers 10 through 1, we are actually going to be using numbers 1 through 100 or 0 through 100 because we're working with percentages. Now, we also had to come up with a function to determine where we are relative to the maximum amount. So in our fills, our maximum amount, let's look at this one. This stands out a little bit better. Our maximum width is right here. We're fully opaque. Now, when we're here, our current distance between the two, let's say, is 5, just for an example, and our maximum distance is 10 back here. We're getting the percentage difference like relative to where we were to the maximum. So if our distance here was 5 and our distance here was 10, our difference would be 5, which is 50% of 10. So what we're going to be doing there is we're actually going to be returning this number, because the G value is greater than 40, but it is not greater than 50. So it's going to return this value, which is pretty much in the middle of our alpha gradient that we're using based on that function. Now, if that was confusing at all, please go back and watch the previous video where I explained that a little bit more as to what all of these numbers mean here. Now, we do have to declare several variables as well. We have to keep track of the maximum difference since our crossover. So whenever there's a crossover, we start keeping track of a new maximum difference. And then we also have to keep track of our current difference. We don't actually have to keep track of it to reference it in the past, but we do have to instantiate that variable so we can use it later. And then also we have to have a variable to calculate and store our current percentage difference. That would be the 50% value here. Now, the logic on this is very simple, and that is just that we are going to check for a crossover. If there is a crossover, we're actually just going to reset our maximum difference since equal to the current difference. And I skipped over this, my apologies, but the current difference is always the absolute value of the MA1 minus MA2. So you're always going to get a positive value there because we're measuring a distance or a length. And those are always positive values. Now, of course, when I say we have the crossover, we're setting our maximum difference equal to our current difference because this is the first difference we've had in this new series with the crossover. And the same goes with the cross under as well. And unlike the previous video, we don't have to keep track of the direction we're going. We can know that just by knowing that we haven't had a new crossover and we are still under or still below, and we do that in our plot down here. But otherwise, if this isn't a crossover and this isn't a cross under, the only thing left to do is check to see if we have a new maximum. So while these numbers are getting farther and farther apart, we continue to update the maximum difference. Say it was 6 back here, 7, 8, 9, 10. It continues to update. So our maximum difference here was still 10, because it didn't increase anymore, but our current distance was 5, so that's how we got our 50% difference we talked about earlier. Now, that is really about all there is, because then we called that function that I mentioned for the percentage of, which returns based on our current value and our maximum value relative percentage to where it is on the maximum amount. So on that 5 and 10 example, it was 50%. That function is going to set our current percentage difference equal to 50 in that instance, and then all we have to do is plot. So this is actually very simple to do. The logic is very easy to read in my opinion, especially compared to all of the functions in the gradient framework, and that's very good work and it's very advanced and it looks a lot better than what I have here. Let's be honest, this is mostly just green all the way and a couple of bars that aren't so green. But if you're wanting to capture strength relative to the maximum value, this is a very easy way to do that. Now, of course, we have our plots, and then the last thing we do, of course, is our fill function, which is last 4 videos here have been about now, and this is going to be the last one on fills for a while, hopefully, because I think everyone has had their fill of fill, right? That was a horrible pun. Okay, so we have our fill, we're plotting 1, 2, and of course we know the color based on whether or not MA1 is above 2, and then we return green if it is and red if it isn't. We pass in the percentages now. Since we changed these values to have a 0 in the singles digit and move the 6 or the ones digit over to the left, we now can reference those versus their percentage values. So really, that's all there is to this particular video, and I do want to go back to the Pine Coders example because it does look much better than what I have here, and I'll probably end up publishing this particular script so you can see it and you don't have to copy it by watching the video. So keep a lookout for that on my profile. You can always check that out. It's in the description of the video below. So if you haven't checked it out, please follow me there. That'll help you out to keep up to date with what I've posted. The color gradient framework, let's go back to that and check that one more time. You can see, I think it's a little bit nicer because our value stayed much more opaque for much longer here in our moving average differences. So I believe this looks a little bit better, although it would still kind of be nice to have it somewhat opaque because it kind of completely disappears here. So there are drawbacks and benefits to both methods, I would say, but it's all very nice. It makes your chart look a lot nicer. And one other thing that I wanted to mention before the video is over is that you should consider thinking outside of the box here. These gradients, we are working with what we see. We see a moving average and another moving average. But what you could do is actually use another indicator to give you your gradient values. So for example, let's take the relative gradient. You could use this relative gradient from the MACD or the RSI, whatever they chose to use, and you can actually put that gradient between the moving averages. So you kind of combine the two into one particular indicator. Now, if you all want to see that, I can do that, but really all there is doing exactly what we did, but instead of plotting the difference for the moving averages, you just plot the differences for the other indicator, the MACD or the RSI. So I hope that helped. If you like this video, please leave a like and check out the profile, of course. And while you're down there, hopefully you're giving it a like. If you haven't already, please subscribe, because if you like this video, there are plenty of other videos very similar to this where we cover tutorials for TradingView and PineScript. We also talk about some other things on the channel, such as crypto and crypto related projects, because that's something that I like. Now, you can also please check out, if you're considering a paid plan on TradingView, please consider using the referral link in the description of the video. That will help you get $30 and myself $30 towards an upgraded plan. And that is really nice to have, in my opinion. So if you're considering that, please look at that. But other than that, I think that is it for this video. We'll have another one soon. Like I mentioned, we'll talk about the styling guide or the coding style guide in another video soon. Hoping to have a few other things out in the meantime, and it may be a week or so before we get another tutorial video out. We'll see how that goes, but for the most part, things are moving very well, and I appreciate every one of you who are watching all the new videos and have kept up with everything so far. I really appreciate that. But other than that, thanks, and have a great day. Hey, this is David for BigBits, and in this video we're going to go over a function we have not covered yet, and that is the alert condition. And if you've seen the video title, you know what we are going to do is we are going to create a custom alert message. Now, if you're not familiar with alerts in TradingView, you can use them to simply alert you with the pop-up on the screen. They can send you an email, and they can also hook into webhooks. Some people also use alerts for trading bots. There are some extensions. I can't really say anything about those. I don't really know too much about those, but this particular script was a request by one of the YouTube commenters, and I appreciate that, because I haven't really looked into the alert conditions too much, but we've got it figured out, and I'm going to show you exactly how this works. So first of all, as always in the video, I'm going to show you our end result first, especially for those of you who don't know how to make an alert. This might be helpful. First thing you need to do, in particular, we need to add this indicator, and this is on my public scripts. It should be in the public library soon once it gets indexed. And what we're doing is we're adding this indicator, but then we have to add an alert. Okay, you open up the alerts tab here and make sure I'm not in the way on the screen here. Then click here to create a new alert. You can do that, or you can hit the little plus button here. Let's do this one. Now, on the condition, it's referring to what indicator or what part of the chart you're looking at. So we want to actually select our custom alert message, the indicator that we're working with here. If you've created your own with this code, you would select whatever you named it and saved it. Now, it'll give us all of the different options for the alert conditions. Now, these are built in. Number 1 and number 2 here are ones that we've created in this particular example, and we're just going to go ahead and select custom RSI. I'm only going to have it show a pop-up. You can see the message that it has set here, and it's going to pop up immediately, well, relatively immediately, because of how I've got it set up. We'll go over that later. But once you're ready, make sure you've got everything that you want selected for the actions on the alert. So you can set an expiration time if you needed to, and how often the alert can actually occur. I'm only going to do this once because this is just an example. Let's go ahead and hit create. Should take just a moment, and we should get a pop-up in the middle of the screen. There we go. Our RSI is 55 and a bunch of decimals. And we can look here, it's 55 and a bunch of decimals. So the alert worked. It showed us what the RSI value is. And there's plenty of documentation on how to do this. If you click on create alert, there's a little plus button down here, and if you haven't noticed, you can actually click on that, and it can give you more information about the placeholders. And the placeholders are those custom messages that we can put in using the indicators that we've plotted. So if you want to put a custom value in there, you have to plot it on the screen to get it to show up. And they have a bunch of built-in ones such as the exchange, the ticker, the close, volume. Things like that are already built in, whereas the custom values that you want to use, we are going to have to reference their plot using the plot ID. Now, it's very important that you remember that you're using the plot ID, not the plot title or any other combination of possible inputs you could possibly have here. It has to be plot underscore the ID of the plot, and the plot ID is determined by the order in which it's plotted. So now we can actually look at the code, because now I kind of have to explain what that means. What we're going to be looking at is we're just going to be looking at the RSI and just a simple EMA, a 3-period EMA of the RSI. And I have got this set to where it's always going to be true. We're always going to get an alert whenever TradingView processes these alert conditions. And that's just because we're doing this example. And I've made sure to comment in here, remove this line if you're going to copy this code, because this will always make this create the alerts constantly, no matter what you're doing. Ideally, what you would do is something like this, creating a Boolean and assign that true or false based on some sort of conditions. And in this example, it was, I wanted the RSI to be less than 30, the RSI of the previous candle to have been less than 20, but the current RSI is greater than the last RSI. So basically, the RSI was really oversold and it's moving up now. It's a really simple example, but it just kind of gives you an idea of what you can do. You can even compare different indicators, all kinds of stuff. If you want ideas for that stuff, please go back and look at all the other videos in this series so far. We've covered a lot of different stuff, and if you want to combine different indicators, there's a lot of great resources in those videos. Now, we are always going to have an alert, but I told you we need the plot IDs. So the first thing we're going to be doing is we're going to have to plot this information on the chart. Now, we are going to plot our EMA, our exponential moving average of the RSI first. And we're going to call that the plotted smooth RSI, and it is the blue value on the indicator here. Now, that would be plot ID 0. And I probably should have added this earlier, but that gives you the idea. This is a 0 indexed based array that they're using to do those custom messages when they're looking at the plots. Apparently they add the plots to the chart as an array, and the first plot is 0 indexed, so it starts with 0 when you're trying to reference it. And this would be plot 1 because it is our second one in the 0 based index, so it would be number 1. Now, just to further illustrate that, we're going to call our alert condition. We're going to tell it whether or not it should be triggered, and we have it set to our Boolean value, our alert, from back here. We have it set to true right now, but ideally, like I said, you would have this set to some sort of condition, multiple different parameters that you would use. Maybe you're just looking to see if the price went up from before. Something like that. You need to be watching for whether or not your conditions are true or false, and you place that true or false value here. Then you can create a title. Personally, I like to order those by number so that when you do look at them from the drop down, you can actually have those populated first. I haven't tested this yet, but if you started it with the letter Z, they might show up at the very end of this list. So it's, in my opinion, a good idea to just number them for yourself. Now, like I said, to further illustrate this, plot 1 is our RSI. You can see that here. And you can also see we're referencing plot 1 with the placeholder in the string. Now, you don't concatenate strings here. In the previous video, we concatenated strings in functions so that you could change securities. With the message, if you try to call a function such as toString and the RSI value, it won't let you save the script. So don't waste your time. I tried that plenty of times to figure this out for the first time. And you also can't put in the values themselves. So this is how it has to be done. You have to call the plot. If you wanted to, maybe reference something that you didn't want to show on your indicator, you could actually plot that value and just make it set to its transparency, having a 100 transparency, which means you can't see it on the screen, but it's still being plotted. And you might still be able to interact with it when you hover over it, and you could probably see the values over here on the indicator. But if you didn't want to see it on the indicator, but you still wanted to reference it in the message, you would just create another plot, a plot 2 here, set its transparency to 100 on the plot. You wouldn't be able to see it up here, but you would be able to reference it in your message as plot 2. That's just another example of how you can add more information in here. Now, these don't have to be just the single line, just one different value in here. If you wanted to, you could do multiple placeholders. You could do the RSI is equal to this, then you could do space, current price is equal to the placeholder for the close, and really you can do whatever you want. You can even do calculated values, but like I said, in order to do that, you have to plot those. So that's essentially what the EMA, the first one, is here. That's another calculated value based off of the RSI. So maybe we wanted to see what the absolute value of the MACD was for whatever reason. So if it was a negative number, it would actually be positive now. I mean, you could do that, but you have to plot it first on the screen. I can't iterate that enough. That's the most important thing. And then reference the correct plot ID. And I hope this all makes sense. It's really not that hard once you do it. But like I said, this code is available on my TradingView profile. And you can see that here. There's a link in the description of the video. Go check that out. You can click that, and I'll probably update the code just a little bit with some of those comments I added during the video. But I hope you appreciated the video. If you have any questions, please leave a comment, or if you have any other indicators or functions or anything related to TradingView and PineScript, please leave a comment and let me know what you'd like to see. Otherwise, please like the video, subscribe. All of those things help me quite a bit. And definitely, if you like these videos, you probably do want to subscribe, because there are going to be plenty more. There's going to be other video series coming up. Lots of things coming up on the channel. So thank you very much for your time, and have a great day. Hey, this is David for BigBits, and in this video we're going to kind of continue off where we were last time. I haven't made any changes since the last video. I'm actually recording it immediately after the last video, so hopefully nothing has actually changed. What we're going to do in this video is we're going to continue working with our scoring model, and we're going to add a new indicator to the scoring, but we are also going to be adding another condition, another way to add points, just to show you that there's more than one way to do this in a single time. Now, you could also use functions, but we're just going to do it all in line. It's going to be pretty simple. Hopefully you can follow along and keep up, and eventually this will all be posted on my TradingView profile. And stick around and you can get more information on that at the end of the video. Now, first thing I want to do is actually kind of clean this up a little bit. I'm going to essentially name this region of code indicators. I don't like all these line breaks, these empty lines I should say. And what we're going to do is we're actually going to go ahead and add our new indicator. I want to use the stochastic indicator, and to do that we're actually going to need 3 different variables to save that information. We're going to need the stochastic, and that is going to be set to another built-in function. And we have to pass in the following parameters. Now, if you're not familiar with stochastic, there's plenty of information out there on that. on how the calculation is done. I believe there's even a TradingView wiki post on it. I'm sure you can check Wikipedia as well for how the stochastic is calculated. But in order to match what's on the TradingView indicators, we need to use the calculation just like this. And we're going to use built-in inputs, hard-coded values for the settings for it. So we need to also have the stochastic D, and that is going to be a simple moving average of the stochastic. And double check that. Yes, that is correct. And then we also have stochastic K, and these might be referred as different things on different indicators or different versions. Excuse me, different versions of the stochastic. But this is actually, I got that backwards. I believe K should be the fast one, and D should be the slow one. My apologies about that. So that's how I believe that they are done. If it's not how you're used to, then I apologize, but that's how we're going to look at things. Now, let's go ahead and plot these values as well so that we can see what we're going to be getting into. Well, we don't need to plot the stochastic itself. We just need to plot the stochastic K and the stochastic D. All right. Let's go ahead and save that. Oh, no. What did I mess up? Oh, of course, I didn't give it a value. There we go. Hopefully that takes care of it. And it did. So let's go back to our indicators. Let's look at the built-ins. Let's use the stochastic that's built in. This is on TradingView. This is their built-in value. Let's skip to the end here. Make sure our numbers match. And 63.15 on our indicator and 63.15 on the stochastic. You can see those values that I'm talking about here and here. That's where they matched. We'll go back to the end. You can see 63.15 again. And the next number over is also 44.96 on both. So our K and our D are correct. The fast line, which is the blue line on the TradingView, is the one we call the K. And the slow line, which is just a simple moving average of the fast line, is the orange line on the built-in here. So I'm actually going to leave that up here because it might make a little bit more sense later on. Let's go ahead and remove those plots since we know those values work. And we're going to create another batch of points for this. Call that the stock points. And let's do the same thing that we did with the RSI. Now, if you haven't watched the previous video, I really recommend you should, because it's going to make this whole thing make a lot more sense, I believe. I know it's a little bit longer than normal, but you'll kind of understand the concept a lot better if you're kind of having a hard time with this particular video. Now, once we add this indicator, now we can add the points to it, and what we're going to be doing is exactly what we did with the RSI, except we're going to have a little twist. Now, the RSI, we gave it 1 point for every point it was below 35. If we did that with stochastic, you can see we did that. It would have been worth more points the further it went down. Excuse me, I lost my train of thought there for a moment. Anyway, as it goes down, it's going to be worth more points. Now, I said there'd be a twist on it. I think that's actually in the next video. I apologize. I kind of get ahead of myself here. There's a lot of really cool stuff going on in this one. So let's look at the stochastic K, which is the fast one. We want to give it points as soon as it goes below this value. We're going to keep this value at 35. So if the stochastic K goes below 35, we're going to return 1 point for every point that indicator is below it. So do 35 minus the stochastic K. All right, excellent. And if it is not below the stochastic K, we're going to return 0 points. Now we need to make sure we add these new points into our total points. Very good. And let's save that. Now you can notice things look a little bit different. The values go considerably higher compared to what they were before. Let's take a look when the stochastic gets really low here. Alright, so we can see where are we below 35 on this particular candle here. Alright, stochastic K, which is the blue line, is 8.17, so 35 minus the 8.17, what's that leave it at? 26.83. Alright, so it's going to at least be 26.83. even if the RSI isn't that low. So yeah, and it's a green candle. So that was give us 3 more. So you kind of get the idea. It's worth more points the lower it goes. And of course the RSI is lower. Let's go ahead and add the RSI because it's going to help make things look a little bit better. Let me go to my scripts actually. Add that one back in. All right, excellent. So on that candle, the RSI was not below 35, so it gave us 0 points. The blue line on the stochastic RSI should have given us 26.83. Now you can see the on this value. I want you to pay attention to this number here. When I put it back on that particular candle, you'll notice it ends in 0.83, so that means we calculated the last 2 numbers correctly. And if I'm wrong on the 26, maybe it should be 27. I'm not entirely sure, but we're going to add, no, 26 is correct. So we're going to add 3 points because this one, let's zoom in even further here because it's getting kind of hard to see. It was a green candle, so that was 3 points. So 26.83 plus 3 is 29.83. So how did it get 3 more points? Well, the SMA was moving up. You'll notice the SMA value is up here. Right now it's in A, but let's see where we were. We were right here. All right, it's 85.59. If it was below that on the previous candle, it should have added 3 more points because it was trending up. And it was. It went up 6 from that candle to this one. So we got 3 points for that, 3 points for being a green candle, no points for the RSI being below 35, and we got 26.83 for being below the stochastic value of 35. So hopefully you're able to follow along with all that. It shouldn't be too much if you watch the first video. But if it is, please let me know in the comments, and if you have any questions, I can answer those for you. But essentially, we're just giving more points to our new indicator the lower the stochastic gets. And I'm going to leave the stochastic up there because I'm going to end up using that in the next video. But for now, we're good with the stochastic. We don't really want to do anything else with it in this particular video. Now, one thing I also said I was going to do is we're going to look at multiple ways to add points to the same indicator. Now, in this indicator so far with the simple moving average, what we have done is we have added 3 points to every single candle that the SMA is moving up. So when you're in a long uptrend like this, they're all going to have this kind of base value of 3 points because they're all in this upward trend. Now, one of the things you may want to do is spot when a crossover occurs, and that is well, when the indicator changes directions, I should say. It's similar to a crossover, except it doesn't really cross over in any other lines. What it's actually doing is it is changing directions. So it was going down, so when it changes directions upward, then we will give it more points. Now, with a simple moving average, this may not be the best thing to do. Ideally, I would use a much quicker moving average, but this is all just for an example anyway. So let's go ahead and add that in. Let me take a look at my code. I've already got done, so I can make sure I do this correctly. I don't want to waste anyone's time here. So we're actually going to add these points onto the existing ones. So we're going to keep it to where there's 3 points if you're in an uptrend, but we're also going to add more bonus points, and there'll be more on that in the next video. But we're going to add bonus points for if it was a crossover candle as well. Now, this is very unlikely to ever happen on a candle that has a lot of points, just because we're looking for low RSI and low stochastic values. So adding these bonus points on one of those candles probably isn't going to occur when the stochastic and the RSI is low. That's just kind of how it's going to work out. But just for the example's sake, let's go ahead. And the first thing we're going to do is we're going to come up with our condition. It's a 2-part condition. And we're going to check if the SMA of the previous candle was less than the SMA of the candle 2 periods back. Now, the reason that's important is we are checking if this candle, its SMA value, is less than this candle's SMA value. So in this instance, that's true because it went down from the second candle back to the first candle back. So that part of the condition would be true there. And now we actually need to check if the current SMA, and I just realized I haven't capitalized any of these, and it's not going to work unless I do that. Let me fix that really quick, and then I'll explain this condition again. All right, so now we need to make sure that the current simple moving average is greater than the previous moving average. And there I go, making it lowercase again. But it makes perfect sense. Your newest candle, oldest candle, newest candle, oldest candle. And this is how we detect that the SMA changed directions. It was heading down, now it's heading up. And you have to make sure that it moves down here, up here. That's all there is to it. You might also want to look into adding the less than or equals to on one of these sides, or just having the equals to as well on one of these two, just to make sure you catch all the possible options. But chances are it's not going to be equal to in any case. So that's just something I've noticed, and we'll go ahead and take a look. I've put parentheses around these to combine these two conditions just to make sure I see it cleanly. That's just one of my habits with my code. Now, since we've checked both of those conditions as one, they both have to be true. And that means we've checked for our trend change on the simple moving average, so we can give it points. So let's actually give it 5 points for the trend change, and if it's not changed, then we give it 0. Now this is only going to happen one time whenever the trend changes direction. So if it goes down then up, it happens. If it continues to go up, it does not continue to give it those bonus points. Let me change these values to match what I have in my example, because I want those to match so everything turns out the same as what I've started working with. Now we didn't have to change anything with our total points because we're adding this onto our SMA points when we're doing these condition checks. So everything's kind of done in line here. It's completely taken care of. So let's hit save. All right, so you'll notice just kind of out of nowhere here, we have the SMA moving up because we have a random jump in the points here. It's got 15 points. I can tell you just by looking at the chart, the RSI is probably not low enough to qualify for points, and the stochastic definitely is not low enough to qualify for points. Let's zoom in on that particular one if I can find it now. Where was it? Of course, now I'm not going to be able to find it. I think it's this one. I'll zoom in a little slower. My apologies. Okay. It's got 15 points, and it's got 5 points for being green now. We changed the point values. It's a green candle. It gets 5 points for being a green candle. The SMA points, it gets 5 points for being in an upward trend, the first part of this, but it also gets 5 points because the trend changed. The SMA went from moving down to moving up. So you'll notice in these light gray values, it's going to be really hard to read. So let me see if I can't change this to a different color and give you an idea of what it actually is. Yeah. All right, so now you can see those numbers a lot more clearly in the yellow. On this one, it went, actually on this one, it went from 10,418.88 down to 10,414, and then it went back up to 10,420. So that was our trend change right there. SMA down, then up. And that can happen a lot as the price goes kind of sideways here. So it's just something to keep in mind. That's why I said this probably isn't really ideal. So that pretty much covers it. I've shown you how to add another indicator in here, one that's multiple parts. And then I also showed you how to do extra conditions and give more points on a single indicator if certain things are true with it. Now, that pretty much covers it for this video, but there is one more video, and it's going to cover some really important topics for PineScript. And the first one is the loops. I haven't covered loops yet in any of the videos, but we're going to be looking at loops, and we're going to be using the loops, as I've mentioned in the last video and this one, I believe already, to try and capture these moments where we've already got a lot of points, but the price continues to go down. So what we're going to do is we're going to look back with a loop and see if our price is still going down and continue to add points so that we don't have this huge dip here And even if we bought as the price continued to go down, as the points accumulated quite high, we would also end up having the points continue to grow as the price continues to drop. And I'll take a look at one way we can do that in the next video, and that's by using the loops. Now, the other thing we're going to take a look at, I believe that's mostly it, but there's also one other thing. We're going to look at self-referencing. So what we're going to do is we're going to keep these points as a base value, and we're going to add bonus points as well by working off of this value. So we're actually going to have two lines on the chart. We're going to have our base points, and then we're going to add a second line that's bonus points, and just kind of show you what's going on, where we're getting more points for the price, or for our points to have stayed at a high level for a long period of time. That's essentially all there is here. And that's it for the video. Thank you. If you like the video, please leave a like. If you like these types of videos, please subscribe, especially because you're going to want to see the next video. We are going to publish this code once it's complete onto my TradingView profile under the script section. I already have quite a few. We have quite a few followers and likes already. This stuff's still growing, so please check it out. If you haven't already, go on and follow me there so you can see when this particular indicator is going to be published. Now, keep in mind, this is all, this indicator is just a complete sample. It's just an example of what we're going to do. And even when it's posted, you're going to have to apply your own indicators to it. And if you need help with that, you can feel free to ask me questions. But that's it for now. And thank you and have a nice day. Hey, this is David for BigBits, and in this video we're going to take a look at using gradients when we're doing our fills between our different lines on our plots. And in the last couple of videos we talked about doing fills between two different lines or two different plots, and they have been rather basic, and some are based on different conditions on what color they should be. And I've kind of carried the idea of the conditional fill over, maybe not so much with when the fill shows up like we did with the RSI, but the condition of what color it's going to be. But there's also another condition that we're adding on here, is what color the fill should be within that particular candle. Now, this isn't something that's terribly easy to do if you're trying to figure this out on your own. I played around with it myself, but there's a group of people called Pine Coders. They have their own website, and they have a lot of great resources on Pine. And I'm going to show you something that they did that I learned a lot about for the gradients that we're using here when I decided to look at the gradients. Now, you'll see they have a public script. Now, there's a link to it in the description of the video, so if you're curious about that, you can go down and see that now. While you're down there, like the video, please. But what they're doing is they are returning a hex color value, and this is an alpha RGB, so it returns a red, green, blue, and an alpha value, which is transparency value essentially for a color. And you use hexadecimal values or whatever the mode is here. I believe it's hexadecimal, but anyway, you return this color code instead of actually telling it a color like color.red like we did in the past. We're going to use this code. We're going to use these functions that they created to return a color code. Now, the functions that they have return a different color code based on the number you put into the function. Now, if you're having a hard time reading this code, it's likely because they use their coding standards that they've come up with, and if you go to their website, they actually have a page dedicated to this, and I'll link that in the description of the video. We'll cover this a little bit later about what they're actually doing here, but if you've been following me and you're not an advanced or an intermediate programmer by any means, it might be a little bit harder for you to read than looking at how I've done the code in the past, to where it's a lot more simple and straightforward to where we're using, full words instead of, lowercase, underscore, and then different, essentially code words to help developers know what they're actually looking at. So what we're taking from this, we're not taking anything else. What we're going to be taking from this one is the function for the lime color and the red color. And when we pass in a number, we're going to pass in anything, well, essentially any number, but what we're really wanting to focus on is the numbers 1 through 10. Now, anything above 9 returns this particular color. Otherwise, we start looking for the other ones. And what we're going to do is we're actually going to repeat. So we're going to go through the list, and then we're going to circle back through the list while it's supposed to be green. We're going to do the same thing with red. So the first thing I've done is I've created our script over here. You can see we have this repeating gradient. There's nothing special about it that's related to the actual script we're working with. There is no real value in the color here other than it's green or red. It just is kind of aesthetically slightly more pleasing, I suppose, than if it were just red or green. So let's go ahead and take a look at the script here and slide this up. So you'll notice I have pulled those functions over. We aren't going to be using any of these, so you can just kind of ignore those. I just wanted to show you we replaced well, we've copied that code over from this one, and this is in the script. I'm not going to publish this script because, like I mentioned, I'm putting a link for their actual script in the video description, so you'll be able to get to the content that way. So what I have done to get it to repeat and use these different values is I have actually focused on using the values that it is focused on, 0 through, well, 1 through 10, I should say. And what I'm going to do to repeat it is we have to start with 1, count up to 10, and then once we get to 10, we need to start counting down back to 1, and we need to loop that over and over every single candle to make this nice repeating pattern. Now, the first thing we do is we create a float called the color value. Now, I use cval for the color value because this is going to return either our numbers 1 through 10. Okay, it's going to return either of those numbers 1 through 10. And we also come up with another one called float direction up. Now, there is a reason I use up, and this is a float instead of a boolean, and that has to do with how the script works. So the first thing we're going to do is we're actually going to carry over those values from the previous candles. So if it didn't exist before, then we're going to start it at 1, and otherwise we're going to return the previous value. So now that we know the direction we were going and the value of the previous candle, whether it was 1 through 10, we can start with our actual logic of looping through this every candle. So let's go through here as if it's the first time running the script. We have a 0 and a 0 here. So the first one, okay, nothing actually exists, so the first value is actually going to be 1. And that means that our color value is going to be 1. So when we call the color value function, it's going to return this value because it is not greater than 1. Now, the direction up is also going to be 1 on the first candle because it didn't have anything before it. So it's going to start counting up with the value 1, and let's see how that actually works. So first we're going to check if the direction is up. If it is up plus 1, is that greater than 10? Because if we're counting up past 10, it really does us no good. We need to turn around at that point. So if it is, we set our value back to 10. We leave it at 10, but we change our direction to 0. Then it's just going to break out of this, and because it uses an else statement, and then it's going to go down, it's going to plot our moving averages, so the top and bottom lines here, not the fill. Then it's going to, of course, like I said, it's going to plot those, and it uses this color code for it to be fully transparent, so you don't actually see it. You don't actually see the color of the actual lines going around it. Now, we call our fill function, but where we would call our color, we're actually going to be doing a conditional statement. So if our MA1 is greater than MA2, it's going to be green. We know that. So we'll call our green function, but we'll then pass in our color value into the green function, and it's going to return the proper color based on where we are at in the loop. So that's how we get the colors to change from nearly transparent to very opaque back to transparent again. And of course, the opposite would be true if we were counting down and we subtracted 1 and that would have been less than 1. Then we stop it at 1 and we change the direction. And otherwise, if there isn't a need for a direction change, you just continue adding on to the color value and you keep the direction the same, or subtract and keep the direction the same. So that's pretty much going to cover it for what I wanted to talk about in this video. I wanted to keep it kind of short because in the next video we're going to continue on with the gradients, but we're actually going to focus on a slightly different approach than what the pinecoder function has to actually tell you how strong the current fill is compared to previous fills. So what we're going to do is we're going to look at the maximum percentage change since the crossover, and then comparative to the maximum fill distance. We're going to then calculate the percentage transparency it needs, and with that transparency, then we can, keep it this more opaque color for longer here, and then once it starts to get a bit more narrow, be a little bit more transparent. Then if it were to get wider again, it would get more opaque as it would approach the maximum width of the fill. So it's very similar to what they have here, but I believe it's a bit different because they focus on using a center line, and honestly there's a lot going on here where it's really not entirely necessary in my opinion, and it's kind of intimidating for those of you watching. So I definitely want to give them credit for posting this and all the great resources they have available, and definitely check out those links for them in the description. Otherwise, you can also check out my TradingView profile where I have a lot of scripts posted. You can see there's several down there. We've got quite a few followers now, so check out the TradingView profile. You can see all the scripts we've done in the tutorial series. So if you like this video and you like the PineScript tutorial stuff, definitely check out those videos, but please subscribe because you're going to get notifications when there are new tutorial videos. And I also cover some other things such as other crypto related projects because I'm a fan, and that's what I like to do on this channel. But thank you for staying around, and if you are and you have been following the channel and you're still thinking about getting a paid subscription to TradingView to unlock some of their features, please consider using the promo code in the description of the video so that you can get $30 and I can get $30 as well towards an upgraded plan when it comes time for me to renew. And then of course that also helps you as well. But other than that, I think that's it for this video. You can look forward to another one very soon, and I thank you and have a nice day.
Hey, this is David for BigBits, and in this video we're going to go over our 7th script in our PineScript tutorial for TradingView development. And in this video we are actually going to discuss different resolutions. And this isn't, like a New Year's resolution. In TradingView we are talking about a resolution as far as what we are looking at, kind of like the display resolution on a monitor. So in TradingView terms, this is usually what time frame you're looking at. This is what they refer to as the resolution in their documentation. So you can see the different resolutions available. Some of these are only available to pro accounts or premium accounts, so be mindful of that. But what we're going to do in this video is we're actually going to set our moving averages that we've been working on to be able to be calculated based off of a different resolution. And by that I mean, well, let me just show you. So in the chart here, we have three lines. We have a green, a yellow, and a red. Now in the past, by default, these have been the 50 period, the 100, and the 200. Now I've decided to do it a little bit different since we've added resolutions. We're looking at a 4-hour chart. The green line here is a 50 period. Let me pull up these settings to make it a little bit more clear. This is a 50 period using the current resolution, which is the 4-hour. Now the yellow line, it is actually the 200-day moving average. You can see we set the period to 200 and the resolution to 1 day. Now I'm going to explain how this works in just a moment, but you can also see the 100-week moving average is the red line here as well, because we changed the resolution to 1 week. Now, why is this important? Well, just look at this chart. You can see where it can be helpful to look at different resolutions on a single chart. So if you're looking at trading on a 4-hour chart, it's probably a good idea to be mindful of daily and weekly trends. I guess just a general bit of a helpful hint, I suppose, is that when you're trading smaller time frames like 5 minutes, 15 minutes, it's, I think in my opinion, a very good idea to look towards larger time frames for the overall trend that you're working in. Otherwise, if the daily were to dump and you were thinking that the 15-minute candle looks really good and it's going to go up, so you bought it, well, the daily trend is fighting against you, and it's a much larger trend than anything you can find on 15 minutes. So that's definitely not real financial advice. It's just something I've seen from experience, okay? So just keep that in mind. And you can see on this chart, we're looking at a 50-day moving average going down, which if you look recently, this looks like it's been acting as resistance, okay? Now, I have made some live stream videos here, and I've talked about the Bitcoin price, and I mentioned the 200-day moving average. And I said once we first broke out of this consolidation, I was looking for a target of the 200-day moving average, because typically in the past, it has held as support in various occasions, and it did. It held as support. Even though the price did wick below, it held as support for some time. Then, once it was broken, it acted as resistance, and that happens fairly often in trading. Is when you have a support get broken, it becomes resistance. Now, that's what we're trying to use these moving averages to determine. I can't tell you how to do that. That's entirely up to you. But just looking at this chart, it looks like there's a pretty good pattern there that could show you where support and resistance may be. And then, of course, finally, there's also this 100-week moving average, which it touched once with the wicks, and then again later on, and bounced off of it. So it appears, based on this chart, that the price is pretty much stuck between support and resistance, and it's likely in a range. So that's how I would use this indicator, but you're more than welcome to use it however you want. It's always important, in my mind, to keep these larger time frames like the daily in mind, like I've mentioned, because they are much more important in the grand scheme of things than the 15-minute, like I mentioned. So let's continue into the code now that you've seen what you're getting out of this. Now, well, there's one more thing I forgot to mention, the forecasting. You notice there's no forecasting on the different resolutions. This is due to the way the forecasting works and the way it's plotted on the chart, and I'll probably explain that a little bit better. But when you change the resolution from anything other than the current resolution, it's not going to show up, and I'll explain that later, but there's a very good reason for it. Now, let's get into the code. Really, everything is the same going down until finally, when we want to actually calculate our moving averages, things are a little bit different. And one of the things I had to do for this was I had to create a function to help us determine what resolution we're working with. Now, you'll notice on the inputs that we had that the resolution drop down had these numbers, and then the resolution that you're actually wanting to work with. And the reason I did this was because if we just listed these all like this, they would be completely out of order from what you would expect, okay? And we couldn't have had the current on there if we just used the built-in resolution type. Now, a lot of charts, or a lot of indicators, I should say, that I've seen that have the ability for you to select the custom resolution seem to have been based on the idea that you would use the resolution enumerator that's built into PineScript as the input option or the input type. Well, I'm actually using a string. That way we don't have to have a checkbox if you want to use the current and then also have a drop down for all the other options. I think it's a little bit cleaner and a little bit friendlier for the user to only have the one drop down and just have it default to current for them. So how do we actually accomplish getting the correct resolution out of this? Like I said, we have a function and we pass in our resolution. I'll get into the rest of this in just a moment, but the resolution codes first. So let's go over that. To determine what resolution is, all you do is you call the resolution function and you pass in whatever the moving average resolution was that was selected from that dropdown. Since it's a string, we're going to have to compare it to what we would expect. So, well, let's go back up here. One more thing that's slightly different. We had to add the options and the input for the resolution. I said everything was the same. My bad, it wasn't. We actually added an input for the resolution on these, and we had to have the specific options declared. Otherwise, you could have set the type to input.resolution, I believe. And this is why I said we went this way, so we wouldn't have to have a checkbox to make it use the current. Okay, back to where we were. We have the default value set here, and we've passed whatever they've selected in as their input into the resolution function here. And it's going to go through and check each condition that we've identified. And if it has current, it's going to use this contextual information and contextual or metadata, however you want to call it. This is just information about the chart that we're looking at. And this is the period of the time frame for the chart. And it's kind of confusing. They use the word resolution, they use the word period. Other people just say time frame. So there's several different words, and you're really just talking about the candle length. So just keep that in mind. And then we got to return appropriate values. Anything under 1 day is measured in minutes. You see 1 minute is just one. But once you get up to 1 hour, the value that it's expecting back is 60 because it's in minutes. And then 4 hours is 240. Once you get to days, you have to have the 1 and the capital D. And it'll know that that is the 1 day resolution, and so forth with weeks and months. Okay, so let's get back into the actual moving average calculations. And in order for us to do it based on a potentially different resolution, we have to use what's called the security function here. And this is going to use information we pass in to calculate the moving average on that particular security. And the reason we would do that is because if it is on a different resolution, it might not be the one that we're looking at on the chart. So some more contextual or metadata information about this particular chart is the ticker ID. Now it's usually this information up here. For us, we're not looking at any other type of security. We're only focused on the data in the chart. So say, for example, you actually wanted to change what chart you wanted the moving average from. Say not only did you want to set the resolution to 1 week, but maybe you wanted the 1 week or the 50 week, I should say, moving average on gold. If you knew the ticker ID for gold, you could pass it into security and give it the appropriate resolution and MA information, and it would calculate the 50 week for gold and put it on your Bitcoin chart. I mean, they already have ways to do that using the compare feature, but this is another way that you could do that, although the compare, I think, uses the same resolution. So this way would allow you to look at different resolutions on different securities. Now, I haven't tried that, so I can't say for sure that works. Maybe we'll try that in the future here, but that's what I would expect this to work. And we can look at the information on security. You can see how that is expected to work here. Close that. All right. So yeah, you can see how this is expected to work. Get all the information about it, and I'll just tell you, there's a lot here, and it's not really that hard. What we're dealing with our script is the moving average mostly. this is probably the most confusing part, but when we call the security function, I've already told you about the ticker ID. I've already told you about the resolution. Now we also have to tell it to calculate our moving average based on that moving average information. We've already done this in the previous video, so we don't have to rewrite this. You just have to know that in order to return the value for the moving average of that security, you have to put that expression here in order to calculate that. Now, that might be a little bit confusing at first, but the code works, so you can see for yourself. All right, let's see what else we had here. I know there was a couple of other things. Oh, I did want to discuss the forecasting. That was the other thing that was really important. We talked about the forecasting in the last video, but it's as I told you earlier in this video, it's not available when you change the resolution. And the reason I did this was because, and if you've watched the last video, you'll understand this a lot better. So if you don't know what I'm talking about with forecasting and how that works, please go back to the last video and watch that, because it'll explain this way better than I'm going to do right now. But essentially, when we're forecasting these values out ahead, we're always calculating the next value out on the current chart. So it's very easy for us to calculate the forecasted value of the next daily moving average. But the issue is we're on a 4-hour chart, so we would have to determine exactly how many spots on the x-axis we would need to offset that value. Now by default we just do the 1 because we're only looking at the current chart, but the flexibility of this particular indicator makes it a little difficult. We would have to do some sort of calculation to determine how many offsets it would take. And even then, if you're looking at smaller resolutions, say for example you wanted the 5-minute moving average on the 4-hour chart, how are we supposed to do that? There's many sets of 5 minutes within 4 hours. You can't display that on the x-axis here appropriately. So that's why they're not on there. It's pretty straightforward actually, but it'll make a lot more sense if you're having a hard time following me now. If you've watched the previous video, like I said, it makes perfect sense to me because I'm the one who wrote it. But if you don't understand, watch the last video. It'll probably make a lot more sense once you understand how the forecasting works in general. But you know, I think that's it for this video. We've got pretty much everything covered with the forecasting. Now, if you want to see this indicator go in a different direction and you want to see more features added, please leave a comment. Let me know. You can always check out my TradingView profile and see all of the different scripts that I've published. I recently published a smoothed RSI script, and if you're looking at this, the pictures may be different because the code can change. We can add and remove features over time to make these indicators even better, or to remove features that weren't necessary, whatever it takes. Leave your feedback. You can leave it on YouTube in the comments, or you can leave it on TradingView when you reply back to these particular scripts. And I also post ideas here as well. I've been busy working on the script, so I haven't had a lot of ideas posted on TradingView, but we'll get there. We're building more content, and we're working on this series. So that is it for now. Thank you very much for watching. If you like the video, please leave a like on the video, of course. Subscribe if you have liked this video as well, because I'm going to be doing a lot of videos related to this same sort of information, usually some sort of trading related development, and most of the trading is related to crypto, of course. So please subscribe if you haven't already. Thank you and have a good day, and hopefully I'll see you in the next one.
Hey, this is David for BigBits, and in this video we are in our 8th video now of the TradingView Pine script development tutorials, where we have created a triple mini moving average indicator and we've added all sorts of features. In this video, we're going to add in ribbons. You can see this on the screen here pretty clearly. There are other lines between the ones we have done in the past. So these kind of give you an idea when moving averages are kind of converging, and basically help you find a knot in the price. And usually, well, in some cases, price action can follow when the ribbons can get tight. It's just another way to show you some of the features here and a little bit of the math. Originally when I wanted to do this video, I wanted to go over loops, but I found the best way to do this was just to go without it and use a little bit of math instead of looping through and just calculating the difference between these. Now, what I was thinking of doing was just creating a ribbon based on the difference of the price from here and here, but instead what I did was I calculated a relevant period. So I had 5 lines between MA1 and MA2, and what I did was I calculated how many periods would fit evenly in here if I wanted to show 5 lines, and I used the periods to run the same MA calculation. Now, there's a little bit of a downside to that, but the ribbons aren't a super flexible thing like the other things we've been doing. There are some settings that we have for it. Let me go in here and show you. This is the styling settings. Just a moment. There's really only one setting for the ribbons, and that's just to show or to hide the ribbons. So if you have the indicator added and you don't want to see that, just turn it off. Now, one of the other limitations, and I'll go over why this is a limitation later, is that if you change either the type, the source, or the resolution for any of the moving averages, it'll get rid of the ribbons between it and its next associated moving averages. So if we change the MA1 to an RMA, you'll notice that there is no ribbons now between the green and the yellow line like there were before. That's because it's just calculating the midpoint. Now, if I had chosen to find the difference between those and just average out the price, then it probably could have done it, but it wouldn't have made a lot of sense in my opinion. I like the fact that it's different periods and that the ribbons can actually go out of bounds of the other moving averages that are in here. And that might not make a lot of sense if you're not too familiar with it, but it is the truth here. So change that, it'll get rid of it. Also with the close, because if you're calculating a moving average for all of these different lines, if you change the source for the data, then if this one doesn't match this one, how's it going to know what source to pull for the data here? And I didn't want to just assume. And the same thing goes for the resolution. Alright, so now you've seen kind of how this works. You can see we've color coded it. It looks pretty nice in my opinion. So let's actually take a look at the code. If you're following the tutorial series, that's probably why you're here. So let's scroll back up to the top of the code. The first thing we added was another input for showing the ribbons. This is going to default to on this particular one. This is scripting tutorial 8. So you won't find this on the scripting tutorials before that. So you'll find that new here. And then let's also go down. I did want to mention there was a tiny error, not really an error, but more of a typo. On the plot titles for the forecasting, they were just labeled incorrectly. I fixed that in scripting tutorial 8, so if you're following along and you noticed that earlier, good catch. Alright, so now we are on to doing our ribbons. Now, I like to make my code very flexible, and ideally, like I said, I would like to use loops to calculate these values, because as you can see, there's a little pattern right here, and I increment up 1 every line here for each ribbon, and that's pretty ideal for a loop because I only have the one number that changes. The problem is that the plots don't like to operate within the loop, and it really doesn't really save me much coding resources to convert these 5 into a loop, whereas since these can't do it, it doesn't make much of a difference in my opinion. So I just left these out of a loop. I think eventually we'll get into a loop video if you're curious about those. It is in the PineScript reference manual. the for loops are, so you can go out and find that there. But you'll notice we calculate these values. Okay, we're doing the same thing we did before. We have to tell it the security so that we can give it the correct resolution. And we're going to use the type, source, and a new function that's called the ribbon period, or it's kind of abbreviated for it. It's R period. And this is how we're going to calculate what period we're going to use for these different ribbons. And this is what does all the magic of deciding how it's going to calculate the specific period. And we pass in the MA1 and the MA2. So we're doing ribbons between MA1 and MA2 first. And then this, okay, so these are the variables, the inputs into the function here. The next one is the step. So this is just the ribbon count, essentially. This is ribbon 1, 2, 3, 4, 5. That's really all that's for, but you'll see why it's useful in a minute. And then we also have the input for ribbons, which is how many ribbons there are total. And that's also going to be pretty apparent why we need that in just a moment. Now, that takes care of calculating the MAs, but how do we calculate the ribbon periods? It's really quite simple. It looks pretty complicated, but it is not. The first thing we want to do is we want to find the difference between period 1 and period 2. Okay, I'm actually going to break out my whiteboard here because it'll make a little bit more sense when you see the math step by step. It's kind of hard to see it when you're looking at a bunch of parentheses and you're trying to remember PEMDAS from high school, if you're out of high school, that is. If you haven't had an algebra class, then you might not even know what I'm talking about. So we're going to find the difference between period 1 and 2. So when we're looking at MA1 and MA2, that is actually 50 and 100 in the default values. So it would be 50 minus 100. And I hope you can read this. Okay, yeah, I think that looks right. Maybe. I'm not sure. But 50 minus 100, I'm just going to step through it if it doesn't turn out right, if the text is backwards in the video. Oh well. We're just kind of going through this out loud here. So we have 50 minus 100. That's actually a negative 50, okay? So the reason it's negative 50 is we're finding the difference from a smaller number to a larger number. That's why we use the absolute value. This way the difference is measured as a length, and it's always a positive value. So it's actually a positive 50 here. Now, we take that number, 50, and we divide it by the number of ribbons that we have. And if you'll remember, the ribbons were the last input here, and that's 5. We wanted 5 ribbons between here. But the thing is, if we just used and divided by 5 here, we would actually have our 5th line end up being on the other moving average. So we have to add 1 to it so that we have 6 groups. And it's going to be hard to see, but you'll have 1 area, 2, 3, 4, 5, 6. And I know it's really hard to see. I'm not zoomed in enough, but trust me, that's how it works. That's how the math goes here. All right, so now we divide that 50 by, in this case, 6. Okay. So let me pull that up and do that really quick because that might have a rounding in there. Yeah. 8 1/3. It's probably going to round down because I don't think you can do fractional periods on here. So we have 8 now. All right. But if the period was just 8, then it wouldn't be here. You know, we would have it much closer to the actual price if we were looking here if it was just 8. So we actually have to add the ribbon in for this. Now, to get them to show up between each other, to get them to be the appropriate value between them, we have to add the minimum value between period 1 and period 2. So in this case, it is 50. The minimum is 50. So we have 58 period moving average, which is this line just under the thick green line. That is the 58 period moving average. And it might not make perfect sense if you're just thinking of the math for the first time, but it worked out. And let's actually try this the other way around. Now, I don't recommend doing this, but if we were to set our MA1 much larger than MA2, it still does the ribbon, but keep in mind the ribbon for those lines are always between MA1 and MA2. So I recommend, and based on the coloring, is that when you're using this indicator, you always keep MA1 period shorter than the MA2 period and the MA2 shorter than the MA3. Ideally, they'd be all on the same resolution, but if you're using different resolutions, you would want the quickest moving average first. That might be hard to understand, but if you're using like a 50-week here, or yeah, a 50-week moving average, you would actually want that to be, that's actually the same thing as the 200 period, or close to it. Well, not even close to that. It would be what, 357 times. Yeah. All right, my brain's getting a little fried right here, but I'm not going to go into the math anymore because I think I'm starting to lose my focus here. Anyway, we know how the ribbons work now, and as I've mentioned, let me change that back to 50. It works the exact same way from 2 to 3. Okay, now one of the things I did was I set the transparency on the lines really low or really high, depending on how you look at it here. The numbers kind of faded in the closer they got to the yellow, and faded out the closer they got to the outside, closer to the outer moving average. Now, well, it's outer in this case. It doesn't always have to be this situation. Let's see, was there anything else here that really stood out? No. The only other thing we did that I really need to point out, other than the, well, I don't think you even were able to see the colors. I apologize about that. Let me change that. Okay, so now you can actually see the transparency values. I really do apologize about that, but you can see they kind of faded in. Scroll down a little bit, one line at a time here, or try to. Okay, that's as far as it's got it, but you can kind of see what I mean. We set the transparency less and less. They're fading out as they go on. But that's what I mean by alpha color coded. Alpha a lot of times refers to the transparency. Okay, the last thing, and I keep getting sidetracked. I really apologize about that. But we also wanted to make sure we only show these when these conditions are true. So we need our input, that checkbox for show ribbons, to be checked. We need the MA1 type to match MA2, the MA1 resolution to match the MA2 resolution, and the MA1 source to match the MA2 source. We do the same thing for 2 and 3, and now we've got 5 ribbons. So now you might be thinking, that's great, but I want more. Okay, well, that's easy enough. You're watching the video, so I'm going to tell you how you can do more. It's pretty simple. Make a new line here. Under ribbon 5, name it ribbon 6. Just increase your step size here. That's all you do to calculate the value. Then do the same thing for the plot, and just change your transparency and the plot value here on the next line to ribbon 6. And you would just continue to do that on and on. Now, like I said, ideally this would be done in a for loop, but the plots don't seem to work very well with the for loops, so I'll just leave it at that for now. And honestly, I don't think you need any more than this. This is on a daily chart, and they're already fairly close together. I don't think there's any more that you would need, but it's always an option there for you. Okay, so if you like this video, please leave a like. If you like this series so far, please subscribe. We're going to continue it on. I've already had requests for people to do convert this into some sort of strategy, or also to do back testing and other features on TradingView, and we'll get to that. It's just going to take a little bit of time. I have to develop all this stuff. Every feature we add to it takes a little bit more time, and then of course I have to record the videos. So we'll get there. It just might not be tomorrow or the day after, but we'll continue to put out videos, and we'll get caught up. And thank you. I really appreciate you watching the videos, and have a great one. Hey, this is David for BigBits, and in this video we're going to take a look at comparing the time of particular bars on charts so that we can compare different securities. Now, in this particular example, I created a specific indicator just for this. You might have already seen me publish this if you follow me on TradingView. Otherwise, I'll give you kind of a quick breakdown on how this actually works. We're going to be looking at one security and comparing it to another, as just the title sounds, and then we are going to get the percentage change within that candle, so from open to close on both of the securities, and then we're going to compare the change in percentage points. And so for example, if Bitcoin gained 10% on the day, and we're using Bitcoin as our base market and Ethereum as our other market to compare to, if Bitcoin gained 10% and Ethereum gained 5%, we would have a green bar of 5% for Bitcoin because it outperformed Ethereum by 5%. Now, the exact opposite is true. If Ethereum had gained 10% and Bitcoin had only gained 5%, the difference would be a -5 or a red bar of 5, -5. So in order to do this and compare any security, we had to look at the time of the bars that we're working with, because of course many markets close and cryptocurrency markets don't really close. So we needed a way to be able to compare them and make sure it was fair. There were some discrepancies I had noticed to where the bar times weren't really starting the same. So I required that the bars start at the same time when you're using a particular time frame. That way you're always comparing the correct time frame, and you might miss out on some data when the markets don't quite align perfectly. But for the most part, as long as there is a match on the bar time when they start, it should work pretty well. So let's go ahead and dive into this. I'm going to show you the settings. We have a base market. You can choose from some built-in options, and the other market is exactly the same way. You can check this to use a custom base market, but you're going to have to type in the TradingView symbol that you see up here in order to do that. And that is so that the security function that we're using in PineScript knows which symbol to actually call. Otherwise, if you don't check that and write one in, it's just going to use one of these built-in strings. Now, other than that, I think that pretty much covers what you're seeing here. I've already talked about how it works, and we need to focus on time, so let's do that. I've got the chart pulled up here. I believe my head isn't in the way. So let's go ahead and take a look at what's going on. If you haven't seen the video that I've done where I talk about functions and strings, it's a good idea to go back through the series and look at that, because otherwise this code might not make sense. Essentially, we had to create a function for our base and our other to return a string, because we have the option to use a custom one and to type in that value. So if this is checked, it's going to return the custom string that they use for their input, and if they don't use the custom string, it'll just use the default first option from that drop-down list. So the reason we do that there instead of actually within the single line of code here is because you can't do the evaluation within the security function. So we call that first. We use our function within get security. It's going to return that string here. Plus, it's also best practice, I should say, to create a function, because we're going to be using that in other places. So it's a good idea to use that as a function so that you can reuse that code later instead of having to type all the evaluation out over and over. Okay, back to the point. We are going to be calling the security. We need to get its close. We need to get its open for the current time frame, the current resolution. So you can do this also with intraday time frames such as 5 minutes, 15 minutes, 1 minute, whatever you have the option for on TradingView. Now, once we have that data, we can calculate the percentage change, and that's a pretty easy calculation, and I'm not going to go over how to actually do that. You can see that in the code for the indicator if you need to. Now, what we are also going to do, you'll notice, is we are also going to capture the bar closing time. Or, well, I use this as the reference for creating the variable name. It's not actually the closing time of the bar. If you do a control click on that time built-in variable there. It's the current bar time in Unix format. Now, I've also covered Unix time in great detail in another video. So if you want to go back and learn about what Unix time is and how to use that, then go back and check that video. For now, we're just going to be talking about how we're using that to compare. So essentially, it's looking at the bars and it's getting their time for the bar. That way, when we compare it to another one, we make sure they actually compare in the same time and there's not some sort of mismatch and the comparisons don't actually work. Okay, so we've got all of our data, we've gotten our percentage changes, we've gotten our absolute values if we needed those, and we've made them negative if it was necessary. So if our base change was less than the other, since it returns an absolute value based on the way that this needs to work to get the correct value, we then had to multiply it by -1. So just ignore that math. Just know that it works. If you're curious about it, you can always dig into it for yourself. But now when it comes time to actually plot the percentage difference down here, we did have to do something. And I'm actually going to show you the result of this. Let's go ahead and look at SPX. Okay, there you can see there are now some gaps in the data. And that's because it's not plotting that data. And this is what I've been talking about. This is the reason why we've gotten the time variable, is so that when we compare one to the other, we will know the percentage difference based on the actual time frame that we're looking at and not something that it doesn't have data for or it doesn't align perfectly with. So this makes sure that we're working with the correct data when we compare it. So because those markets do close, there are gaps, and you will have those issues when you're working with those. But for the most part, if you want to see the data, it's going to be there. Now, what we do to compare these is we make sure that we actually have a base change and another change. This is those percentage changes. Then we also make sure that we do have a closing time for those candles, or those bars, should I say. If there isn't one, then we obviously don't have anything to compare it to, so we're not going to plot anything. But we also need to check that the closing, or that the time for those bars from the base and the other also match. So if they don't match, and that's what this means, if the base time does not equal to the other time, we are going to set our percentage difference to an NA value, which basically means null, and it's not going to plot anything on the chart. Once we do that, all we had to do was plot this on the chart, and if it's above 0, it's nice and green, and if it's below 0, it's red. It's a pretty simple plot. It's very easy. Other than that, that's about all there is to doing this and working with time. Now I wanted to show you actually how the time works. So we're going to be plotting the time of the candles here. Let's go ahead and save this. It'll reset to our default values. And you'll notice these numbers are very high. That's because it's Unix time. It's one integer for every second since like 1970. So these values are very high at this time. We're looking at daily charts, and you can see how these kind of compare here from one to the other. The blue, let's see, where is the data window? I always forget to pull this up. There we go. I always forget about this, but this is actually pretty handy. The data window, you can see the values of all the plots you have. So when we're comparing these, and you can't really see anything on the chart, let me do this. All you can really see are these blue lines because our percentage changes are scaled down so small that you really can't even see them. So you can see when we hover over the different bars here, the plot values for the different times match. And that's because we required them to. So let's go ahead and change this to where we're comparing it to the SPX again. And it's kind of hard to tell. Oh, so for example, and I can't really move the cursor right here, but in the data window on the right, where we were just looking before, you can see the plot value from the first blue plot to the second blue plot don't match. So in this particular candle, there's not going to be a bar. So let's actually take a look. It's this green candle here on the daily chart. Let's go ahead, go back in the code. Let's close those plots off, comment them out, save our data, switch back to the SPX, and make sure that there's actually no data showing on that green candle and that the time comparison works. There you go. Their times for the bars didn't match, so it didn't print anything because it wasn't really fair to compare at that point. Okay, so that pretty much does it for this video. There's a pretty long video. It wasn't really a whole lot to cover, but if you're interested in actually using this indicator, it's publicly available on TradingView. All you have to do is search for it. I went to the wrong thing there, my bad. So all you have to do is search for it. It's the any security versus any security change comparison, and like I said, it compares their change percentages within whatever time frame you're looking at. So it's actually pretty cool. It kind of gives you an idea of how things do versus one another, and you might be able to spot trends here over longer periods of time perhaps, but it's really just kind of cool to see that on particular days, like the stock market crash the last few days. If you wanted to, you could compare how Bitcoin compared to that if they had the data available. So even though the price dropped on Bitcoin this day, it didn't drop nearly as much as the stock market, so it actually outperformed by 2.8%. That's pretty cool. So like I said, you can always look at that in the public library, or you can check out my TradingView profile. You can always follow me on there. I don't have a follow button because I'm looking at my own profile, but you can always do that. You can go to the scripts section. You can see all the scripts that I've created. You can check out all of those, and also if you are considering a paid plan, please check out the referral link in the description for the video. I'm really not one to shill these sort of things, but if you're going to consider a paid plan, please consider using the referral link because it does help me, and it'll also give you a $30 credit too. So I would really appreciate that. The plans are pretty expensive. But other than that, I think that covers it for the video. We've talked about everything. Yeah. So also, if you like the video, please like, and also you might as well subscribe because I do these videos and videos like this pretty often. You're gonna get a lot of great information, and if you want to, always go back and check the previous videos for something you might have missed. But other than that, thank you and have a nice day. Hey, this is David for BigBits, and in this video we're going to do another look at an educational topic. We are going to discuss a strategy or an indicator's configuration settings. And now I'm sure you're probably familiar with this on TradingView. You can go to your indicator settings here, or the inputs, as a lot of them are referred to, and you can see there's a moving average 1 length and a moving average 2 length, and you can change these. But what we are going to be doing in this video is we are going to be adding another setting, and this is just going to give us an option to choose for pre-configured different settings for these moving averages. So by default it's 10 and 30. We're going to set these to have a different option to where there is a 5100 and a 5200 available as well. So I'll go ahead and walk us through that in just a moment. But if you haven't already, please go ahead and like and follow here on TradingView. I do educational videos like this fairly often, and I also have a YouTube channel where I also post these videos, and I also have a bunch of other Pine script tutorials that I've already made as well. So if you would go over there and like and subscribe as well to get those videos as well. All right, so the first thing we're going to do is we're going to pull up this wonderful script that I have, and I am going to publish this update after we're done with it, and we will look at our inputs. Let me zoom in down here. We have our inputs, and what we are going to do is we are actually going to copy these, okay? Now, essentially, we have 2 inputs, but that's not what we really want. We want to set these default values on both of them. And I'm sure you're wondering, there's already a default value up here. Just be patient and you'll see exactly why I'm doing this. So these are the particular values, and we are going to want to make sure we declare these as integers, and you'll see why in just a moment. So we are going to add a new input. I'm going to call this config, and this input, the default value, is going to be default. How about that? And for this, we are going to have options, and I believe this is how it's done. It's kind of hard for me to remember off the top of my head. We have default, and then we're going to have 50, 100, and then we're going to have 50, 200 as well. We'll save those. And let me zoom back out. Let's save this and see if it didn't give us any error messages. And we actually need to rename these real quick just to make sure we don't get any errors. We don't want to use the same name twice. Okay, so that looks good. Let's make sure that our options are working the way we would expect. Yes, the default value is set to default. And we have options 50, 100, and 50, 200 as well. So back to our code again, we can go back and we can actually change these, because these values, the inputs, the name of these variables were already being used down here. So in order for us to use our custom values, we're going to use those names of the variables here, and we're just going to add a capital I to the beginning of these. And these are our input values, and these are the variable values that we're actually going to use. So now we're going to set the actual values we're going to use based on our configuration option. So to do that, we're going to use an if statement, and we are going to compare our config string to whatever we have selected, and we don't need to do default first. We will just save that one for last, and we really only need to worry about our special ones that we've created. So if the selection is 50/100, we can set our MA1 length equal to 50 and our MA2 length equal to 100. And then thanks to a recent update, we can do else if and have our config and check it to see if it is equal to 50, 200. And then let's just copy this bit of code. Here, and instead of being 50, 100, will be 50, 200. And finally, just in case, we'll do our else, and this will cover the default option and as well as any other mistakes we might have made. And we will just set our values here again, and we will just make sure that these are set to 10 and 30 as well, which are defaults. Now, there is a way you could probably have this to not be equal to that. You could probably even use the default values here themselves, but if you want to do like a catch-all, say you made a typo in one of your inputs or in one of your if statements, this would kind of catch all instead of just doing else if config equals default. So you could probably do MA1 length equals the input for MA1 length, and we might even try that again in a minute. But if you wanted to catch every mistake you could make as the default values, just have your input defaults match your defaults in the else statement of your if-else branch. So let's actually take it out of Zoom. Let's save this and let's try it. Okay, that worked. Let's go to our settings and let's choose the 50/100. Hey, there you go. We're now at a 50/100, but you'll notice our input values don't change, but you can see the configuration value up here. Let me zoom in actually. You can see the configuration value changed, but not the inputs. So if we select the 50/200, one of those lines stayed the same and the other one changed to the 200. So this is working exactly how we wanted. Let's change it back to default. There we go. We're back to our default options again. So that handles that. Now let's actually go back and set this here. And excuse me for just a moment as I do this. There's really no need to zoom in here. We are just setting the links here equal to the input. Okay, and we want to do our input values I will zoom in now so you can see this. I have added an else if for the default. We'll do 2 here. And this is why it was important for us to declare these as integers, because our input type was an integer. And if we're going to set these values equal to the input, the data types have to match. Essentially, you can only set an integer to the value of an integer. And now what we have is we have the 5100, the 5200, and the default. But like I said earlier, if we made a mistake, this would catch it. And I'm not going to change these values because they're not going to be hit based on what we have selected here. So we're just going to save this, and we're just going to make sure that our default options work. There you go, 50 by 130. And that is using the default configuration. So I hope you enjoyed this video. I hope you learned something from it. If you have, please like the video. If you're on YouTube, while you're down there liking the video, please also subscribe as well. Make sure to check out anything else that's on my profile as well. That'd be great. But that'll do it for today. Thanks, and have a great day. Hey, this is David for BigBits, and in this video we're going to take a look at using gradients when we're doing our fills between our different lines on our plots. And in the last couple of videos we've talked about doing fills between 2 different lines or 2 different plots, and they have been rather basic, and some are based on different conditions on what color they should be. And I've kind of carried the idea of the conditional fill over. Maybe not so much with when the fill shows up like we did with the RSI, but the condition of what color it's going to be. But there's also another condition that we're adding on here, is what color the fill should be within that particular candle. Now, this isn't something that's terribly easy to do if you're trying to figure this out on your own. I played around with it myself, but there's a group of people called Pine Coders. They have their own website, and they have a lot of great resources on Pine. And I'm going to show you something that they did that I learned a lot about for the gradients that we're using here when I decided to look at the gradients. Now, you'll see they have a public script. Now, there's a link to it in the description of the video, so if you're curious about that, you can go down and see that now. While you're down there, like the video, please. But what they're doing is they are returning a hex color value, and this is an alpha RGB, so it returns a red, green, blue, and an alpha value, which is transparency value essentially for a color. And you use hexadecimal values, or whatever the mode is here. I believe it's hexadecimal, but anyway, you return this color code instead of actually telling it a color like color.red like we did in the past. We're going to use this code. We're going to use these functions that they created to return a color code. Now, the functions that they have return a different color code based on the number you put into the function. Now, if you're having a hard time reading this code, it's likely because they use their coding standards that they've come up with, and if you go to their website, they actually have a page dedicated to this, and I'll link that in the description of the video. We'll cover this a little bit later about what they're actually doing here, but if you've been following me and you're not an advanced or an intermediate programmer by any means, it might be a little bit harder for you to read than looking at how I've done the code in the past, to where it's a lot more simple and straightforward, to where we're using, full words instead of, lowercase, underscore, and then different, essentially code words to help developers know what they're actually looking at. So what we're taking from this, we're not taking anything else. What we're going to be taking from this one is the function for the lime color and the red color. And when we pass in a number, we're going to pass in anything, well, essentially any number, but what we're really wanting to focus on is the numbers 1 through 10. Now, anything above 9 returns this particular color. Otherwise, we start looking for the other ones. And what we're going to do is we're actually going to repeat. So we're going to go through the list, and then we're going to circle back through the list while it's supposed to be green. And we're going to do the same thing with red. So the first thing I've done is I've created our script over here. You can see we have this repeating gradient. There's nothing special about it that's related to the actual script we're working with. There is no real value in the color here other than it's green or red. It just is kind of aesthetically slightly more pleasing, I suppose, than if it were just red or green. So let's go ahead and take a look at the script here and slide this up. So you'll notice I have pulled those functions over. We aren't going to be using any of these, so you can just kind of ignore those. I just wanted to show you we replaced well, we've copied that code over from this one, and this is in the script. I'm not going to publish this script because, like I mentioned, I'm putting a link for their actual script in the video description, so you'll be able to get to the content that way. So what I have done to get it to repeat and use these different values is I have actually focused on using the values that it is focused on, 0 through, well, 1 through 10, I should say. And what I'm going to do to repeat it is we have to start with 1, count up to 10, and then once we get to 10, we need to start counting down back to 1, and we need to loop that over and over every single candle to make this nice repeating pattern. Now, the first thing we do is we create a float called the color value. Now, I use cval for the color value because this is going to return either our numbers 1 through 10. Okay, it's going to return either of those numbers 1 through 10. And we also come up with another one called float direction up. Now, there is a reason I use up, and this is a float instead of a boolean, and that has to do with how the script works. So the first thing we're going to do is we're actually going to carry over those values from the previous candles. So if it didn't exist before, then we're going to start it at 1, and otherwise we're going to return the previous value. So now that we know the direction we were going and the value of the previous candle, whether it was 1 through 10, we can start with our actual logic of looping through this every candle. So let's go through here as if it's the first time running the script. We have a 0 and a 0 here. So the first one, okay, nothing actually exists, so the first value is actually going to be 1. And that means that our color value is going to be 1. So when we call the color value function, it's going to return this value because it is not greater than 1. Now, the direction up is also going to be 1 on the first candle because it didn't have anything before it. So it's going to start counting up with the value 1, and let's see how that actually works. So first we're going to check if the direction is up. If it is up plus 1, is that greater than 10? Because if we're counting up past 10, it really does us no good. We need to turn around at that point. So if it is, we set our value back to 10. We leave it at 10, but we change our direction to 0. Then it's just going to break out of this, and because it uses an else statement, and then it's going to go down, it's going to plot our moving averages, so the top and bottom lines here, not the fill. Then it's going to, of course, like I said, it's going to plot those, and it uses this color code for it to be fully transparent, so you don't actually see it. You don't actually see the color of the actual lines going around it. Now, we call our fill function, but where we would call our color, we're actually going to be doing a conditional statement. So if our MA1 is greater than MA2, it's going to be green. We know that. So we'll call our green function, but we'll then pass in our color value into the green function, and it's going to return the proper color based on where we are at in the loop. So that's how we get the colors to change from nearly transparent to very opaque back to transparent again. And of course, the opposite would be true if we were counting down and we subtracted 1, and that would have been less than 1. Then we stop it at 1 and we change the direction. And otherwise, if there isn't a need for a direction change, you just continue adding on to the color value and you keep the direction the same, or subtract and keep the direction the same. So that's pretty much going to cover it for what I wanted to talk about in this video. I wanted to keep it kind of short because in the next video we're going to continue on with the gradients, but we're actually going to focus on a slightly different approach than what the pinecoder function has to actually tell you how strong the current fill is compared to previous fills. So what we're going to do is we're going to look at the maximum percentage change since the crossover, and then comparative to the maximum fill distance. We're going to then calculate the percentage transparency it needs, and with that transparency, then we can, keep it this more opaque color for longer here, and then once it starts to get a bit more narrow, be a little bit more transparent. Then if it were to get wider again, it would get more opaque as it would approach the maximum width of the fill. So it's very similar to what they have here, but I believe it's a bit different because they focus on using a center line. And honestly, there's a lot going on here where it's really not entirely necessary, in my opinion, and it's kind of intimidating for those of you watching. So I definitely want to give them credit for posting this and all the great resources they have available, and definitely check out those links for them in the description. Otherwise, you can also check out my TradingView profile, where I have a lot of scripts posted. You can see there's several down there. We've got quite a few followers now, so check out the TradingView profile. You can see all the scripts we've done in the tutorial series. So if you like this video and you like the PineScript tutorial stuff, definitely check out those videos, but please subscribe, because you're going to get notifications when there are new tutorial videos. And I also cover some other things, such as other crypto related projects, because I'm a fan, and that's what I like to do on this channel. But thank you for staying around, and if you are and you have been following the channel and you're still thinking about getting a paid subscription to TradingView to unlock some of their features, please consider using the promo code in the description of the video so that you can get $30 and I can get $30 as well towards an upgraded plan when it comes time for me to renew. And then of course that also helps you as well. But other than that, I think that's it for this video. You can look forward to another one very soon, and I thank you and have a nice day. Hey, this is David for BigBits, and welcome back. In this video, we're going to be talking about PineScript coding conventions. You might also refer to this as a style guide for your Pine scripts or your code in Pine that you use on TradingView. Now, if you're not familiar with the channel, please subscribe, because if you're watching this video, then you're probably interested in PineScript. And this channel, we do a lot of PineScript tutorials and talk about TradingView, cryptocurrency, and things like that as well. So definitely subscribe if you haven't already, and just watch the whole video, because there's a lot of good information in this one the whole way through. I'm not just showing you something completed. I want to go over all of the styling guide or the coding conventions and explain to you exactly what each of them mean and kind of why they're important as well. And we're going to be looking at an example here from the Pine Coders group. Now this is a group of people who work to support Pine and TradingView in that aspect with Pine, and they have created this coding conventions. I like to refer to them as a style guide, because that's what I'm used to referring to these sorts of things as. So essentially, we're trying to structure our code and make it look a certain way over and over. That way, if somebody were to write a script, it would be very easy for other more advanced programmers to pick it up and read it. Now, if you're a beginner programmer, it doesn't really matter too much about these, although there are some general rules that you might like to know in here about the syntax of Pine and things that will help you make your code look a little bit better regardless of how you write your variable names. But for those of you who are a little bit more advanced or an intermediate level programmer, this might be a good idea to do, especially if you're publishing scripts on TradingView. I'm going to try to start using some of these, but where I work with a lot of tutorial videos and beginners, I tend to make it the most readable code that I can, and some of these names aren't really that that well suited for being readable for beginners. So let's go ahead and get started. There's four different categories here for the table of contents. There's script structure, naming conventions, spacing, and line wrapping. Now the first two are probably going to be the biggest ones, but I wanted to share this link with you here. This is the Pinecoder script that we're going to be using as a reference here for all this stuff. They have most of the items in their style guide in here, and what isn't in here, it's going to be easy enough to tell you what's going on. And I didn't personally write a script for this one because it would have been a waste of my time. There's plenty of other scripts out here that have done their code with this style guide, this coding convention, that I don't really have to do it myself. I can just show you what they've done. Okay, so the first thing, and we've talked about this in the tutorial series, is the first thing you need in your script structure is the version name, and this is a comment that tells the compiler what version of Pine you are going to use to compile your code in. And once it tries to compile, it knows what rules to use from which particular version. So this is the first thing you need to do in all of your scripts. You can see here they have declared the version number first in that comment. Now you might also like to add other notes such as the author, the version number, the name of the script, and some other notes that would be useful for this. Now they've also mentioned that here using the version you can add your comments whatever you'd like. It doesn't have to be structured the same way as this after you do your versioning. Now after you're done with all of your comments, including the versioning, then they would like to see the actual study or strategy function called. Now, if you're not familiar with Pine or you haven't watched the tutorial series we've done, these two functions, the study and strategy, are pretty much what tell Pine whether you're trying to actually execute or backtest a strategy, or if you're just going to kind of use this as an indicator and not perform any back testing or try to do any sort of automated trading through their connected brokerages. Now, let's actually get back here. Let's take a look at the next one. So this is something that's kind of common for those of us who actually work with code on a more routine basis, and that is working with inputs. These are essentially variables, and what you're doing with your inputs, you're placing them directly after your study or strategy, and that's because, first of all, the study and strategy is required to be in the script, so you might as well do that first. We have to do our inputs next because we're pretty much declaring our variables that we know we must have, and these are also user settings that you can interact with on the chart, and you can change by just selecting different values or typing in different values. Now if we go back here, I don't see, okay, here they are. I thought they didn't have them at first, but here are the inputs. Now we have covered all of these on our tutorial series, so you should know what these are if you've watched those, what they actually mean, and we'll go into these a little bit more in a minute. But your inputs and your variables, those declarations, are due here directly after the study or the strategy. And that's what it kind of mentions here, the variable initializations, pretty much right after your inputs. So perhaps here we would have moved the, well actually the variables here are actually used as part of their options, so that's why they appear to be a bit out of order. So they actually require these for their inputs, so they do those first. But you can see here there's another variable, and that is declared immediately after. Now for the rest of their code, they've actually defined these sections for you. So this is the section for the functions. You can see there's several functions in a row here, and we'll go over exactly kind of what's going on here in a minute. But our functions that we're going to use for the study or the strategy come next. And you see they have quite a few for this particular one. Now, what we do after that is we work on our calculations. So now we have the functions that we need to do our calculations, or functions that we need for other reasons, such as colors. And we also have all the variables we're going to work with, or at least the ones that we needed beforehand. And now we can actually calculate values and save those or work with those however we need to. So what they do next is they have a section for their calculations. Now there are a few new variables here, but those are because we are working with existing variables and saving into new ones. And you don't necessarily have to do that. If you want to update the value of an existing variable, you can always do that with this operator here, and this variable has already been declared and you're resetting its value to whatever the result is of this statement. Okay, so now that we have that and we have our calculations done, we pretty much have all of our data that we're going to be using for the study or the strategy. We've already calculated everything, so everything you can think of that you want to do with your script, you should have all of the information you need to make your decisions at this point. And what we're going to be doing next is doing a plot. Now this is the part where we're actually drawing on the chart, if you choose to do so. If you're doing a strategy, you don't necessarily need to draw anything on the chart because you're going to be focused more on the back test results. Although it is often pretty handy to help troubleshoot your strategies if you are plotting things on the chart. And there's a lot of different ways and different things you can actually plot on the chart. So go back and check out videos on that, or check out the PineScript reference manual. There's a lot more things that we haven't even covered that you can actually plot. Now, as far as the plots go, usually with studies, that's pretty much all you do is just plot things so that you can look at them and compare the data. Although it does get a little bit more interesting than that with using alert conditions, and we'll touch on that in just a moment. But the plot calls, where we're putting things on the chart or on their own chart, not overlaid on the one you're looking at, you can plot those as well. Now, after we've plotted everything on the chart that we're going to be using, you can see they had a section for plots here. Then we would have a section for our strategy calls. Now, this is if you were only using the strategy function at the very beginning. So up here at the beginning, we would have had to use strategy instead of study, and we would have needed to call the strategy functions down here after our plots, and we would have told it to enter or exit positions based on other logic that we have come up with, or you can just tell it to do it based on whatever you come up with. You don't have to do a bunch of calculations if you don't want to. You can just do it however you need it, okay? Now, the alert conditions are the last thing, and if you haven't watched the video on the custom alerts that I've done, that will help you a lot if you go back and check on what that is for the alert conditions. Essentially, with indicators, what you can do is you can create your own custom alerts. So instead of just using the built-in alert conditions built into TradingView, such as, you know, moving average 1 crossing over moving average 2, you can actually get a little bit more in depth with a single alert. You can say, you know, I want moving average 1 to cross over moving average 2. They both have to be above moving average 3, and moving average 3 has to be moving down. Something like that. You can do that with just one alert that way, and it will be very beneficial for you to reduce the amount of alerts you have in that way if you haven't been using it that way. So that kind of takes care of the structure and the order of how you should be doing things in Pine. Now you'll notice I've pretty much done it like this in most of my videos, but you can always mix these up. These are just style guidelines. You don't have to do it this way. Although you'll notice if you try to do it a different way, sometimes you'll have issues with your order and the way things are made, and you're probably going to end up doing something like this anyway. Okay, so next up are the naming conventions, and this is the part that's really going to throw the beginners off because it makes things look really difficult for beginners, and it makes them look harder to read. So with variable names, we are using camel case based on their coding conventions, and camel case just means you start off in all lowercase, and then the next word within that name is capitalized. So you can see it starts lowercase here, and then the next word is capitalized. But if you have more than one word after that, then all of the other words are capitalized as well. So that's important to know with camel case. Now, for me personally, I have been doing in the videos a little bit differently. I will capitalize the first word, and I will also capitalize the acronyms as well. So EMA here, based on theirs, this is all lowercase, but for me, I would capitalize E, M, and A, and then also length in mine. Now, there's show signal here. I would have just capitalized the S at the beginning of show, and also kept signal capitalized as well. So, like I said, you can do these however you want, however is best readable for you. But if you're going to be publishing scripts a lot in Pine, I definitely recommend you follow these. It's going to help you a lot. Now, for function names, this is simply just the name of your function. All we're doing is just prefixing the function with F underscore, and then we also use the camel case after that. So for example, you can see one here, F underscore days in months. So the camel case starts after the underscore, and you're going to be lowercase on the first one, and then uppercase on the beginning of each word after that. Now for function parameter names, this is often helpful in many different programming languages, and that is you put an underscore before your variable names that you use as parameters in your functions. Now let's go to one of the actual functions they have here, and this might help some of you. Alright, you can see this function underscore TF res in minutes. It has a parameter underscore res, and you can see how it's used here later on in the function. So you're passing in a value into the function, and it's referring to it with the name that you set in the parameter. And with the naming on that, I forgot to mention, this is also camel case as well, similar to our variable names, and obviously start with the lowercase and the camel case afterwards. I'm sorry, I thought I got messed up there, but it's actually the parameter names that we're starting with. Those should also be camel case, but it doesn't appear they have any that are long enough. Although they might not be using camel case here. I thought they did. If they don't, that's my apologies. So yeah, these are all lowercase for them, although like I said, you can always do these however you want, but I would probably use camel case on the parameter names as well, just because that's what they're doing everywhere else here. Now their dependencies, this is just letting you know that your function uses a variable that was already declared outside of the scope of the function. And what I mean by that is the function by default usually just works with the data within the function. Now a dependency is when you need to reference data outside of this particular function. So for example, we need to know the length multiplier, but that was an input, so we are depending on this length multiplier up here, and we need to identify that if you're following these coding conventions. Now they also recommend that you can also pass this in as a parameter. That way you don't have to actually define the fact that you're using a dependency, and this makes your code to where you have to have it correct before it will compile. If you don't pass in both of these, then it won't compile correctly. It'll throw an error. So if you don't pass in the length and you just do the multiplier, then it will give you an error that you need to use both parameters, and then you'll have to put in the input value as your parameter, and it'll be completely fine after that. Now the local scope variables, this is essentially just variables that we use within a function or within a as it says, a local scope. We're not working with the entire study or strategy here. These variables pretty much get destroyed when we're done with the current segment of code that they're in. So within a function, within an if statement, or within a for loop, if we declare a variable there, once we are out of the function or out of the if or for loop, then that variable is just kind of gone. You don't get to use it in the rest of your study or your strategy at that point. Now that pretty much covers all of the variable stuff, and like I said, throwing in all of these underscores, lower cases, prefixes, things like that can confuse beginners, but if you're even intermediate or advanced, then this is probably pretty common and something you've seen quite a lot of. All right, on to spacing. This is very simple. Let me go up and make sure there aren't any other sections. Spacing and line wrapping. So these are the final two sections. There's not much to it here, but this basically just says that if you are using an operator, you need a space on both sides of it. So you're going to have a space before the operator and also after, and that needs to be for all of them. It's pretty simple, but it makes the code much more readable as well. And I tend to do this myself anyways without having to have a convention to tell me that. And you likely probably do as well, just because it is easier to read for most people. Now, line wrapping, this isn't something we've particularly covered, although we have talked about spacing in the script tutorials before, and how if you're inside of an if statement or a function or a for loop, you have to do 4 spaces on the next line to have your code execute within that particular scope. Whereas line wrapping is just allowing you to continue writing the current line of code that you're in on the next line so that the code can be more readable. Now you can see this here as well. We are working with a plot function here, and there's a lot of different properties to this plot, and we're defining those values. But if this was all in one line, it would come out really here, and it might be a little bit harder to read. So what you're going to do is you're going to start a new line, and you're just going to do 2 spaces. Now you can't use your tab key to do that because the tab key will do 4 spaces. So you're going to have to manually tap that space key twice, and then you can set your properties and make sure you use a comma between your properties just like you would if it was a single line, and then you can start your new line as many times as you need. So that pretty much does it for this particular video on the coding conventions or the styling guide for PineScript. The people over at Pine Coders have done a great job. I definitely recommend you check out their profile. They have a bunch of great scripts with a bunch of great resources in it. I can't begin to say enough just how much great stuff they do for Pine that a lot of people aren't even aware of yet. So definitely check out their scripts. Their profile on TradingView is, of course, Pine Coders. Now, if you want to check out mine and you haven't already, you can always check out my profile in the description of the video. And while you're down there, please like the video and subscribe as well. We do these types of videos. We keep up to date with TradingView, crypto, and other things. So definitely, if you like the video, subscribe and you'll get updates on when we do new videos here on the channel. Now also, if you've been following along on Pine or you're interested in a paid plan on TradingView, please check out the referral link also in the description of the video. That'll get you $30 off your upgraded paid plan on TradingView, as well as $30 for me on my next paid plan as well. And to help keep the channel going, I'd really appreciate it if you could do that if you're considering that paid plan. But other than that, we are done for this video. I'd like to thank you and welcome you back to watch another video on Pine here soon. But other than that, have a nice day. Hey, this is David for BigBits, and in this video, our 10th video in the PineScript development tutorial series, we are going to talk about percentage-based profits and stop losses. So these are actually going to be market orders with the strategy, and if you've been following along, you'll notice I've cleaned up the strategy quite a bit. It's very basic. If you've just joined in this video, it's going to look kind of dumb because the strategy is just worthless when you're looking at it, but that's because we've made it highly flexible, and this is just an example for the tutorial series. Now you can see the strategy has a buy when we have the crossover of our first moving average over the second one, and we've added in the new feature of the take profit or stop loss, which had it exit here with a stop loss of 15%. Now I'll get into how that works again in just a minute, but we also had a buy here, and it continued to sell with our old strategy settings of crossing under the second moving average as well. So we've managed to add in our take profit and stop loss alongside of our moving average crossovers that we use to also potentially exit the trades. Now, if all this sounds confusing and you hadn't watched the previous videos, it's probably a good idea to go back and maybe even start from the beginning. So let's continue on and let's take a look at how this is actually done. Now, the only difference we've made in our actual strategy entries or exits is we've added a new line. In every condition where we had an entry, we placed an exit. And what the exit does, it essentially triggers a market order once your profit gets hit or your loss gets hit. Now, these are all different parameters in the exit function. And let's take a look. The first one is profit or loss, excuse me. And that's the text you're going to see here on the strategy itself when it prints on the chart, and we've associated that with the 1/2 entry ID, and we've created a new variable called profit target and a new variable called loss target. These are used to calculate the percentage differences so that we can actually get the right numbers for it to exit at no matter what we are looking at. Now, I'll go over how we calculate those in just a minute, but let's go over how the profit and loss targets actually work when you're working with the exit. Now, keep in mind, we are just doing market orders. There is an option to use a limit order to take profit. It's not a big deal to me to use the market orders. Personally, I don't trade very often with strategies. Might look at a daily chart and trade on strategies, so there's probably not going to be a lot of trades going on for me, so the market fees aren't that big of a deal. But if you're interested in using limit orders to trade shorter time frames, and in most cases you get better fee rates on limit orders, so you might want to consider using limit for your take profit instead of a market order. But we're going to use market. And when we do this, we have to give the parameter a value that it expects, and that value is based in ticks. Now, what a tick is, that is the interval between prices shown on the chart. And let's go back to our chart here. You can see the interval on our chart here is based in pennies, since we're using the US dollar as our base currency here. So each tick is $0.01 or 1 cent. Now, if we wanted to set our take profit exactly $1 above where our entry was, we would have to use 100 ticks. So to do this with percentages, we have to calculate it, and the same thing goes for the loss parameter. It's also calculated in ticks. Now, it's important to note that the loss isn't really a negative number that you're working with. The system knows that the loss is a negative number. The measurement in ticks is just that, it's a measurement, so it's going to be a positive number. So if you're going down, you don't have to use a negative tick number. It's just a measure of distance downward, and the system knows that, and I'll show you how we calculate that in just a moment. But before we do the calculation, and that's right here, I'll explain that all much better in just a moment, but let's take a look. We had to add some new inputs here. We added our take profit percentage and our stop loss percentage. We have the minimum value at 0.01, and once again, that's because they have to be positive numbers even though you're setting a loss below where you enter. And I set the step size, which is the interval between the values on the settings, to 0.5, which is 0.5%. If you need to tune that down, you can just change it to 0.25 or 0.1, whatever you want. But let me show you the settings here and show you how this is going to actually impact the chart. Now, I have some arbitrary numbers of 30 and 15% set as the profit and loss respectively. And this probably won't work for most people. It probably wouldn't even work for me. But for our example purpose here, I'm going to change the stop loss percentage to 15.5%. And you should see that this actually moves down to the next candle because the percentage down increased. Now you can see, I just kind of proved my point that the percentage increases on the stop loss means it goes down further, and you don't have to use a negative percentage on TradingView like that. So I'm just going to save our changes to our settings there. I'm going to go back down. Let's look at our calculations for how we calculated how many ticks we would need. Now, the profit target, this is a pretty straightforward calculation. We have our close times our percentage divided by how many ticks we have. Now let me explain this, and I can actually kind of show you through some of the math here. Our take profit percentage is 30%. Now we have to divide that by 100 so we get the actual value we need to multiply the close by. So if it's 30% and we have the number 30, we have to divide it by 100. We now have 0.3. Okay, if the price were, say, $10,000 and that was the close, we would multiply that by 0.3, which is $3,000. Now, if we were to just use 3,000 ticks, now remember the ticks are 0.01 on this chart, so if we did 3,000 of those, that would only be $30 up for our take profit, and that's not what we want. We want 30% based on the example, which would be 3,000. So we divide that 3,000 by the minimum tick size, by that 0.01, and now it's, I believe, 300,000. So now it'll actually place the profit, the take profit up $3,000 at $13,000. And similarly, we do the same exact calculation for the loss target. We just use the stop loss percentage instead in that calculation. So there you have it. That's really all there is to it. I'm trying to think if there's really anything else to do here with the stop loss and take profit, and I really don't think there is in this video. You can see where we entered and where we exit. If you have an idea of something you'd like to see added to this, please leave a comment. If you like the video, definitely please like it. If you like videos like this, please subscribe. I'm always coming out with new ones related to development, trading, cryptocurrency, those sorts of things. So I would really appreciate that if you would. But stay tuned to the next video, and have a great day. Hey, this is David for BigBits, and in this video we're going to continue our TradingView PineScript development series that we started in the last video, where we began covering our basic indicator, which was just a simple moving average that we plotted onto the chart. We just had one simple moving average on the chart. Now, in our second video, we're going to add 3 moving averages. But before we get started, I just wanted to show you, I'm not sure if I showed you this in the last video or not, but when you're working on your scripts, and I showed you how to start working on them. I'm not sure if I showed you how to have them show up on your screen, but make sure you save them when you're working on them so you don't lose any changes. But then also, just as important, if you want to see what you're doing, hit add to chart. It's going to add the indicator to the chart, and then as you make saves, it'll update the chart with the changes that you've made once you save those changes. So in the last video we went over pretty much all the basics to the scripting for an indicator, and in this one we're going to be adding in 2 more indicators. And honestly, I know it's not that difficult if you're a developer, but for those of you following along who don't know what's going on, it's good that we take this kind of slow. The next video there's going to be a lot more changes, which means the next video is going to be a lot longer, but for now we're still trying to get a grip on what's going on. So let's take a look here. In the last video we only had 1 input, and that was for our only moving average for the period, the look back period on that moving average. Now in this one we have 3 moving averages, so obviously we will need 3 inputs. That way users can configure each moving average, and to be able to configure it you need to go up to the settings in your script, and you can toggle that data, or you can type in other ones, and it'll affect the indicator. And that's because, as you can see, we are doing the indicator calculation based on that input. So in this particular case, I changed our simple moving average to an exponential moving average, and this is another built-in moving average part of TradingView, and it'll tell you here when you hover over it, it'll give you some pretty detailed tooltips over what's going on with these built-in functions. And if you want, you can actually hold down the control key and click these functions, and it should come up with this reference. So even though I'm giving you the links here, you can also just control click some of these things now, which is great. I didn't know about that the other day, and it's really detailed and can give you quite a bit of information. Some of these things don't make sense, so you're probably still going to have to Google some things that aren't super clear, but it's really handy if you kind of have an idea of what you're doing. So in the last video, we only had the one moving average. It was a simple moving average, and it had the exact same code other than the E was an S. So, I mean, it's really easy to change what indicator you're using. If you're just in here coding it, say we want to actually change this to a weighted moving average, that's all you would have to do to change the moving average there. I'm going to turn that back to an exponential moving average. And you can see we did the same thing for the other indicators. Now we had different variables, of course, because these are all different indicators. We need a different period for each one. So we also need a different value spit out for each one. So you can see on this one bar where these three dots are, this is the MA3 value, this is the MA2 value, and this is the MA1 value. This one's calculated at a 50 period, this one's at 100, and this one's at 200 by default. So when we do these built-in moving average calculations, it's going to spit out the current value, which is where we're at right now. These kind of operate in succession from beginning to end. This is time series data, so you can see the calculations are performed one after the other all the way through the script, or all the way through the data, I should say, until we get to here, and you can see the most recent version of these. And there's actually these are actually kind of an array, and if we wanted to plot the previous value, say we wanted to kind of offset it, we could spit in the value of the array there and look at the previous version. But we're not doing anything like that now. We're just kind of doing a standard indicator, just showing our exponential moving averages, and we can see on the chart where they cross and get an idea of where maybe some support or resistance might be based on these moving averages. And then beyond that, the only thing left in the video is plotting the other moving averages. Now, I said this video is really simple. It really is. The plots are probably the simplest thing you can do here. You're passing in the data that you want to plot. So I told you this time series. So over time, it'll continue to plot and connect them with this. And you can see we used a green color for the 50 period, and the line width was 2. Now, I changed the line width and color for each one so that they would stand out more from one another. But that's all there is to having three indicators on a single chart and changing some of this other information around and having an input for each particular indicator so that we can change and configure this how we need to. Now, this is just getting started. There's obviously a lot of things that we can change and configure about this. And in the next video, we're actually going to take a look at making it to where we can configure the lines to select which moving average we want. You can see the scripting tutorial 3, I renamed this into triple many moving averages, because in the next video we're going to start looking at how we can allow the user to select different moving averages for each of these lines. So instead of this having to be a fixed value where it's always an exponential moving average, when they come in to edit the indicator settings, not only will they be able to choose the period, they'll also be able to choose the moving average type. So they can choose simple moving average, exponential moving average, weighted moving averages. They'll get to choose through a number of moving averages that they can just quickly change in the settings here for the indicator. But that's all for this video. Like I said, this one was going to be pretty quick. If you're curious, you can always check out my TradingView profile, which I'm going to try to keep up to date. I've been posting ideas and scripts left and right. So that's in the description of the video. You can also find the source code for these there. I'm also going to be posting these in my GitHub account eventually. They aren't there as of the time of making this video, but they will be shortly. And just follow and like on YouTube here, and I'll see you in the next video. We got a lot of great stuff coming up. In fact, I'll give you a sneak peek. I almost forgot. So let's load one of these new ones. Let's get rid of this one. Let's load one of the new ones. We'll go way ahead. You can see we've got quite a lot here. There's a lot of input now, and it's also spitting out a lot of stuff too. These are the outputs. You can see it's actually forecasting data past the end. So there's a lot of things we're going to go into, including crossovers. So stay tuned. There's a lot of great things coming, and I appreciate you watching. Hey, this is David for BigBits, and in this video we're going to talk about our 6th scripting tutorial, and that is for forecasting. Now, if you're curious what forecasting is, just look at the chart. We have our moving averages that we've been working on, but we also have some dots off to the side, and those dots are actually forecasted values for where the moving average is going to be. Now, we've done a lot of work in this particular script from the last one, so there's a lot to cover. Some of it is, intermediate level programming stuff that isn't going to be super easy, but I'm covering the source code for you, and the source code is completely open on TradingView, so even if you don't fully understand it, you'll have access to it and can play around with it to manipulate it however you want. So let's go ahead and get started. There's a couple of small things I wanted to cover really quick before we get into the meat of the video, and that is we have added some minimum values to our moving average periods, and we've also added a step size. Now, what the step is just the increment between points in the setting, and for example, the MA1, when we tick this up, it goes up by 1, and that's the step size, and it also goes down by 1 every time you tick it. Now, for example, if you set the step size to something else, let's say 0.25, in this setting down here, you can see that it goes down by 0.25 and it goes up by 0.25. That's what the step size is. That's really all it takes care of. Now, there was one other thing, and that is the plots for our moving averages. We forgot to give them a title, so I've given them a title, and now when you go to edit, you can see that our plots actually have a title for MA1, MA2, and MA3. So when you edit the styles for the moving averages, you'll know which one you're editing it for. Now, let's get on to forecasting. Now, what is forecasting? It's pretty difficult concept for some people, but honestly, it's not that difficult. All we're doing is just removing the oldest candles out of a moving average calculation and replacing them with a new candle of the current price. Now, there are ways we can change that, but for now, we're going to cover some basic forecasting, which is, let's say we wanted to go 20 candles back, and this is the 20th candle, and we want to forecast one candle ahead. So what we have to do is we have to remove this candle from our calculation, and then we have to work with the 19 candles, get the moving average of those 19 candles, and then we have to get the price now, and then we have to weight this moving average from those 19 candles 19 times, and then we have our individually weighted current price as a new candle as the future forecasted candle, and then we get our moving average with the weighted value of the moving average. I know this is starting to sound a little complex. We have our 19 candle average from where we removed the oldest candle, and we have the current price, and we weight those two together in a simple moving average of just 2 items in this case, and we get our forecasted value. Now, when you're forecasting 2 or 3 candles ahead, you're moving the 2 oldest candles or the 3 oldest or however many candles you're forecasting ahead. You take those off of the back of your look back period, and then you just weight the current price in that many times. So if you removed 2 candles, you would weight in the current price twice versus the 18 candle moving average. Yes, I know it's very confusing, and I know I've said it's confusing. It's not a simple topic for a lot of people, but if you're following along this far, you probably have a pretty good idea of what I'm saying, so I hope you understand. Now, how are we going to make this work with our old version of code? Because what we were doing was we would calculate the moving averages based on an if statement. What type of moving average were we using? And then it would spit out and assign that particular moving average a value. Well, what we had to do is we had to create a function to where we could pass in the data that we wanted, and it would spit out the moving average value based on that variable data. Now, if you're a programmer, you're probably familiar with functions, and that's what we're doing. We're replacing those if statements that we repeated several times with a function. Now, the function in this case, I called it MA, and what it does is it does that one if statement, but it uses that variable data to spit out one value. That way, we can assign those moving averages to the result of this function. Now, this works similar to our if statements. Whatever the last line was that resulted in a value in your function will be the value of the moving average. So if you wanted to assign MA1 to a particular call of this function, you would say MA1 equals, and then you would plug in your MA information in this function. It would be MA1 equals MA parentheses MA1 type, comma MA1 source, comma MA1 period, close parentheses. And that's all you would have to do. Now, the reason we had to do this, and we've already discussed these calculations, the reason we had to do this was because of the forecasting. Now, it's also cleaner code too, but for the forecasting, we had to change the period fairly often because we were removing the oldest candles from these calculations. This is how we did that. We used the period and we subtracted the forecasted amount ahead. Now, ideally, this would be done with the for loop, and we wouldn't have to do this over and over, and we would only have maybe 4 or 5 lines of code total as opposed to 10. Now, that's just a limitation with PineScript, is that it wouldn't let me plot within the loop. I think that's probably just protection on their end or something to keep you from plotting too much on a single chart if you had an error in your logic. Now, what I would have done in another language is I would have made a for loop with a variable starting at 1, and I would have incremented it up and done this calculation, but replaced the number 1 or whatever the number was here, our forecasted amount ahead, with that variable. So if you're more familiar with programming, that's probably a better way to do it. And if they change PineScript in the future to allow those sort of actions, then I'll go back and I'll change it. Or maybe you know and you're aware of a way to do that now, let me know and I'll change it now. I'd appreciate that. But what we're doing is we're setting our forecasted value here to that 19 period look back when we're talking about a 20 period moving average. If the MA1 was 20 period, now we're subtracting 1 from it, and that essentially removes the last candle, the oldest candle from that moving average. Then we have to weight this one moving average value with that period minus our forecast value. That weights it, and then we have to add in our current price, or our current source I should say, and multiply that by the weight of our forecast. So if we're looking 2 candles ahead here, the value would be the price times 2. Now here it's actually taking this and it's multiplying it by, what, 19 if we're doing a 19 period look back. So it gets the moving average and multiplies it by 19, some really big number. And then we add on that 1 into it. So now we essentially have the sum or cumulative value of what our period would be, and we could divide that by the number in our period, and we can calculate what our forecasted value is. Now, this works pretty well. Let's look at the chart. This is a weekly chart on Bitcoin, and you can see that it forecasts the price to continue moving up if price stays the same on the 50-week. But you can see the 100-week is actually trending down even if the price were to stay flat here. Now, before I get too far ahead, you can already see that it looks like it might predict an intersection in the future, which might be a signal that you should buy or sell depending on what the market says. But let's go ahead and look at these functions real quick. I have this documented in the code. This is just some documentation that shows you how the functions work, how multi-line functions work, etc. There's plenty of information here. You can actually plot a value that is calculated from a function in the plot line. So there's plenty you can do. I definitely recommend you check out the documentation if you're going to work with it for yourself with something else. But for what we've done here, there's probably plenty for your moving averages you can figure out. Now, that was actually quite a lot. And you can see this is the MA1 forecast here. And I had to repeat that code for the MA2 and the MA3. Now, like I said, ideally we would have loops that would take care of this for us, but it's okay. We can repeat this code over and over. It would have been very simple. There's not a whole lot of extra code this way since we only have 5 forecasted values. If we had 20, then the 3 or 4 lines of code that a loop would have used would have saved us a lot. But since we only have 4 or 5, it's not a huge deal right now, honestly. Now, what is a bias? And with the indicator that I'm working at, what we're going to be talking about is a bullish, bearish, or neutral bias. And neutral is probably the most common way to do a forecast for most people when they're thinking about it is you just take the current price and you move it out. Now, other ways I've seen to do it is to use the slope of the moving average and kind of print that on out further and use the calculated value based on the slope of the moving average in the future as that value to see where the moving average would be. I'm not really sure why that would be a better way than any other way. So what I've done is I've actually created a way to where you can manage the bias in a bullish or a bearish factor so that you can see the potential impacts on the forecasting. So let's pull this up and I'll show you. Let's go back to our inputs and we have bias here. This is a neutral bias right now. So this is as if the price were to stay flat for the next 5 candles. You see the forecast go slightly down here, slightly up here. Let's try changing it to a bullish bias. You can see they both kind of moved up. The 100 still kind of moves down. It looks like it might even go up first and then move down. And then the 50 just kind of continues to move up a little bit more rapid pace. Now, what's happening is instead of using the price for the next 5 candles or calculating the slope of this line and pushing it out 5 candles and calculating where it would be, what we're doing is we're actually getting the average true range, which is kind of a measure of volatility for the candles in the past. We're getting the average true range of a 14-period look back, and we're applying that forecast in a bullish or bearish way to calculate where the price would go. Because honestly, if you look back at Bitcoin's history or pretty much anything, the price doesn't stay flat for very long. There's usually some sort of volatility, and if there is volatility, it's usually bullish or bearish. Now, it's not always bullish, and it's not always bearish. So to handle that, I done something called what I call a magnitude. And essentially, with a magnitude of 1, it takes the average true range of the last 14 candles and predicts the price to move up each candle by that average true range amount. Now, if it were bearish, it would move down by that average true range amount by 1 if the magnitude was 1. Now, essentially, all the magnitude does is it multiplies this average true range by a certain number so that you can manipulate how big of an effect you think is going to happen. So, for example, while price was consolidating here and you knew there was going to be a big breakout and you thought it was going to be bearish, you could have set your bias to bearish and changed your magnitude much higher, and you can see the effect this is having on the forecast. The higher the magnitude, the more it's pushing it down. So if you think the price is going to go down like quite substantially, then you can see the effect this would have on the moving averages. Now, I wouldn't recommend a number that high, most likely, but it might be a good idea to use 0.5 here, because essentially this is a bullish direction, and it's a good way to account for some of the candles being red, because if you just multiply it by 1, you're essentially saying the average true range 14 times in a row, and that's not really realistic if you were to do that candle by candle. But it is a way for you to be able to manipulate it. Now, how do we do this? I've already kind of mentioned an average true range and multiplying that. And really, that's all it is. So let's go through and look at how we calculate the bias. Now, the bias is used for all of the different forecasts because it is predicting essentially the next candle, where that price is going to be from where we were. Now, how do we do that? We made a function for bias to calculate the bias. Now, if your forecast bias is neutral, it returns 0. Okay? We're not going to add anything additional to the candle. So what's happening is it's actually using the base price here, and it's adding on top of that the average true range. But since we're neutral here, we're not adding anything on top of it. Now, if it were bullish, as I mentioned, it would use the average true range of the bias period, which is 14 by default, which is a pretty standard average true range, and then you multiply that by your magnitude. So your next candle predicted out, the price would be based on the average true range on top of the current price. Okay? So it would add that average true range up, and this is what it would expect for the next price, and it would continue doing that for each candle. Now, if you were to do a bearish bias, you'll see that it does the exact same thing as the bullish, except it multiplies it by -1. So it'll take your current price and it will add a negative number, which just subtracts it to where it'll think your forecasted price is going to be based on this value on this candle, which is lower. So hopefully this all makes sense. And what we do in order to accommodate that for each length of the forecast is we just add that on there as many times as we're forecasting out. And this calculation works pretty well. So you can find this script on my profile, and this is the 6th one, and by the time you look at this, there's probably going to be more. I've already started working on a 7th, which has some new stuff in it we'll talk about in the next video. But you can get this and you can look at the source for yourself and play around with it. But more importantly, if you're interested in seeing where something might cross over based on these changes, you can play around with the settings yourself. Change the magnitude, change the bias period for the ATR, change whether it's bullish, bearish, or neutral. You know, there's plenty of things you can do to impact the forecasting here to get it to work to how you think the market is going to move. Like I said, if you think it's going to be bearish, set it to bearish. If you think it's going to be really bearish, change the magnitude to a higher number. And you can see the impacts all this is going to have on it, which I think is pretty cool. I haven't seen this on an indicator before, and I guarantee you in the next video we're going to be doing something really neat, and that is changing the resolution for each of these moving averages. So you could be looking at a weekly chart, or let's say, for example, we're looking at the daily chart. We can plot the weekly moving average on the daily chart so that you can see where a weekly moving average, such as the 200 here, which proved support back here, you can see this on a daily chart, and maybe that's helpful for spotting support or resistance when you're looking in at much lower time frames, much lower resolution. So thank you for watching. That is the video for today. Please hit like if you like the video. I know there was a lot to cover and there's a lot more going on. And please subscribe if you like this series. We're doing all kinds of videos about trading and automation, indicators, things like that. We're doing all kinds of stuff. And if you got any ideas, please let me know. I love to look into doing the ideas that people submit. We're going to be working on a lot of projects related to cryptocurrency and such on this channel, so please subscribe. That's all for today, and I look forward to you watching the next one. Hey, this is David for BigBits, and in this video we're going to take a look at the fill feature on TradingView with the Pine script. And essentially what we're going to be